Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. Welcome to Marathon of CA Inter Jan 2026, including all the latest amendments related for your Jan 26 exams. And this is part 1 and part 2 will be released later on. So in part 1, what are the chapters I'm covering? I'm covering chapter supply, charge, place of supply, time of supply, value of supply, and very important one, input tax credit also. Okay, these things are covered in this particular marathon. And before watching the marathon, just wait for 2 minutes here. So in this, as I told already, Jan 26 amendments are covered. Notes for all these things are available in our Telegram channel link is given below in the description. And for this I have used my my GST book actually for this marathon. If you want to purchase this book, the purchase link is also given in the description. You can just check that if you want to purchase. Otherwise, whatever the material you are using, that is more than sufficient. And a separate video for amendments is also posted in the YouTube channel, so that also you can check. Nothing but September 25 amendments, Jan 26 amendments are same to same, so nothing to worry. So the same video you can use. And for doubts, you can approach me in WhatsApp only. So in this particular number 9600422722 and Instagram CA Vishnuvardhan. So these are the ways how you can ask your CA Inter GST related doubts to me. So this is the one. And next, make sure you are staying tuned to this particular channel, because we'll be coming up with RTP Jan 2026 solved, MTP 1 and 2 solved, and of course quick revision video for your amendments just before the exam to cover them just like that in 5-10 minutes. A quick revision video also I'll make, so that will also be helpful for you. And of course there will be so much of content which I have not discussed here, which I'll be uploading in the channel. So stay tuned, and wishing you all the very best for your preparation. Stay strong and enjoy your preparation. That is what I tell every time. So yes, the marathon is all yours. Thank you. As you all know, section 7 of CGST Act deals with supply. In supply, first of all, if you see, supply has been defined in section 7 subsection 1, and this has been defined in clause A, AA, B and C. So whatever the transaction happening, if that is falling within clause A, clause AA, clause B and clause C, then only we can call it as supply. Otherwise it is not a supply, and if it is not a supply, you cannot charge GST on that. That is what the whole idea. So for a transaction to charge GST or not, how do we decide? We decide only when that particular transaction is supply. So whether that particular transaction is supply or not, where it is defined in section 7 subsection 1 of CGST Act 2017. So that is what we are going to see here. Now, first of all, before going into that section 7 subsection 1 clause A, section 7 subsection 1 clause A says, one second, clause A says, all forms of supply of goods or services or both for consideration done in the course or furtherance of business is what called as supply. That means for a transaction to be called as supply, first of all there should be either goods or services or both, and next one, it should be done in the course or furtherance of business, and finally there should be consideration. So to understand this particular supply, see, we should be clear with 5 important definitions: goods, service, consideration, person and business. If you are clear with these 5 definitions, then the section 7 subsection 1 clause A, which is covering majority of the transactions, will be done. So now, what are the meanings of these definitions? Let us understand one by one. As you all know, what do you mean by goods? Goods means nothing but every kind of mobile property, but other than money and securities. That means if you are dealing with money and if you are dealing with securities, shares, debentures, bonds, all that stuff, it is not goods. And also services definition is also excluding goods, money and securities. That means simple, money and securities are not at all goods, not at all service. So if you are dealing with money or if you are dealing with securities, no GST. That means I give you 1000 rupees and you give me 1000 rupees back, not goods, not service. Clear? So what is mean by goods? Goods means every kind of mobile property other than money and securities. Okay, we have understood they are not goods. But includes what? Includes even actionable claims, growing crops, grass and things attached to or forming part of land which are agreed to be severed. This is not served, I'm sorry, it is severed. That means separated from the land under the contract of supply. Please understand here, the interesting point is actionable claim. About that we will discuss later on. Just keep in mind. So we have understood goods means nothing but every kind of mobile property other than money and securities, including growing crops, grass, all these things which you are agreeing to separate. Even though it is attached to land, you are agreeing to separate it from the land, then it is still we call as goods. So that is goods definition. Next, service definition. If you see service definition says service means anything, but other than goods, money and securities. That means if it is already somewhere classifiable under goods definition, don't call it as service. And money and securities, not goods, not services also, so no GST, simple. And here one interesting point is activities includes here somebody, you're allowing somebody to use your money, or you are converting money from one form to another form for which a separate consideration is charged, that is also service. That means, for example, bank is giving loans and they are charging interest, or you're going to any forex dealer giving dollars and taking rupees, for which they are charging a separate consideration. So all these things are what? Service. If I give you 1 lakh and take 1 lakh, it is not a service. But if I give you 1 lakh and charge 1% interest, that 1% interest becomes service. Clear? So that is what? Service definition. Next interesting thing, consideration. Consideration here in GST, consideration can be in cash, consideration can be in cash, or it can be in kind, or also it can be, that means, for example, I take lectures for you, you pay me 10,000 rupees, or I take lectures for you, you give me a BMW car. Both are nothing but what? Consideration. So cash or kind. Next one, sir, agreeing to do something or agreeing not to do something. For example, I'm going to a barber and he is doing haircut daily, regularly, not daily, sorry, regularly. Okay, so when he is doing a regular haircut to me, once he asked me to file his income tax return and I'm filing his income tax return. When I'm asking him the fees, he said, sir, for next 1 year, I will do haircut for you, sir, whenever you come to the salon. That means for the services, whatever I did, filing his income tax return, he is doing in return what? Haircut to me. So agreeing to do something or agreeing not to do something, these are also what? Consideration. That means consideration in simple terms, it can be cash or kind, or it can be somebody agreeing to do something for you or agreeing not to do something for you. So exchange of goods and services, simple. That is also what? Consideration for whatever I am doing. Next, person definition. Person definition, if you see, simple, whatever the definition has been given in income tax, same definition plus central government and state government will give you person definition. Okay, now see, let us go with this definitions and we'll see some set of examples and close this transaction. Next, very important definition, business. See, in GST, business definition is so widely defined. Whatever they do, whatever you do, that will fall under business. You do normal trading, profession, manufacture, occasion, adventure, venture, or any, see, the law says any other similar activity. That means if they have forgot any wording here, the lawmakers, if you are good in Oxford dictionary, all that, take any word which is of similar nature. Very important point is whether or not it is for pecuniary benefit. That means whether there is intention to make profit or not, it doesn't matter, sir, it is business. So generally, if you have intention to make profit only, we feel like business, otherwise charity. No, it is not like that. Even charitable institutions, we feel like they are doing business. Okay, that one. And irrespective, anything whatever is incidental for that, whatever is incidental for the main activities, that is also called business. And irrespective of whatever the volume you are doing, how regularly you are doing, how frequently you are doing, all these things, whatever you are doing, that is called business. And important thing here is the government undertaking the transactions which are assigned to them as a public authority, that is also what? Business. So business definition is so properly defined, except to what you do in your personal capacity. For example, let us assume here CA Ramesh, employee of Google, selling his personally used BMW car to CA Vishnuvardhan for 25 lakhs. Is this supply? No, this cannot be called as supply because he is selling this car, he is supplying this in his personal capacity. This is not business for him. This is not in the course of furtherance of business. But please understand, a private limited company, let us assume Vivar Private Limited, is disposing their old used car, that will be supply. So disposal of old assets is also part and parcel of business. That is also a business transaction. So it will attract GST. Are you understanding the point? But here this person has used this car for his personal purpose, now disposing that car. So it is not coming under business definition. Okay. Now, if he does the same thing, if he is selling it to a second-hand car dealer, Cars24 Private Limited, then also you should see whether it is done in the course of furtherance of business or not from the supplier point of view, not from the recipient point of view. So here, same story, the person is selling car to me or the person is selling the used car to Cars24 Private Limited, a second-hand car dealer, still it is not a supply because supply is not done in the course of furtherance of business. So the only thing which will escape this business concept is that whatever you do in the personal capacity. Otherwise, the business definition is so beautifully defined, whatever you do will come under business definition. Okay, so that is the case. Suppose if now the Cars24 Private Limited is selling that car to me, then for them it is obviously business. So it is supply. Okay, so business definition, I repeat, it is so widely defined. Even the charitable activities, whatever you are doing, you cannot say, sir, I don't have intention to make profit. For example, there is an yoga camp, yoga seminar going on, 100 rupees, that is supply done in the course of furtherance of business. You cannot say, sir, I am recovering the expenses here, I am not having any intention to pay or intention to earn profit. That way you cannot say, because we don't care about your intention whether you want to make profit or not. Okay, that is what the story. Fine. So we are clear with the definitions: goods, service, consideration, person, and business. Let us see some examples quickly. Now, first example, if you see, Hulk is selling to Doctor Strange the Stark Towers for 100 crores. Is it supply or not? Sir, land, immovable property. It is not a good, it is not a service, so not at all a supply. Here, SOG, SOS means supply of goods, supply of service. It is not supply of good, it is not supply of service. Now, for example, if you see, Mr. Ranbir is transferring 1 lakh equity shares of Animal Private Limited to Rashmika for 25 lakh rupees. Is it supply or not? Because securities are neither good nor service, so it is not at all a supply. But Miss Joya, a stockbroker, she is facilitating the transaction between Ranbir and Rashmika. Further, she is charging a consideration, a commission of 20,000 rupees. Is it supply? Here she is facilitating the transaction of arranging the securities. She is not supplying securities, she is just facilitating the transaction. Okay, that is very much supply of service. Okay, that is example 2 for you. Next, you can just go through the small examples. Pushparaj selling the sandalwood trees, yes, supply of goods, because they are attached to land, but you can separate them from the land. Next, Udta Punjab National Bank transferring cash of 250 crores to Chennai branch from Mumbai head office. It is merely money, not a supply. Next, Udta Punjab National Bank giving you loan to Ajay Malia for 9.75% interest per annum, 500 crores. So as I already told you, when extra consideration is charged for allowing somebody to use your money or converting money, for that you are charging extra consideration, that is very much what? Supply. So this is supply of service. Yes, supply of service. Same way, one person is converting money from dollars to rupees, where the forex dealer is charging commission or the bank is charging commission. Supply of service. Okay. Next, mm, so Vishnu is auditing the company. Supply of service. Next, MSD is endorsing a brand occasion. Yes, it is not business, but it is occasion. Occasion is nothing but which you don't undertake regularly, which is not your regular profession or trade. Next, Isha Foundation conducting a winter yoga camp for 100 rupees per person. There is no profit intention, but still we call it as business. So if all other conditions like good, service, consideration, everything is satisfied, yes, it will be treated as supply. Now see, for example, JK Shah classes providing coaching to students. Main activity is what? Providing students. We are also providing books or materials for students, or conducting test series. All these things are incidental for us, but still that is business for us. So main activity is coaching, incidental activity is providing test series or providing books, etc., etc., for example. So we cannot say this is nothing but incidental to us, this is not our main activity, so this is also business. Next, Greater Chennai Corporation, local authority providing access to local park to general public. So providing access to a particular place is a service, and that is also treated as business. There is a consideration of 20 rupees per ticket, and this is provided by local authority, which is nothing but a person. So all the conditions are satisfied. There is service in the course of furtherance of business for consideration by a person. So it is happily what? Supply. So guys, please understand here, for a transaction to be called as supply, first thing what we have to see, there should be goods or services, and it should be done for consideration in the course or furtherance of business. If all these conditions are satisfied, then only we can call it as supply, then only we can call it as supply. See, for example, here CA Stark has been appointed as an internal auditor of Jurassic Park Private Limited. Sir, he is holding an office. Holding an office and providing your service is also what? Business. So that is as per the business definition. So there is also business. Tamil Nadu state government providing some uh, security for your fourth wedding. Let us assume they are charging 50,000 rupees consideration. So that is also what? Business. What I am trying to tell is, even government doing their duty as a public authority is also business as per the definition. Okay, as I told you, except in your personal capacity, whatever you do, that is business. Okay. Suppose, as I told you, Vivar Private Limited is disposing the old car of the company to Mr. Leo. Is it supply? Of course supply, because disposing the old assets is nothing but incidental to business activity. So incidental things is also what we call as business, so that is supply. Okay, so now please understand here. For example, you're going to Taj Hotel and having a teacup of tea or coffee. Will they charge GST? Yes. You're going to a roadside tea stall. Same tea, same tea powder also. Only difference will be the way they wash the vessels. That might be different. Apart from that, everything, the taste, everything is same to same. The color, the taste, the flavor, the aroma, everything is same. So why they are not charging GST? The reason is, sir, the roadside tea stall is not a taxable person. So supply should be made by the taxable person. That means there should be goods, there should be service or business should be there, consideration should be there, everything. But the supplier, the person who is making supply, should be a taxable person. So what do you mean by taxable person? Who is already registered under GST or who is liable for registration under section 22 or 24 is called as a taxable person. So always remember, when you are taking same good, in one place they are charging GST, another place they are not charging GST, means the reason will be the other person is not a taxable person. If he is a taxable person, then he has the responsibility to collect and pay tax to the government. So that is what the concept. Okay, from now remember, it is roadside tea stall and Taj Hotel. Whenever in further references I use roadside tea stall, you are drinking tea, means it means you are taking the supply from a non-taxable person. You are drinking tea in a Taj Hotel, means you are taking the supply from taxable person. Okay, so that way you remember in our further discussions also. So that is what supply all about. So 7.1a, if you see 7.1a, we have discussed. What is 7.1a? We have understood that for the purpose of 7.1a, we need there should be at least goods or services or both. There should be consideration and it should be done in the course of furtherance of business. Okay, now coming to the another point here, the consideration. When we are talking about consideration, normally there are some deposits taken by suppliers. Whether the deposits are treated as consideration or not, it purely depends upon the intention of the supplier. For example, you are going to a hostel, you're going to stay there, and they took some advance from you, 2 months deposit something. Is it consideration or not? See, first of all, that deposit, whatever they have taken, they are going to refund it to you when you are vacating the hostel. That means the supplier never intended to take it as a consideration. He just took it as a security. He will return it to you. Then it is not a consideration. No, sir, he has taken the deposit and he will be adjusting that in monthly rentals. That means his intention is to treat that deposit as a consideration. That means if it is refundable, then he is not treating it as consideration, so it is not a consideration. If it is non-refundable, then he is adjusting it for consideration, then it is treated as consideration. Okay, so that is what the point. So deposits purely depends upon the intention of the supplier. Clear? Right. So with this, we are done with 7.1a fully. Here and there some small clarifications are there. Let us see that. So here, two clarifications. One is with respect to, there are artists. What artists are doing, sir? Artists are drawing the paintings and they are having their paintings in their particular house or office. From this house or office, they are sending these paintings to the art gallery or exhibition. Somewhere exhibitions are happening, you are conducting an art exhibition. I am an artist, I am drawing a painting and I am sending that painting to you. I am sending that painting to you to exhibit in that exhibition. Somebody comes and buys it. If they likes, okay, let it get sold. You take your commission and pay me money. That is what our arrangement. So now I am sending the artwork from my office or residence to your exhibition location. Sending this painting from my place to your place, is it a supply? Oh, it can be supply, sir. There should be consideration. No, there is no consideration here. So we cannot call it as supply. Yes, if that painting gets sold from your art exhibition, then it is supply. There is no doubt about that. The only doubt is, sir, from my location, from the residence of the artist or office of the artist, the paintings are sent to the art galleries exhibition. Whether that will be called as supply means no, because you are just sending it. There is no consideration. So that is first clarification. The another clarification here is with respect to, you will be visiting various religious premises or charitable organizations, etc., etc. In those premises, you would have come across there are so many donations, etc., or there will be, like, for example, you see an AC. On the top of the AC, they would have put up a sticker like donated by the great, the honorable chartered accountant Vishnuvardhan, like that. Imagine if they have put the sticker. I gave the AC for what purpose? For advertising my brand name, advertising my office name. For example, you see a water purifier in any particular temple or etc. place, sir, they would have mentioned donated by so and so company. So is that temple or etc. anybody taking that donation is to advertise that particular person name? Here the main criteria is, please understand, what is the intention in giving this donation is what matters. For example, you have passed your CA exam, and while studying for CA exams or when you are waiting for the results, you went to ISKCON temple and prayed to God, Swami, this time if I pass, I will donate a water purifier to your ISKCON temple. So you have passed and you are donating. and after donating the ISKCON temple, people are putting up the stickering on the water purifier, all that stuff, or you are putting up your stickering and giving like donated by CA so and so, or let us assume donated by Vishnuvardhan and associates, like that you are giving the water purifier with the name. Here please understand, they are displaying the name or you are printing the name, all that stuff. See, that is only to show that gratitude. For example, ISKCON temples are putting donated by Vishnuvardhan. Why they are putting my name? Why they are putting my company name? All that stuff purely to show their gratitude. To show their gratitude. So when that is done, that printing the names, etc., etc., to express the gratitude towards the donor, then it is not a supply, because there is no direct consideration which is flowing. I gave the water purifier, I gave the donation something. What is that in return I am getting? There is no direct nexus, there is no direct consideration here, so it is not a supply. But you imagine during this Sri Krishna Janmashtami festival, I know that so many students will go to temple, all that stuff. So I'm going to ISKCON temple board and telling, sir, this time during ISKCON Sri Krishna Janmashtami, I will donate 10 lakh rupees for ISKCON temple. They said like, thank you Swami. I said, I don't want thanks, but I want outside the temple a 10 feet banner of me in front and background Lord Sri Krishna. Okay, and there should be a tagline there, for all your CA Inter and final IDT, contact Mr. GST CA Vishnuvardhan, like that we are putting the advertisement. That should be the thing, then only I will give you donation 10 lakhs, I told. Now is it a supply or not? Yes, that is supply. Please understand, when I am giving donation, the name is not important here, sir. I am giving donation, fine, but that name is not important here. We should understand the purpose. So my donation has a direct nexus, direct consideration of what? Advertising my brand name or advertising my name. So that is obviously treated as supply. Okay, so that is what with respect to GST on display of name of donors in the premises of the charitable organization. So the next one is section 7 subsection 1 clause AA, which is having a non-obstante clause. This clause has been introduced just to override a Supreme Court judgment where they are trying to say, now if there is any body, organization, maybe association of persons, body of individuals, even a partnership firm, among themselves, if they are doing anything, see, there is no separate legal entity concept itself there. So if there is a unregistered AOP, there is no separate legal entity concept. So within that, whatever the members are there, the members and the entity as a whole is nothing but one and the same. So now one person cannot perform supply to himself. So to override that judgment given in one of the case laws by Honorable Supreme Court, now what we are doing, we are countering that by giving this particular clause AA, saying that even though there are no two different persons, any activities between the members or that particular entity are treated as supply other than individuals. For individuals, this situation itself will never come. So simple, sir, when the transactions are happening between any unincorporated body or association and its members other than individual, of course, as I told, individual situations will not come here, shall be treated as supply. Sir, there are no two separate persons. No, sir, that concept itself will not apply here, because there is a deeming provision here saying that they are deemed to be two separate persons. Doctrine of mutuality, all that stuff doesn't work here, or any Supreme Court judgment or court tribunal, any judgment, that will not be valid here. So that is what they have tried to bring here. So that is what State of West Bengal versus Calcutta Club Limited, in that the judgment has been delivered by Honorable Supreme Court. To override the judgment, they brought into this section 7 subsection 1 clause AA. So what is clause AA? Clause AA is nothing but, sir, unincorporated body or association providing to the members or the members to the unincorporated body will be treated as supply even though there are no two separate persons. That is what 7.1 AA. Now let's move on to 7.1B. 7.1B, now again the easy one. See, understand, when we are discussing 7.1A, 7.1A actually needs business and consideration, very important things. So A needs B and C, but B says, I am B, I don't need B. That means in clause B there is an exception to business. Same way clause C says, I am C, I don't want C. That means this is an exception to consideration. What I am trying to tell here you is, remember the clauses like this. 7.1A needs, obviously everywhere goods or services should be there, provided by a person should be there. But in 7.1A the key points are business and consideration. But in clause B, B for business is not required. Clause C, C for consideration, not required. Okay. What clause B says? Okay. Clause B says importation of services for consideration, whether or not in the course or furtherance of business. That means, see, for example, now Miss Ivanka Trump is providing services to Mr. Sallu Khan regarding how to maintain the bachelorship for a consideration of 1 lakh rupees. This is for Sallu Khan personal services. Yes. But when importation of service is happening, whether there is business element is there or not, doesn't matter. Sir, it is supply if there is consideration. Same case, see for example, Donald Trump is providing advisory services to Mr. SRK regarding his film production business, Red Chillies Entertainments, for 10 lakh US dollars. Is it supply or not? As I already told you, if it is importation of service, if there is consideration, blindly you can close your eyes and tell that is supply. So importation of service for consideration, straight away supply. Why I am importing, that doesn't matter. Why I am importing, that doesn't matter. And one more thing I just wanted to tell you, when you are talking about importation, you are talking about the recipient. You're talking about the recipient. So whatever you see the condition should be seen from recipient point of view. Okay, so keep this in mind always. Okay, now coming to the point, as I told you, sir, importation of service for consideration whether or not in the course of furtherance of business is a supply as per 7(1)(b). Sir, now what about goods, sir? What about goods? The goods, when you are importing or exporting, they are covered under customs law. Only services, import and export, are covered under GST. So importation of service, even though it is without business purpose, it will be treated as supply as per 7(1)(b). So that is what the flowchart given here. So hope it is clear. So this is the only case where you see exception to business. Okay, so with this we are done with 7(1)(b). As I was telling you, 7(1)(c) talks about exception to consideration. Sir, generally to call it as a supply, the transaction, it needs consideration. But even though there is no consideration, section 7 subsection 1 clause C read along with schedule 1 says, I have given clause C says, go and refer schedule 1. In schedule 1 there are 4 activities mentioned. Those 4 activities, even though there is no consideration, you treat it as supply. That means what they are trying to tell, see, if there is any question with respect to whether a transaction is supply or not, first of all we should see goods or services, by person, consideration, business. If there is no consideration in that transaction, what you have to do, if there is no consideration in that particular transaction, you should not say straight away this is not a supply. You should go and refer schedule 1. In schedule 1 there are 4 activities. See activity para 1, para 2, para 3, para 4. Given transaction, can you fit anywhere in these 4 activities? Then it will be called as supply. No sir, I am not able to fit it anywhere, sir, in these 4 situations. Then it is not a supply. So I repeat, if there is no consideration in transaction, straight away go to schedule 1. In schedule 1, if you are able to fit it, then it is supply. If you are not able to fit that in schedule 1, it is not a supply. Okay, so what are the 4 activities, sir? What are the 4 activities? First of all, first activity, para 1. Para 1 says permanent transfer or disposal of business asset on which ITC was taken. That means we have purchased some goods, we have booked them in our books, took ITC, we are freely disposing that to some other person. For example, you are a chartered accountant in practice running your business. For your business purpose, you are buying a laptop, showing that it is a business purpose, you are buying a MacBook and gifting it to your girlfriend on Valentine's Day. You have taken ITC on that MacBook. Now what you are doing, you are permanently transferring or disposing that MacBook. Then still it is called as supply, even though there is no consideration. Am I clear? See, generally if there is consideration, no problem, it is supply. But here what we are saying, even though there is no consideration, we are calling it as supply. So that is para 1. Or para 2. The para 2 talks about the interesting para or lengthiest para we will going to discuss here. The transaction is happening between related person or distinct persons. Please understand, here it is not from related person to distinct person, or it is not from distinct person to related person. This is not the case. It is between related person. That means related person to related person or distinct person to distinct person. In such cases, even though there is no consideration, but if it is in the course or furtherance of business, then it is treated as supply. That means you should know the meaning of related person and distinct person. Related person, distinct person. First I'll tell you the basic fundamental difference. Understand, related person means there are 2 persons, we are talking about the relation. Distinct person means only 1 person, we are treating them as 2. Okay, so I repeat, related person, there are 2 persons, we are talking about the relation. Distinct person, only 1 fellow, you are treating them as 2 persons. Okay, so who are related person? Between them anything happening without consideration is also supply if it is for business purpose. I repeat, if it is for business purpose is important there. Next, number 2, sir, distinct persons, they are treated as distinct persons. Between them anything is happening without consideration, but in the course of furtherance of business, still we call it as what? Supply, even though there is no consideration. Okay, first let us understand who are related persons. So related person, you have 9 points here. So look at this, what are the 9 points with respect to related person? Easy one, you might have gone through already. Just a quick recap. So what is that? That these two people, Vishnu and Vamsi, officers or directors of one another's business. We are calling them as related. These two people are legally recognized as partners. Vishnu and Vamsi both are partners in a partnership firm. Or employer and employee, we call them as a related person. Mark that employer employee important, because we'll have a detailed discussion about that employer employee concept. Okay. So employer employee, again an important concept which we'll have an elaborate discussion. Next, they are called as related. Anything happening between them is supply even without consideration. And next, when there is any common ownership, for example, Vishnu is holding 70% ownership in Boys Private Limited and Vishnu is holding 30% ownership in Girls Private Limited. Boys Private Limited and Girls Private Limited are becoming related. That means because of common ownership of Mr. Vishnu, where greater than or equal to 25% of the outstanding voting stock I am holding. That means common ownership. Because of common ownership, they are becoming related person. Next, sir, one of them are directly or indirectly holds the other person. Holding company, subsidiary company. Next, both of them are directly, indirectly controlled by a third person. As I told here, there is a common ownership. There can be common control also. So because of that, they are becoming related. Please understand, in point number 4 and 6, there are 3 persons. Out of the 3, 2 members are commonly controlled by third person, or in these 2 entities, this fellow is having common ownership greater than or equal to 25%. Okay, remember that. Next, together they are directly, indirectly controlling a third person. That means these 2 people are controlling this fellow. Then these 2 people are called related. These 2 people becomes related. Hope it is clear for you. Next, members of a same family. Sir, what do you mean by family here? Members of a same family when you say. So what do you mean by family? Family definition clearly says here parents and grandparents. There's the definition here. You will be getting this in this particular page. Okay, parents, grandparents, brothers and sisters. When they are wholly or mainly dependent on you, then only they are your family. But your spouse and children, they are your family no matter whether you like them or not. I mean, whether they are dependent on you or not, they are your family. So family definition is your spouse and your children always your family. Your parents, grandparents, brothers and sisters are your family only when they are wholly or mainly dependent on you. Then otherwise they are not your family. Okay, fine. So these are the meanings of related person. So these people are related person. Okay. Now, or sir, I have a sole agent. My entire production I'll give only to one agent or one distributor. Then we call them as sole agent or sole distribution or sole concessionary, whatever name called. Sir, that person is called related person. Among these people, if anything is happening without consideration, then it is supply. That means from subsidiary company to holding company or holding to subsidiary or anything, as we have discussed, family business we are doing, then we are, let us assume father is the manufacturer, son is a distributor. Father is sending the stock to the son in the course or furtherance of business without consideration, then it is supply. So that way, if you are satisfying the meaning of related person, and between you if there is a transaction happening without consideration, then it is supply, even though it is done without consideration. But main criteria is you should be related person, and the next one is it should be done in the course or furtherance of business. That is very important. Okay, now sir, okay, related person we have understood, and between them whatever is happening without consideration is supply. If it is done in the course or furtherance of business, fine. But what do you mean by distinct person? What do you mean by distinct persons? So if you are a distinct person, between you anything is happening without consideration is a supply. That is for sure, correct? Now, what do you mean by distinct persons? Normally, you know that you have an idea that when you are operating from multiple states, you have multiple registrations. But when you are operating in same state, multiple registrations are optional. That depends upon you to take a call. So multiple registrations for the same person are possible, either within the same state or in the different states. So when we are talking about distinct person, you should keep this in mind. A single person. How can I identify this fellow as a single person? Based upon the PAN. That this person having multiple registrations in the same state or in different states, whatever it is. Sir, if any person is having multiple registrations, maybe in the same state or different states, when you compare these two different registrations of same person, they are belonging to same person, but they will be treated as distinct person. Anything happening between them? For example, Vishnuvardhan is having a business, furniture dealer. Vishnuvardhan is having business branch in Tamil Nadu also, branch in Karnataka also. Sir, both are belonging to Vishnuvardhan individual. Vishnuvardhan in Karnataka, Vishnuvardhan in Andhra Pradesh are different persons? No. So Vishnuvardhan in Andhra Pradesh, Vishnuvardhan in Karnataka, Vishnuvardhan in Tamil Nadu, wherever, he is one and the same. But for GST purpose, those registrations of Vishnuvardhan will be treated as registrations belonging to different persons. So distinct persons. The meaning is given in section 25, subsection 4 and subsection 5. Subsection 4 says in two different states, sorry, you should have two different registrations, maybe in same state or maybe in different states. As I told you, Vishnuvardhan registered in Tamil Nadu and Karnataka, or Vishnuvardhan is having two registrations in Tamil Nadu, whatever it is. Maybe in Chennai one registration, Coimbatore another registration. Maybe I am doing furniture business also, restaurant business also in Tamil Nadu. For restaurant business I have a separate registration, furniture business I have a separate registration possible. So two different registrations is the primary criteria. Two different registration, same state or different states. These two registrations are called as belonging to distinct person. Clear? Or section 25 subsection 5 says two different states, one state registered, another state unregistered. One state registered, another state unregistered. Okay, then also you are called as distinct person. For example, in Goa I am selling liquor. I did not take registration because I am selling only liquor. In Karnataka I have a restaurant and I took registration. So in Karnataka I am a registered person. Goa I am not registered, correct? So with respect to these two things, both are my establishments, but one is registered, one is unregistered. Still we call it as establishments belonging to distinct persons. Both are belonging to Vishnu, but still we call them as both are belonging to distinct persons. Am I clear? So now anything happening between them is what? Anything happening between them is supply, even though there is no consideration. Those who are you are watching the recording, yes. So pause the video and just go through this example. Just go through the example, pause the video and go through this example. See whether you are able to understand the question or not and the example or not, and then continue the video. So if you look here, Chennai to Tirupati, both are belonging to Vivad Notebooks Private Limited. Chennai, Tamil Nadu registered, Tirupati, Andhra Pradesh registered. Both are having separate registrations, but both are belonging to Vivad Notebooks Private Limited. Now, as I told you, 25 subsection 4 needs two different registrations. Here we have two different registrations. Between them, they are doing stock transfer without consideration. Still, we call it as supply because there are two different registrations. 25 subsection 4. Same state or different state, it doesn't matter. So they are distinct persons. Anything happening between them without consideration is a supply. Okay. Now here, if you see Chennai and Coimbatore, Tamil Nadu, both are under same registration. So when both are under same registration, 25 subsection 4 needs two different registrations. Here there is only one registration, so we cannot impose subsection 4. So fine. 25 subsection 5. 25 subsection 5 needs two different states. Here there is only one state. Both are belonging to Tamil Nadu. Then you cannot fit this in subsection 4 or you cannot fit this in subsection 5. So both the cases, it is not at all satisfying distinct persons concept. So here stock transfer from Chennai to Coimbatore is not a supply because they are not distinct persons and there is no consideration, no supply. Nowhere you can fit this in schedule 1 transactions. So it is not a supply. Okay, so that is what the point. Same way here the examples, if you see Tirupati Andhra Pradesh, Vijayawada Andhra Pradesh branch, both are having different registrations. Subsection 4 says two different registrations. Same state or different state, it doesn't matter. Both are called as distinct persons and hence it is supply, even though without consideration. Next, fourth situation satisfies 25 subsection 5. So one state registered, another state unregistered. So stock transfer without consideration in the course of furtherance of business, that is also supply. So hope that is clear for you. With this we are done with related person and distinct persons, except that employer-employee concept. Let us finish that employer-employee concept also. As you all know, employer-employee, sir, this people are called as related person. And generally when you see employee concept, employee is drawing salary from the employer and whatever the services employee is providing to employer in the course of employment contract is not a supply as per schedule. As per schedule what? Schedule 3. What is schedule 3? Neither supply would not supply of service. So if you analyze this situation, if you analyze this situation as I was telling, schedule 1 and schedule 3 put together the common reading, the employee providing to employer his services in the course of employment, and as a part of employment contract whatever the employer pays to employee, that may be salary, that may be perquisites. Please understand, perquisites also will form part of employment contract. So salary and perquisites, both whatever he is getting paid from the employer because he is providing his services in the nature of employment contract, according to employment contract, both are coming under schedule 3. So it is neither SOG nor SOS. It is not at all a supply. So this is number 1. Okay, but sir, during this Certain things are provided by employer to employee which are not even forming part of this employment contract. What about them? That means, see, for example, there is any new year celebration happening, or there is any best employee award given. In that case, some gifts are given by employer to employee which are not mentioned in employment contract. It is not a salary, it is not a perquisite, which is not mentioned in the employment contract at all. Then in such cases, understand what happens is this becomes gift. That means without consideration, because this is for the services you are providing as an employee. I am paying you salary and perquisites, so whatever extra is given, that is nothing but gift. And if it is not defined under GST, that's a different story. And schedule 1 says employer and employee are related and anything happening between them is a supply. So these gifts given by employer to employee is nothing but attracting schedule 1 transaction para 2. So now we came up with a relaxation saying that if at all aggregate value of gifts given by the employer to the employee in the financial year, so per annum per employee greater than 50,000, if we give anything, then only that entire amount is supply. If it is less than or equal to 50,000 per annum per employee, it is not at all a supply. But I repeat, if it is 70,000 aggregate, that means all the gifts given in the year, if you add, once you give 10,000, another time you give 5,000, another time you give 20,000, all these things, sir, you add and see it. If it is exceeding 50,000, let us assume if it is 70,000, total 70,000 becomes taxable. But if it is falling within 50,000 limit, that is less than or equal to 50,000, then it is not a supply at all. So that is what the point. So this is something related to employment contract, all that fine. Suppose one more step ahead, if we discuss, what if employee is providing to the employer some other services which are not even covered under employment contract? That means that so long we have discussed payment is covered under employment contract or not. Payment is covered under employment contract, then it is salary or perquisite, it is not taxable, not a supply because of schedule 3. If something extra is given, it is treated as gift and we have seen 50,000 relaxation. But sir, if at all the work itself, whatever I am doing, for example, you are acting as CFO of my company, you are providing your services, getting salary and perquisites, not a supply, and extra I am giving gift during Diwali or New Year, 50,000 limit we have. What if you are acting as a CFO of my company and personally also you are providing me some investment advisory services for which I am giving you some consideration? This is not a service which you are providing to me as per employment contract. So automatically this is what? This is supply and attracts GST. Are you understanding the point? This is not at all covered under employment contract. I repeat, anything you provide outside the employment contract, for that if I pay consideration to you, that will automatically attract supply provisions and hence it will be liable to pay GST. Clear? So that is what the employer-employee discussion. So again, summarizing the concept, the employer-employee concept, employer paying to employee salary, perquisites, all these things for the work done in the employment contract, not a supply because of schedule 3. If anything extra is given which is not mentioned in employment contract, any consideration extra, anything is given extra, that is nothing but gift. For that we have 50,000 limit, we can enjoy. No sir, the work itself, what employee is doing to the employer is not covered in employment contract. That means it will not come under schedule 3, hence it is supply, it will attract GST. So that is what the comprehensive discussion of employer and employee. So here there is the example for employer-employee concept. So we were private limited paying to the employees Mr. Animal, Mr. Tiger, Mr. Leo, Mr. Animal, Mr. Tiger, all this value of gifts, all that. So you can just go through the example. We have clearly discussed it. The next one is para 3. Para 3 is nothing but principal and agent concept. You know that if anything is happening between principal and agent, here the important thing is anything means here we are talking only about goods, not about services. So goods are going from principal to agent or from agent to principal, that without consideration still we call it as supply. Still we call it as supply when agent has the authority to raise invoice in his own name, then only schedule 1 para 3 can be invoked. So please understand here, for example, Vishnu is having an agent. Vishnu is selling notebooks and he has an agent by name Mr. Spartan in Coimbatore. CBE means Coimbatore. So here I am sending the goods. Here the concept is all about principal sending the goods to agent, agent sending the goods to principal. That will be still called as supply if agent has the authority to raise invoice on that particular transactions, for the transactions. Now Vishnu, the principal, is sending the goods to agent and he is asking to sell the notebooks to the local bookstall owners in Coimbatore. Spartan also said, okay sir, I will do it. But now when Spartan is selling it to the local bookstall owners, who is raising invoice to the local bookstall owners is what matters. Sir, when the principal himself is raising invoice to the local bookstall owners, so whatever is the movement happening between principal and agent, is not a supply. Okay, directly principal is raising invoice on the bookstall owners. Fine. But sir, if agent only raises the invoice to the local bookstall owners, that is partner only raising invoice in his own name, then this movement of goods from principal to agent will be treated as supply. That is what the concept. Okay, so that is what all about that. So with this we are done with para 3 also. Let us move on to para 4. Okay, coming to para 4. Sir, what is para 4? Para 4 is all about importation of services without consideration from a related person or own establishment located outside India in the course of furtherance of business, as we have told. So here, importation of services we have already seen. So importation of services, when you see, we can compare this with clause B, section 7 subsection 1 clause B. In 7 subsection 1 clause B, what it says, consideration should be definitely there, but here consideration should not be there. Here it may be in the course or furtherance of business, it doesn't matter. So business requirement is not there, but here business requirement is mandatory. 7(1)(b) supplier should be, can be any person, but here in schedule 1 it should be related person or own establishment located outside India. Then only what we call it as supply. Okay, so if importation of service is tested with consideration, now go to clause B. Without consideration, now come to clause C. So as per clause C, what are the conditions? Conditions are, it should be without consideration in the course of furtherance of business and from a related person or own establishment located outside India. Then only we can call it as supply. You know, for example, Mr. Mahendra Bahubali, who is a lawyer in USA, the son of Devasena. Devasena mother is staying in India, right? So now Mahendra Bahubali is providing legal advisory services to her to his mother for filing a divorce suit without consideration, obvious. Now, is it a supply or not? Please understand. Now, the important thing is whether this is supply or not, we should see from Devasena's point of view, not from Bahubali's point of view. Because importation of service, the recipient is liable to pay GST. You know that the recipient is liable to pay GST. So we should see from whose point of view? We should see from recipient's point of view. So recipient point of view, if you see, this is importation of service from son, related person, without consideration. Is it in the course or furtherance of business? Devasena, for her personal purpose, she is importing the service here. There is no business element, so it is not a supply. But same Devasena, if she is importing the legal advisory services from her son without consideration for filing a suit against Mahishmati and Co. Balal Dev, with respect to Mr. Balal Dev, with respect to her business Mahishmati and Co., then importation of service is there from her son, related person, without consideration, and it is in the course or furtherance of business, then automatically we call it as what? We call it as supply. So obviously, so please understand, whether it is for business or not, we should not see from supplier point of view, we should see from recipient's point of view. Please understand, when it is importation of service, yes, generally supply we should see whether it is for business or not from supplier's point of view, but in case of importation we should see from recipient's point of view, importation of service, whether it is business purpose or not, as per schedule 1. Am I clear? So that is what the point. Same story here, if you see again with respect to Mr. Kattappa, same story, just I'm changing the character. Mr. Kattappa, father of Devasena, who is in USA, he's a lawyer. Now please understand, both the cases, again personal purpose and business purpose. Here please understand, both the cases it will not be supply, whether it is personal purpose or business purpose, because you should see whether Kattappa is related person to Devasena or not. Kattappa is the father of Devasena. When she is looking at the father is a lawyer in USA, that means he is not wholly or mainly dependent on Devasena. Parents are my relatives only when they are wholly or mainly dependent on me. So according to Devasena, father Kattappa is not related to her. Even though she is importing the service for her business purpose here, it cannot be called as supply. It cannot be called as supply. Hope you are able to understand. Just pause the video and just go through this explanation. What I am trying to tell is, as per GST law, I am always related person to my mother, but my mother is not related to me because she is not wholly or mainly dependent on. You understanding the point? So for my mother, I am always a related person, if you see from my mother's point of view. But for me, from my point of view, my mother is not related to me because she is not wholly or mainly dependent on me. So that is the interesting point here in related person, the family definition especially. Okay, hope it is clear for you. So with this, we are done with para 4 also. We are done with schedule 1 completely. Hope it is clear for you. Now let us move on to schedule 2. Schedule 2 is nothing but if a transaction is already treated as supply, whether it should be treated as supply of goods or supply of services. So I always tell schedule 2 is either SOG or SOS, supply of goods or supply of service. So there are the general points which you can go through. Here the interesting thing is, see, when you're transferring title in goods, okay, sir, what I say is just take it this way. This transfer of title. Transfer of title in movable property, then it is supply of goods. If it is transfer of title in immovable property, you cannot call it as supply of good or supply of service. No, sir, I am not transferring the title. I am just transferring the right to use. If you are transferring the right to use, whether it is movable property or immovable property, it is obviously treated as supply of service. With this logic, you can just crack various points here. So just make sure you are thorough with this flowchart. Simple one. Next, as I already told you, transfer of title, transfer of right to use, transfer of title at a future agreed date. Future agreed date or current date, it doesn't matter. Whether are you transferring the title or not, that is what matters. So supply of goods. Next, transfer of right to use the land, that is immovable property, right to use services. Letting out any properties, building, supply of services. Next, somebody doing treatment or process on the goods belonging to another person, job work, example, supply of services. Your business assets are being transferred or disposed of because they are no longer to form part of your assets. Supply of goods, permanently or completely transferring or disposing the business assets. As I told, transfer of title, supply of goods. Goods which are your business assets are put to private use or allowing somebody to use for any purpose other than business. That means personal purpose. That means you are allowing somebody to use it. You are not selling. You are just allowing somebody to use. Supply of service. Next, where you are closing down your business, the goods which are forming part of your business, if they are lying still in the godown, they are deemed to be supply. But if you are not closing down the business, you are just transferring the business to somebody else, then it is not a supply. Or your business is going to be carried out by any person who is treated as a personal representative, then also it is not a supply. Simple thing, your business you are closing down, whatever the goods are lying now in the business will be deemed to be supply. Even though you have not actually supplied, you should pay GST and close it. But there are two exceptions. One is if at all you are selling the business, that means the other fellow will carry on the business, so there is no problem to the government. Or if the business is carried out by any authorized representative, then also fine. That means business is not getting closed, just the owner is being changed or taxable person is being changed. Now, renting of immovable property, temporary transfer of or permitting use of enjoyment of any intellectual properties like trademark, patents, all that stuff, or any developing the design or any softwares, etc., etc. All these things are what? Supply of service only. For this I have given notes, you can just refer the notes here. So intellectual property rights, permanent transfer, supply of goods, temporary transfer, supply of services. IT software, pre-packed form, supply of goods, that is coming in music, CDs, etc., etc. Others, it is service only. Okay, so that way you can just take it up. Next, construction. This is very important one. For this I have also given an example. Simple, if there is any under construction building, if it is being sold, whether it is supply or not, it will be treated as supply even if 1 rupee consideration is taken before the completion certificate or first occupation, whichever is earlier. So if you are constructing anything, under construction things, anything, if you are buying, so even if the, see, understand, if the building is already ready made, it is like ready made product but immobile, so if you sell that, it is not a supply because it is not good, it is not service. But if it is still under construction, you go and pay 1 rupee advance. That means you are hiring that opposite fellow to construct your house, so it will be treated as supply of construction services for you, so it is service. So I repeat, under construction buildings, supply of service. It is completely constructed, immobile, it is not a supply. Clear? So this is the example and you have the answer for this. You can just go through that. Okay, that is important point here. So construction one, so in this schedule 2, this is important thing. Next, here one more thing is there, agreeing to tolerate something. This is also important, so we'll discuss here. So the analysis has been given here. And I repeat, if you are buying the under construction properties, the total consideration will become supply of service, not just the advance amount what you give during the construction. So even though you have given 10 rupees advance during the construction, the total building cost will be treated as supply of service. Next, works contract. Works contract. What do you mean by works contract? Generally, when you talk about immobile property, if the contractor brings only the labor, that is called pure labor contract. No sir, the contract is bringing both labor and material, then we call it as works contract. See, if they are just bringing the labor and doing the construction related activities also, then it is supply of service. Or they are bringing both material and labor and doing the construction work, then also it is called supply of service only. Technical meanings will change. That is pure labor contract, this is called works contract. Remember this word works contract, very important. So always remember, works contract means with respect to construction, both goods and services the contractor is providing, the material and labor both he is only bringing. That is what we call as works contract. So remember, very very important wording. But both are, pure labor contract is also service, works contract is also supply of service, nothing to worry about. Next, supply of food and beverages. The restaurant services, supply of service only. So that also schedule 2 last point. Okay, so with this we are done with schedule 2, except that some clarifications below. Now this is one interesting clarification given by the department actually after 5 years of implementing GST. In this clarification they have discussed about various occasions and whether it is taxable or not. See, the fundamental concept of this particular clarification is, when you have an agreement to do something or not to do something or tolerate something, for that agreement, either to do something or not to do something or tolerate something, for this agreement if there is also consideration, then only we call it as supply. Okay, that means now see, for example, sir, you are driving a bike, and when you are driving the bike without helmet, if the traffic police is charging 1000 rupees penalty or fees, please understand that 1000 rupees is not a consideration for violating the law, correct? The same way, when you are entering into a contract with a person and you are breaching the contract, and because of the breach of contract you are paying the penalty or liquidated damages, is it consideration for breaching the contract? No, that is compensation you are paying to the opposite fellow because he has incurred some loss because of you breached the contract. So because of this, please understand here the fundamental thing is that if there is agreement to do something and further there is consideration, if there is agreement not to do something and there is consideration, agreement to tolerate something and there is some consideration, then only it is called supply. So taking that logic into picture here, see, any liquidated damages are not consideration for breaching the contract, so it is not a supply, not taxable. Cancellation of coal blocks. The government has entered into a contract where the private entities have been allotted with coal blocks, and those contract has been breached by the government and they have paid damages to them. So again, breach of contract, the damages paid not because of an agreement to tolerate the breach, all that. So this is not a supply, so no GST. Next, check dishonor charges. Bank is agreeing to, like, okay, no problem, you deposit the check without balance also, let it get dishonored, you pay us this much fees, like that they are asking consideration. No, that is penalty for you to depositing the check without sufficient balance. Any other penalty imposed for violating any laws, as I told you already, that is not consideration for violating the law, that is not the consideration for violating the law, so it is not a supply. Next, any employee terminating the employment contract before the period. So if he is not serving the complete period, notice period, etc., for which the employer is forfeiting his salary, so that is punishing the employee for not fulfilling his contract. That is also not consideration for agreeing to tolerate something, so it is not taxable. But here if you see certain cases where late payment surcharge or fees, for example, sir, if you go and try to purchase a mobile, the mobile shop owners itself nowadays they are saying pay after 30 days, pay after 60 days, pay in 3 installments, pay us so much extra, that's all, like that. They are giving you an option for making late payment. They are not punishing you for making late payment, they are giving you an option of making late payment, but they want some extra consideration. So in such cases what is happening, they are agreeing to tolerate you making late payment. Okay, so for extra consideration, so in such cases, yes sir, it is treated as supply, and the amount whatever they are charging, they will the amount will be treated at par with the principal supply. Okay, suppose if it is a mobile phone and you are purchasing the mobile phone charged at 12% GST, for example, if they are asking you to pay 300 rupees extra, 400 rupees extra for allowing you to pay the amount late, 30 days late or 40 days late, etc., that 400, 500 whatever extra they are charging, that also will be treated as what? Treated as sale of mobile phone. For example, here see one more case, like cancellation charges. Nowadays if you see, mostly with respect to hotel industry, the travel industry, all that stuff, when you are booking the flight ticket or train ticket, there will be an option refundable, non-refundable, all that. So if you pay 250 rupees extra, 300 rupees extra, all that stuff, what they are doing, they are giving you an option to cancel the ticket also, right? In such cases, for example, if it is a train ticket in AC, sir, it is taxed at 5%. That ticket you are cancelling by paying cancellation charges 150 rupees, that also will be taxed at 5%. Here they're agreeing to tolerate, no problem, you cancel, pay us this much consideration, we will arrange another alternative and we will pay you the ticket amount fully, don't worry, so cancel. Like that they're giving an option. They are not punishing you for canceling the ticket, they are giving you an option to cancel also, so they are agreeing to tolerate you canceling. So the amount will be treated at par with the principal supply. Suppose for example, if it is a sleeper ticket in train, it is exempt under GST, so the cancellation charge is also what, exempt under GST. Okay, so that is the situation, clear? So at par they will be treated with the principal supply. There is one more doubt, sir, regarding the minimum electricity bill we pay, no, monthly, whether you use it or not, at least for 50 units, 100 units, will be paying that 150 rupees, 250 rupees extra, so etc, something like minimum amount, correct? So the doubt was, are we punishing the consumers for not using that minimum electricity? No, it is not like that, sir. We are selling electricity, and for selling electricity, this much minimum amount is my bill, 150 rupees minimum starting package. So like that they are selling the electricity and they are taking the consideration, so it is supply, and of course it is very much exempt under GST also. Yeah, so there is another clarification there. And there are certain cases like where they're forfeiting the advance amount paid for agreement to sell the immovable property. You know, normally when we are buying the land or selling the land, buildings, etc., etc., we will enter into first an agreement. We'll pay 20%, 25% advance, and we'll agree we'll pay that balance amount in 30 days or 60 days, 90 days, based upon your understanding. And after paying the balance amount, we'll get the land registered. So that way we'll agree. Now, we will also tell initially, if you don't pay the balance amount within the specified time of 90 days, 60 days, 30 days, we will forfeit the advance. We will not repay you the advance back, return the advance back. Okay, so that way we'll agree. So in this case, the forfeiture of that advance amount, is it consideration for agreeing to tolerate your breach? This is also similar to breach of contract. Here we don't want people coming and just doing some time pass. We want to sell the land, correct? It is not like, okay, you breach the contract, you don't come within 30 days, you don't come in 60 days, even if you are not coming and paying, don't worry, I am okay with the advance amount, I'll forfeit the advance. That is not my agenda. My agenda is to sell the land, not to forfeit your advance. So this is also similar to breach of contract. So whatever the forfeiture is happening, so it is not a supply, because there is no agreement to tolerate the breach. Okay, so that is the case. Next, there are 2 points here which I did not give actually. Sir, here for example, we have a building, 7 floors building, east facing, nice sunlight, nice ventilation, everything. So we are getting proper ventilation. Next to our building, another fellow got a permission to construct 20 floors. And if he constructs that 20 floors, the ventilation, the sunlight, everything what we are getting, that will be definitely gone. Normally sun rises in the morning 5:30, 6 o'clock. Now for us, if that fellow constructs the building, for us the sunrise will happen afternoon somewhere 11:30 or 12 o'clock. Okay, so what we are doing, we are asking that person, sir, even though you got permission to construct so many floors, sir, reduce 3 floors, sir, or reduce 4 floors, sir, we'll pay 40 lakhs, 50 lakhs, 1 crore, 5 crores for you, please don't construct so many floors. Like that we are asking, and that opposite fellow is also like, fine, okay, no problem, is agreeing not to construct the higher number of floors for a consideration. So that is supply. So there is an agreement not to do something, there is an agreement to do something, there is agreement to tolerate something, and for that agreement there is consideration also. Then obviously it will be treated as supply. So it is supply and taxable. Okay, of course. Sir, we will be seeing, for example, outside a ladies fancy store, there will be a pani puri anna will be setting up his pani puri stall kind of thing. So the hawkers we call on the roadside footpath, where there is a common entrance area for the shops. Outside that there will be some mehendi shops or pani puri shops or stalls that way. So the shopkeeper is allowing the hawker to operate from the common pavement, even though it is a disturbance for his customers, for his business, all that stuff, for which he is charging some consideration from the hawker, from the pani puri vendor, all that, right? So the shopkeeper is agreeing to tolerate the hawker, the pani puri and operating from the common pavement. So there is an agreement to tolerate that, and there is consideration for that. So that is treated as supply as well. Okay. Now, so that means the overall summary, the overall understanding of this concept is nothing but, please understand, sir, there should be an agreement between you and me. It need not be writing, it may be in oral or written, whatever it is, sir, there should be an agreement to do something or not to do something, or to tolerate something, for which we are accepting some consideration. That is the case, it is supply. Otherwise, in simple terms, penalty, penalizing you, punishing you because I have incurred some loss, taking compensation from you, all these things will not be considered as consideration for agreeing to do something or not to do something or tolerate something. That will not be supply. So penalty, punishment, compensations, leave it. It is not a supply. But consideration to do something, consideration not to do something, consideration to tolerate something is supply. Okay, so that is what the clarification all about, in which they have covered multiple situations. The next clarification is regarding Pagadi system. See, generally we know that if there is sale of land or building is happening, there is no GST, because we understand that is immovable property. But normal people's understanding, the common man understanding is we are already paying stamp duty, the registration charges, all the stuff. So there is no GST. That means stamp duty, registration charges, if they pay, there is no GST according to them. So they got a doubt that there is a system called Pagadi system, and where we are transferring the tenancy rights, so lease. So when they are entering into the lease agreements, they are registering that in sub-register office, paying the stamp duty, registration fees, all that stuff. And they got a doubt: is GST applicable in this case? Because we are paying stamp duty and registration charges. Then the department has clarified, sir, you are paying stamp duty or registration charges. That's a different story. But what is that you are doing here? You are renting the immovable property. When you are renting the immovable property, it is nothing but supply of service. You are allowing somebody to use the immovable property. In schedule 2 also we have seen it is nothing but supply of service. So hence it is supply and taxable accordingly. Okay, so that is what the clarification. So the next one we are going to see is nothing but schedule 3. Schedule 3, what is schedule 3? Neither supply of good nor supply of services. So whatever the items given in schedule 3, you know that they are not at all supply. It is neither supply of good nor supply of services. So what are the activities given in schedule 3? So number 1, you know, obviously employer and employee providing his services to the employer in the course of employment contract is neither a supply of good nor supply of service, hence it is not subjected to GST. So here if you see the interesting things, as I have already told you, whatever is part and parcel of employment contract, the salary, perquisites, everything is nothing but not a supply, so no GST. But if anything is provided on principal to principal basis, which is outside the contract of employment, all that, then it is supply, it will attract GST. And here, see now, for example, sir, any amount received by the employee from employer on premature termination. Premature termination is also part of employment contract. So whatever is given is not a supply. Next, the services provided by the casual worker on daily basis. No matter whether you are paying the wages on daily basis, weekly basis, or monthly basis. Employee is an employee, so not a supply. Next, casual workers in construction contract, all that stuff, there is also not supply. Workers are workers, employees are employees, so obviously sir, it is an employment contract and there is not a supply. Next, services provided by employee to the employer in the course of employment contract are outside the realm of supply, that we have already understood. But suppose if the employee is leaving the organization and the employer is asking, don't join the competitor, there is non-compete agreements, then whatever the employee is agreeing not to enter into competing business or not join the competitor, so for that he is getting consideration from the employer which is outside the contract of employment, so it is supply. That is very interesting thing for you. This is not a part and parcel of employment contract, so it is not a supply. So this is regarding first entry in schedule 3, neither SOG nor SOS, that is neither supply of good nor supply of service. Next, the second one, services provided by courts or tribunals, that is the court fees whatever you pay when you go for filing an appeal, all that, that is neither supply of good nor supply of service. And here there is like this court includes what? District court, high court, supreme court, all these things, and that also covers consumer dispute redressal commissions. So whatever the disputes you are taking to consumer dispute redressal commission and whatever the application fees etc you are paying, see, generally these are not tribunals, but they have the characteristics of tribunal. So what the department has clarified here is, so whatever the services provided by these people are also covered under schedule 3, neither supply of good nor supply of service. That is the second one. Next, third one. The third one, in third entry there are again 3 points. Number 1, I can just tell you for your remembering purpose or for your memory purpose, politicians with power, that means you can take the MLAs, MPs, member of panchayats, all that stuff. So the salary what they are drawing, being the people's representatives, that is neither supply of good nor supply of service. You cannot say that they are employees of public, so it is not employment contract, so it is not covered there. So anything else, so I can just tell you simple terms, politicians with power, that means the members of parliament, members of legislature, MLAs, MPs, members of panchayat, member of municipality, sarpanch, ward member, corporator, councillor, all these things, and other local authorities is neither supply of good nor supply of service. Okay, next, the next one is with respect to any constitutional post you are holding, for example president, vice president, chief justice of India, prime minister, chief minister. For that, see, even though you are an MLA, being a chief minister, you will get extra salary. So that whatever the post created by constitution that you are doing. There is neither supply of good nor supply of service. So that is the third one here. So the second one. The third one, the final third one is you are acting as a chairperson, member, or a director of a body established by central government, state government, or local authority, and who is not deemed as an employee. If you are deemed as an employee, obviously you will come under first category. So here you are not an employee, but you are acting as a chairperson, member, or a director of a government body. So example, as I told, independent director of BSNL company. Sir, BSNL is a government company, so government body established by central government. If you are acting as an independent director there and getting remuneration, it is not a supply. But same if you are an independent director of TCS company, then it will be treated as supply. Okay, hope you remember the reverse charge mechanism entry of director services also. We will see in reverse charge mechanism the connection with this, and we'll have an analysis of director services. Okay, so that is number 2. Sorry, number 3. Okay, next, the fourth service, we can say rest in peace services actually. So the services of funeral, burial, crematorium, mortuary, including transportation of deceased, these things are also neither supply of good nor supply of services. The government is saying, may your soul rest in peace at least after your death without paying taxes like that. So they are saying these are not at all a supply. Okay, so this is the next one. Next, coming to the next one, sale of land is neither SOG nor SOS because it is not a good, it is not a service. Sale of building subject to paragraph 5b of schedule 2. If you remember, we have discussed under construction buildings, if you are paying an advance amount, then totally becomes supply of service, except those cases. Remaining any case, if you are selling a building, then it is not supply of good, not supply of service. If you remember, we have discussed an example also there, diamond apartment. Yes, there is an example which I have just displayed, so you can just go through that. So simple, under construction buildings, neither supply of good nor supply of service. But if it is any other case, so automatically what will happen? So automatically it is not a supply. Under construction building, supply of service. Okay, so that is what the fifth point. Next, the sixth point, actionable claims other than specified actionable claims. If you remember, I told you when I was discussing goods definition, remember the word actionable claims. I will discuss about that later. For actionable claims, generally we don't have any intention. If you remember sale of goods act, in sale of goods act, goods definition, actionable claims is not included. But here in GST, we are adding actionable claims definition mainly to target lottery, betting, gambling, not any other actionable claim, not anything which is satisfying the meaning of actionable claims. So what they said, in goods definition, they have added actionable claim, and in schedule 3, what they are doing, they are again saying actionable claim is neither supply of good nor supply of service, except specified actionable claim. So what they are trying to tell, that they are trying to tell that specified actionable claims, other than that remaining any actionable claim is not a supply. Then what will happen to specified actionable claim? Specified actionable claim will be treated as supply of goods. Simple, supply of goods. But sir, what do you mean by specified actionable claim? Specified actionable claim means nothing but lottery, betting, gambling, casinos, online money gaming, and horse racing. Remember, lottery, betting, gambling. We play all these three in casino, and we play all these things online. So online money gaming and one odd man out, horse racing. These 6 people are called specified actionable claims, and if you are providing them, it is treated as supply of goods, and hence it will attract GST just at a rate of 28%. Simple. Okay, enjoy gambling, right? So that is what the point. So if you look at the first amendment here, actually, see, this is regarding, we have actually inserted 2 new things in schedule 3, that is para 9 and 10. So you know, schedule 3 is nothing but neither supply of good nor supply of service, right? So in schedule 3, now if you see, the new para says the services provided by co-insurer to the lead insurer. So whatever the premium charged by the co-insurer from the lead insurer is neither supply of good nor supply of service. That means there is no GST applicable on this. So what do you mean by this? See, first of all, understand. I'll take an example and explain to you. See, any like huge insurance projects, whatever as they are there, for example, Airport Authority of India, that they are taking insurance on their new terminal building for 2000 crores. Because of the amount involved here, see, first insurance is given to this Airport Authority of India by New India Assurance Company Limited. So they are giving the insurance. So 2000 crore premium. Okay, so 2000 crore premium they are taking. Now, please understand, you understand 2000 crore premium na. So how much will be the insured value? Okay, now in this, New India Assurance Company Limited is thinking, we cannot take up so much risk, or we cannot give total insurance for this particular project. This is too huge. So 2 3 insurance companies together, let us do this like that. New India Assurance Company is thinking. So this is not informed to Airport Authority of India. So what New India Assurance Company Limited is doing, along with ICICI Lombard and HDFC Ergo, sir, what it is doing, it is saying that all three of us, let us take this insurance policy. So 2000 crore premium, no, 50% I will take the risk and premium, 30% you take, 20% you take, like that they are dividing. Now understand, on this 2000 crores, sorry, this 2000 crore is not the premium, 2000 crore is the project value. So premium is 0.5% of that sum insured. So what is 0.5% on that, sir? 0.5% is 8 crore rupees. This is the premium. So on this 8 crore rupees, 18% GST, if you see, 18% GST is nothing but 1.44 crore. Okay. So this 1.44 crore GST liability, this will be fully paid by New India Assurance Company Limited to GST department. Now the problem is not that. Now out of this 8 crore, see, 50% only will be with New India. That means 4 crores with New India. So New India will take 4 crore premium, and 30%, that is 2 crore 40 lakhs. ICICI Lombard will take 20% is nothing but 1 crore 60 lakhs. That HDFC Ergo will take. See, already 8 crore is collected and GST collected 1.44 crores by New India. If New India is paying this entire GST amount to GST department, again on this 2 crore 40 lakhs, 1 crore 60 lakhs, ICICI Lombard and HDFC Ergo need not pay GST. Okay, that means I'll tell you now the concept is, when any insured person is paying premium plus GST to the lead insurer, okay, and lead insurer is paying that entire GST amount to the department. Now the lead insurance is sharing the premium partner to his co-insurance companies, the co-insurers. On that premium, whatever he is sharing to the co-insurers, they need not pay GST. But what is the condition? That is called neither supply of good nor supply of service. So the co-insurer taking part in this particular insurance and taking his premium share is not subjected to GST. It is neither SOG nor SOS. But what is the condition? The condition is the lead insurer has paid full premium, GST on full premium. Then this is neither SOG nor SOS, neither supply of good nor supply of service. Hope you are clear with this example, all that. Okay, right. So this is the amendment with respect to co-insurance. I repeat, co-insurance, simple. Co-insurance means two or more insurance companies coming together and giving one insurance policy. That is co-insurance. Next, we will see reinsurance, that is different from co-insurance. Okay, so co-insurance means two or more people coming together and giving insurance and sharing the premium. So first fellow, who is the face, that lead insurer, is paying GST on full premium. So when he is giving share to that respective insurance companies, that is nothing but neither supply of good nor supply of services. Again, these people need not pay GST on that. Okay, that is what the amendment. So just now we have seen co-insurance. Now we are going to see a concept of reinsurance. First of all, understand, sir, the difference between co-insurance and reinsurance. What is the difference between co-insurance and reinsurance? Co-insurance, what it says, co-insurance is two or more insurance companies coming together and giving the insurance. But reinsurance, what happens now? See, now for example, I'm an insurance company. Okay, we were the insurance limited. Okay, keep it that way. So I'm giving insurance policy. So I'm giving insurance policies, some 10,000 crore worth insurance policies I give. And later on, I'm thinking, this much risk I cannot take. So let me just take insurance on this again. So out of 10,000 crore, let us assume some 4,000 crores, 40% I am taking reinsurance to just what I'm ceding my risk. That means I'm passing on the risk to some other person. Okay, some other insurance company. So I am taking insurance from another insurance company. So this is called reinsurance. So in this, what happens now? Please understand. I will just show you the situation. Client will pay me premium plus GST. Okay. So now what I will do, sir, when client is paying me premium plus GST, some portion of it, as I told you, 10,000 crore worth, I have taken policies. So in that, some part of it, some portion of it, I am giving the risk to some other person. So what I am doing, I am telling the insurer, sorry, I am the insurer. I am telling the reinsurer, you take this risk. Okay, I'll give you the premium plus GST, all that. But when I'm giving this premium plus GST to you, please understand, I need some commission in that. I need some commission in that because I'm only bringing client to you. So I'm telling to the insurance fellow, I'm only bringing client to you. So on that, even I want some commission. So what I will do now, I will give him premium fully. Whatever I have collected from the client, I will give the premium. But on that premium, he will pay GST. There is no doubt about that. That is also clear. But sir, what is happening now? On that premium when I am giving, he should also pay me some commission. So that is called seeding commission. Okay. So on that seeding commission, we are saying, sir, I will deduct the seeding commission and will pay to the reinsurer. On that seeding commission, there is no GST. Understand carefully. I collect premium and I give the same premium to the reinsurer also. We are paying GST on the premiums, no doubt about that. But sir, when I am giving the premium to him, I am giving business to him. Please understand. To the reinsurance company, I am giving business. So because I am giving business, he should give me commission. That commission is called a seeding commission, right? So on that seeding commission, nobody needs to pay GST. When the reinsurer has paid full GST on the seeding premium, so whatever the premium I am giving to him, on that full he is paying GST. Then again on seeding commission, we need not pay GST. It is neither sauce nor sauce. So don't worry, I have an example here. I'll explain through an example. See, ABC Life Insurance Company Limited, registered in Maharashtra, taken out reinsurance for one of its large group term insurance policies. Total premium collected is 120 crores. Portion ceded to reinsurers. For some reinsurance companies, we have ceded 40% of the premium collected. That means 40% of the premium collected, you only take and you only take that risk also. Like that, we are ceding it. Okay. Now, ceding commission agreed is 15% of the premium ceded. GST rate applicable is 18%. The reinsurance arrangement does not relate to any government notified reinsurance. That means it is not exempt under all that stuff. So now, for example, here if you see, first, I have collected total, that is ABC Life Insurance collected total 120 crores. Out of this 120 crores, 40% premium collected is ceded, correct? So 40% premium is what in this 48 crores. So if you see, gross premium ceded to reinsurer will be 48 crores. What is the commission on this? Commission on this, as we have discussed, 15%. 48 crores into 15%, how much? 7.2 crores. So 7 crore 20 lakhs is the commission which ABC should get. Okay. So what we have to do now? See, understand, ABC is the insurer. Next, GIC is the reinsurer. Okay. Now, sir, what happens is ABC should pay 48 lakhs. Sorry, 48 crores. Sorry, 48 crores plus GST. Okay. Now, what GIC should do? GIC should pay 7 crore 20 lakhs as commission. On this 7 crore 20 lakhs, no GST provided, sir, GIC pays GST on entire 48 crores. Are you understanding the point? So what we are trying to tell here is, sir, insurance companies will take reinsurance, so they will part with their risk, so they will cede that risk, and so because they are giving business to reinsurance companies, sir, they will also in return take commission from the reinsurance company, that we call as ceding commission. So when paying this 48 crore plus GST, ABC, what they will do? Their 7 crore 20 lakhs commission they will deduct and pay balance. That means he will pay 41 crore 80 lakhs plus GST on 48 crores. Are you understanding the point? GST on 48 crores. So GIC will pay GST on 48 crores and close this. ABC need not pay GST on 7 crore 20 lakhs because this is neither supply of good nor supply of service. Okay. So hope this is clear to you. I'll again explain to you. See, understand. Client pays premium to insurance companies, and now insurance companies, what they will do? Sir, insurance companies, they will later on they may feel, okay, let us take some reinsurance, this much risk we cannot handle, so they will take again insurance. So they will say, a client has given me so much of premium, in this much portion I am ceding with you, so you take this much premium. Client gave 100 crores, now we are seeing 120 crores here, you take 40%, that means 48 crore premium you only take, and 40% risk also you only take. I don't want, but I am giving business to you also, so give me commission. Like that I am asking. When I am asking that commission, sir, they are giving the commission. So instead of they giving the commission, I should give them the portion of the premium amount that I am paying, and I am deducting my commission and giving to them. That commission what I'm having as a seeding commission, on that there is no GST, provided opposite reinsurance company has paid GST on full premium what they are taking. Okay, so here as I told example, 48 crore premium I should give to them, but I will deduct my 7 crore 20 lakhs commission. On that 7 crore 20 lakh commission, GST will not be applicable. It is neither SOG nor SOS, provided whatever the premium I'm paying to them, reinsurance premium, that 40 crores is there, no, on that entire 48 crores, they are paying GST. That is the condition. Okay. Now, see, understand the basic differences between co-insurance and reinsurance. Co-insurance, at the time of issuing insurance policy, we already, the co-insurance have the agreement, we are agreeing to take this policy, okay, or give this policy to the client. Client may not know that, that's a different story, but we know it. So we all together we are sharing it like that. But in case of reinsurance, at the time of me issuing the insurance policy, I am alone. I am giving the insurance policy. Later on, I thought this is going to be too risky, so that I am ceding it with some other fellow, sharing it with some other fellow. That time I am taking reinsurance commission. Okay, that is called ceding commission. On that GST is not applicable. Okay, that is the difference between the previous entry we have in schedule 3 and this entry. Hope it is clear for you. Okay, so this is the notes. So we are done with schedule 3. Now we are moving into the next 7 subsection 2 clause B. Nothing but the government has given, the law has given powers to the government to release any notification to declare anything as neither SOG nor SOS. So the panchayat and municipality undertaking the functions which are entrusted to them as per article 243W and 243G is neither supply of good nor supply of service. I have given some examples, you can just go through that. And alcoholic liquor license. So state governments giving liquor license to anybody is neither supply of good nor supply of service. But please understand, this relaxation is only for liquor license, but not for mining license, telecom license, any other licenses. This is only purely for, you know, our favorite liquor license. Okay, I mean favorite for the government to generate revenue. Okay, so that is the case. So this is what with respect to the notifications, and there are some clarifications here. One super duper clarification, my favorite clarification actually. So this clarification is all about, this clarification is all about, the clarification is all about here. See, I'll just tell you with an example. There is Orange Travels. Orange Travels is operating a bus from Chennai to Hyderabad. So they are in Tamil Nadu also, they are in Telangana also. Both the states they are registered. Now if you see that they are registered in both the states, but a same person. But because they have two registrations, we will be calling them as distinct persons under section 25 subsection 4. Now what is happening now? They are transporting passengers from one state to another state. When they are transporting passengers from one state to another state, incidentally what happens? Something called bus, which is a movable thing, which is good, it is also moving from distinct person, one distinct person to another distinct person. So I repeat, this concept is not about transporting the passengers. The doubt is not about the taxability of transporting the passengers. The doubt is about when these two distinct persons are there, from one distinct person in Tamil Nadu, the bus is moving to another distinct person in Telangana. So there is movement of goods. Schedule 1 para 2, if you strictly apply supply of goods between distinct persons, okay, then it is without consideration but in the course of furtherance of supply, furtherance of business. I repeat, here the concept is not about transportation of passengers, not about transportation of goods. It is all about movement of bus from one distinct person to another distinct person. Okay, that movement is obviously called as supply if you strictly follow schedule 1 para 2. So people got a doubt and asked department, then department said, "Arey yaar, what is this actually?" So they felt the seriousness of this provision later on. And imagine, what if a train, let us assume there is a Chennai Express coming from New Delhi to Chennai, traveling across so many states. How many trains Indian Railways will be operating every day across how many states? So you can understand the practical difficulty here. So they said the movement of conveyances, leave about bus, whether it is bus, lorry, taxi, whatever it is, train, aircraft, ship, vessel, whatever you call, any conveyance moving from one distinct person to another distinct person for the purpose of transporting the passengers. Why the bus is moving here? The bus is moving here because they are transporting passengers, that is transporting the goods, or that is being moved for repairs and maintenance. In such cases, that movement is not treated as supply. I repeat, that movement is not treated as supply. Transporting the goods is supply, transporting the passengers is supply, doing repairs and maintenance is supply. But moving the vehicle for the purpose of transporting passengers, moving the vehicle for the purpose of transporting the goods or repairs and maintenance, I repeat, that movement is not a supply. That is what we have clarified here. Sir, no sir, I am taking this, for example, bus or lorry or a car from one distinct person to another distinct person to sell that car or bus from that another distinct person's location or state, then that is supply. That means the movement is for what purpose? Not for transporting goods or passengers or repairs and maintenance. The movement is for the purpose of further supply of such conveyance from that particular distinct person. So I give example here, sir, I am registered in Tamil Nadu also, registered in Kerala also. I am a dealer in cars. I have cars in Chennai, Tamil Nadu, and those cars I am transporting from Tamil Nadu to Kerala. For what purpose? To sell them from Kerala. Then this is supply, because the movement of cars from Tamil Nadu to Kerala is happening not for transporting goods or passengers, but for further supply of such cars from Kerala. Okay, so that is what the concept. That is what the concept. Hope it is clear for you. Okay, right. So that is what the clarification, which actually I liked a lot, because understand the interpretation levels of people. Okay, and the same logic applies even for the rigs, tools, spares, and all other goods on wheels like cranes, all that stuff. The same clarification, mutatis mutandis, is applicable. So it is equally applicable. Then that is also neither SOG nor SOS, neither supply of good nor supply of services, except where the movement is for the further supply of same goods. If you are moving this rig, tools, space, all the stuff, even for further supply from such particular distinct person, then only it is supply. Otherwise it is not a supply. Okay, so that is what with respect to clarifications. So additional conditions to attract GST, obviously what the supply shall be made by a taxable person and supply shall be a taxable supply, the normal things. So with this we are done with this particular concept. Okay, hope it is clear for you all. Coming to next one, section 8, composite supply and mixed supply. If you see composite supply and mixed supply, a simple concept. When do we refer this section 8 composite supply and mixed supply? Sir, for one single price, if you are getting more than one supply, so bundled supplies are flowing towards you for one single price. Then what is the tax treatment, whether it should be treated as composite supply or mixed supply? Sir, it depends upon purely one fundamental question, that is whether these supplies are naturally bundled in the ordinary course of business or not. If they are naturally bundled in the ordinary course of business, obviously then it is called composite supply. And whatever the principal supply is there, whatever the principal supply, that is the predominant supply in that bundle, that will be treated as principal supply. The whole transaction will be treated as supply of such principal supply. Whatever the GST provisions are applicable for that particular principal supply will be applicable for the entire transaction. For example, sir, you are buying a mobile phone where you are getting for 15,000 rupees, you don't know the breakup. For 15,000 rupees, you are getting the phone, charger, phone case, all that stuff. Okay, 12%, 18%, 28%, like this. In such case, what is the tax treatment for this? This is a bundle of supplies flowing towards me for one single price. In such cases, what is the predominant supply? That is what I have to understand. Sir, whatever is the predominant supply, for that what we will do? Sir, we will identify that. So here the predominant supply is what? They are naturally bundled. When you are buying a phone, obviously, unless you are an iPhone user, the charger, phone case, obviously nowadays you will be getting it together in the box. So because they are naturally bundled in the ordinary course of business, the principal supply, predominant supply in this is nothing but mobile phone. So whatever the provisions are applicable for the mobile phone, for the entire supply, all these provisions applicable for mobile phone will be made applicable. Mobile phone is a good, so entire transaction will be treated as supply of good. Mobile phone is subjected to 12% GST, so entire supply is treated as subjected to GST 12%. So that is what the concept. For example, if you are going and booking a room in a Taj hotel, 9999 room charges per day or per night, for whatever it is. Sir, you are getting accommodation services, complimentary breakfast, free free Wi-Fi, gym, swimming pool, newspaper, all these things for one single price. In that case, sir, here what we should see, what is the principal supply, predominant supply? These are naturally bundled, obviously. Why they are naturally bundled? Sir, generally when you are going and taking a room in any hotel, based upon the cost and etc., they give you so many amenities so that they want you to feel like you are at your home. So that way they try to keep you more comfortable. In such cases, they are bundling all these supplies which are nothing but naturally bundled in the ordinary course of business. So what is the predominant supply? Predominant supply is I'm going to the hotel not for complimentary breakfast or not for the free Wi-Fi. I'm going there for accommodation services. So predominant supply will be accommodation services, The entire transaction 9999 will be treated as supply of accommodation services. Whatever is the GST provision applicable for that accommodation service, for the entire transaction, the same tax rate will be made applicable. So that is what the tax treatment. Now you will get a doubt, sir, how can you determine whether these are naturally bundled or not? Any formula is there for this? This is not a plus b whole square, my dear friend. So it is like there is no standard formula here to identify whether they are naturally bundled or not. It depends upon case to case. So there is a scope for litigation here. You should always be careful or cautious before taking a decision. So before taking a decision whether they are naturally bundled or not, we should be going through certain various other factors, like what large number of recipients reasonably expecting them as a package, or majority of the competitors may be providing it as a package, the nature of various supplies. The bundle itself will tell you whether this is naturally bundled or not naturally bundled that way. Or there are some other indicators like single price the customer pays. No matter whether he is using all the items in the package or not, he will pay the same amount, and they are normally advertised as a package. Different elements are not separately available. Can you go and swim in the swimming pool of Taj Hotel saying that, sir, I want to do swimming here for 1 hour, I'll pay 150 rupees? That is not possible. So that way they are forming part, like integral part of one overall supply. If you remove one or the other, the nature of the supply itself would be wholly affected. For example, now I provide you classes, but I don't give you material. Sir, when the material is removed, the nature of supply is obviously affected or not. So that way, if you remove one element from the bundle, there are chances that they may be like uh, affecting the supply. So that way you should take a cautious call whether they are naturally bundled or not. So as we have discussed, if they are naturally bundled, then that will be treated as composite supply. Whatever is the predominant supply, you identify that, and the entire transaction, the tax treatment will be according to the predominant supply. Sir, what if they are not naturally bundled? If they are not naturally bundled, then we call it as mixed supply. So what is the tax treatment for mixed supply? The tax treatment for mixed supply is whatever in that bundle attracts the highest rate of tax, then that transaction will be treated as such supply which is attracting highest rate of tax. Now for example, on your favorite festival, that is Feb 14th, you go to any shop, you'll be finding this gift box where you have dairy milk, silk, rose. I tried my level best to draw a rose there, and teddy bear, greeting card, keychain, all these things. So in this bundle, sir, there are so many items which are subject to different GST rates. Are they naturally bundled? Of course not. In that case, what is the tax treatment? Sir, it will be treated as mixed supply. If it is mixed supply, what is the tax treatment? This entire package of 999 rupees will be treated as supply of dairy milk, silk, which attracts highest rate of tax in that particular bundle. So that is what the tax treatment. So what is the tax treatment? When more than one supplies are flowing towards you for one single price, sir, the tax treatment is identify whether they are naturally bundled or not. Naturally bundled, principal supply. So whatever is that tax rate and the tax treatment for principal supply will be applied for the whole transaction. No sir, they are not naturally bundled. Identify the supply in that bundle which attracts highest rate of tax. So the entire transaction will be treated as such supply which is attracting highest rate of tax. Sir, how do I decide whether they are naturally bundled or not? That depends upon facts and circumstances. It is based upon the situation. So please take a cautious call there, right? So that is what all about section 8, composite supply and mixed supply. Here there is a small clarification of CBIC that see, when servicing of cars is done, where both goods, that is the spare parts, and service, that labor is provided, and in that case, sir, they are shown separately in the invoice. There the CBIC clarified GST shall be charged separately. For this, who went for CBIC clarification, I seriously don't understand. So fine. So the goods and labor, the services and labor, whatever the spare parts involved, are separately shown in the invoice. Now you can tax them accordingly. So that is what section 8, right? And there is one more thing here regarding taxability of samples and gifts and buy one get one free offer. See, please understand, when it is a free sample and a gift given, obviously free sample and a gift given, that means that there is no consideration at all. If there is no consideration, we know it is not at all a supply. But certain cases, even though there is no consideration, we call it as supply. Which cases? Schedule 1 cases. So when there are free samples and gifts given, you should see whether that free samples and gifts given, are they falling within the scope of schedule 1. If they are falling within the scope of schedule 1, then it is called supply. Otherwise it is not a supply. Simple, because there is no consideration. Or the next case is, sir, buy one get one free offer. In buy one get one free offer, sir, what is the tax treatment here? Please understand, when you are getting buy one get one free offer, there are two possibilities. For example, I am buying one 5-star, getting another 5-star free. So here, what is the tax treatment? Tax treatment you need not worry at all. Why? Because you are giving 10 rupees. Actually, you should get 1 5-star. You are getting 2 5-stars. So how does it matter for your tax treatment? Only the column of quantity in the invoice will change. Instead of getting 1 chocolate, you are getting 2 chocolates. Tax treatment will remain same. No change in GST rate, nothing. The good is same. The service is same, correct? So if you are getting buy one get one free, the same product, no need to worry at all. But if you are getting buy one get one free, a different product, for example, when you are like buying a hair oil, buy a hair oil, get a face wash free. Even the companies knows that the Indian moms will apply the hair oil in such a way, definitely the child will be needing the face wash immediately. So what they will do, you buy one hair oil and get one face wash free. So like that they are offering. Or you buy a surf excel powder, you get a bucket free. Buy one get one free offer. In such cases, sir, what will happen? We should see whether they are naturally bundled or not. You might be thinking, sir, obviously these are not naturally bundled, it is a composite mixed supply. But you understand, for example, if I tell you buy my classes get books free, they are naturally bundled. So buy one get one free offer, if the goods are completely different, you should see again whether they are naturally bundled or not. If they are naturally bundled, then it is a composite supply. If they are not naturally bundled, it is a mixed supply. So now there are some other miscellaneous clarifications here. In this first one is regarding the printing activities. See, generally, for example, I have prepared the book and I'm going to the printer and giving him the content, the soft copy of the book for printing the book and giving to me. Now the printer is providing goods to me or services to me. He's printing, let us assume, some 1,000 books and giving to me. Is he giving me supply of goods or supply of service? Same way, when you go to get your pamphlets or leaflets or envelope covers, annual reports, brochures, all these things printed, sir, what is that they are doing? See, you are going to the printer mainly, predominantly for getting the printing services. So how do he print the content what you are giving? He has to print it on the air? No, he has to print it on some material, and that material is obviously becoming your brochure or a pamphlet or a leaflet or a book. So here predominantly why you are going to the printer is getting for printing services. So in such case, it is treated as supply of service. But now the another interesting thing is, for example, you are going to buy a tissue paper for your restaurant, tissue papers, or you are going to buy some envelope covers for your office. When you are going to buy the tissue papers or envelope covers, the seller is telling, sir, pay me 1 rupee extra for every tissue paper or for every envelope cover, pay me so much amount extra. I will also print your company logo or office logo, or on the envelope cover I'll print your from address, the office address, and give it to you. So here you are buying the tissue papers also, and also they are printing your logo there. You are buying the envelope covers also, they are printing your from address there. So in such cases, you are also getting goods, you are also getting printing services. But sir, here what is predominant thing? Here the predominant thing, you went to buy tissue papers, you went to buy envelope covers, you went to buy some office stationery. Incidentally, they are printing your office logo, etc., etc. All this. So in that case, it will be treated as supply of goods. So what is the predominant thing? Clear? So printing anytime when you are getting certain things printed on like books or pamphlets or brochures or envelopes or annual reports or leaflets or cartons, boxes, etc., where it is printed with a design, logo, name, address, or other contents. In such cases, is it goods or service? That depends upon actually what is the circumstance. Okay, so that way it can be supply of service also, supply of goods also. Now coming to other clarifications. Sir, whether bus body building, is it supply of goods or service? Then again, bus body building, whether it is supply of goods or services, it depends upon facts and circumstances. So it may be supply of goods, it may be supply of services based on various situations. Okay, next, retreading of tires. This also there can be supply of goods or supply of services. See, for example, retreading of tires means what? The retreading of tires means you are processing the old tire and making it into a new tire. For example, I am retreading the tires, you are bringing me your old tires, I am doing the retreading process and giving it to you. That is supply of service. Or I am going to every puncture shop in the market, buying the old tires, doing the retreading process, and now selling the retreaded tires. So this is supply of goods. So I procure old tires and do retreading and sell them now. Supply of goods. You bring your old tires and I do the retreading and then give it to you. Then it is supply of service. Simple one. Sir, what about food supply to the patients? Food supply to the patients, please understand, if at all it is an inpatient, that means the patient who is admitted in the hospital. For that patient, if you are supplying the food, it is nothing but part and parcel of your healthcare service. So it is treated as composite supply of healthcare service and not charged separately. But if the food is supplied to patients who are not admitted or their attendants or visitors. For example, when you are getting admitted in hospital, your friends will come to meet you in the hospital. Okay, maybe to see the nurse or you, that's a different story. But when they come there and they eat in the canteen or etc. in the hospital, all that, sir, that is not supplied to inpatients. So that will be obviously taxable. So that is what with respect to the fifth one. Sixth point already we have seen. So already discussed one. Buy one get one free or free samples and gifts, all that. So already discussed. Now seventh one, the very important one. So the seventh one is when you are going to theaters, movie theaters, you are buying the food and beverages. Some people will go to theater only for eating popcorn. That's a different story. So for such people, sir, we are selling the ticket also, we are selling the food and beverages also. What is the tax treatment? There the department has clarified. If the food and ticket are billed together, then it will be treated as composite supply. The predominant element is sale of ticket here. So the total transaction will be treated as sale of ticket and will be charged accordingly. No, they are billed separately. The ticket billing is separate and the food and beverages billing is separate. So ticket is obviously, you have understood that it is treated as supply of service of exhibiting the cinematographic films, and supply of this food and beverages will be treated as restaurant services. So food and ticket in theater charged together, sale of ticket, consider it that way, supply of service. Now food and beverages are charged separately, ticket is charged separately. So food and beverages, treat it like restaurant services and tax it accordingly. That is what the point. Fine. So next, point 8, taxability of shares held in a subsidiary company. There was a doubt here, sir. Holding shares in a subsidiary company, is it a supply? Holding shares in a subsidiary company, how it becomes supply? Mere holding of securities, does it become supply? No, you are providing something to your subsidiary company, goods or services, that will become supply. Mere holding of securities doesn't become supply. So that is what the concept here. Mere holding of shares in a subsidiary company doesn't become supply. So that is what the point. Now the next one, the important one, GST on warranty replacement of parts and repair services during the warranty period. What is this clarification all about? So now replacement of spare parts, etc., etc. I will take a small example here, and based on that let us understand this. Now see, for example, I have a car. Now for this car, let us assume this is car. Please excuse my artistic skills. Now sir, for this car, imagine, let us assume the silencer has some issues when I have purchased. So there are some issues with silencer. So what I am doing, I am going to the showroom. So that means I can say here it is nothing but dealer. Now what this dealer is doing, dealer is saying, Vishnu sir, this is in warranty period, we will do free replacement because this is in warranty period. Now what is the tax treatment for this? Sir, what is the tax treatment for this? Sir, there is no GST here because it is free. Because it is free, no GST for the free replacement of the spare part. And even though they are saying it free, you know, technically whatever the replacement period, etc., etc., all these things, they would have made a calculation and they have added that in the cost. So even though for the namesake it is free, sir, it is the cost of all these things they would have estimated and that would have been added in the cost of the car. So the GST losses, even though you are saying it free, it is technically not free. So no need of any reversal of ITC. No reversal of ITC also required. Okay. So this is the story of what I want to replace my silencer, car silencer, because it is in warranty period. No consideration they are charging. No consideration they are charging, and no reversal of ITC also involved. Am I clear with this? Now coming to the next step. Sir, here the showroom dealer is making the replacement here, correct? But what is the tax treatment for this? Because the showroom dealer, he will charge this to the manufacturer. He will charge this silencer to the manufacturer. That means how this showroom dealer is getting that silencer is what important, because to do this free replacement, all that stuff, that is the responsibility of the manufacturer. So on behalf of manufacturer, the showroom dealer is doing it. For the customer, from Vishnu's point of view, from my end, they are not charging any consideration from me. There is no GST. But here, sir, to do this replacement, the showroom dealer uses a silencer. uses the silencer. Now, who has to bear that? The manufacturer has to bear that. So what can be the various possibilities? Now please understand that generally the manufacturer is selling the spare parts, selling the spare parts to the dealer. Dealer is also selling the spare parts to the customers whenever they need, whenever they buy, apart from replacement activities actually. So whenever the customers are coming, that spare parts the dealer is selling. Now, sir, my car silencer dealer, the Honda showroom dealer is doing the replacement. So for that, first thing, what is happening now? He's already buying the spare parts from the manufacturer and using. In this replacement period, whose responsibility to replace this? Manufacturer responsibility. Who is doing it? The showroom dealer is doing it. When showroom dealer is doing, who should give silencer? The manufacturer should give. What is happening here now? Showroom dealer, the Honda car dealer is saying, sir, I have already a silencer I have purchased from you know spare parts, so that I am using. So for example now, so what can be the possibility now, sir? Manufacturer will sell the spare parts to the distributor. So what distributor will do? That distributor means here I am talking about the showroom dealer. Distributor sells the spare parts and raises the invoice to the manufacturer for spare parts. That means the dealer has purchased the silencer from the company, Honda company. What the Honda car dealer is doing, the showroom fellow, because he is using the silencer. See, he has purchased it to sell to customers, but he is using the silencer for replacement period, which Honda company should do. So what he is doing, whatever the stock he is having, he is using that silencer, and then he is raising invoice to Honda. Sir, this silencer I have used, you pay consideration for that and pay GST. So they will pay GST and close it, and of course the Honda company will take ITC. Or there is another option. What is another option? For example, the Honda company would have purchased 100 silencers from Honda company. The dealer would have purchased 100 silencers. So Honda company gave invoice for 100 silencers to the dealer. Now what dealer will say, sir, 100 silencers I have purchased, sir, but one silencer I have used for your purpose only, no, for your free replacement only, no. So I will not pay for 100 silencers. I will pay only for 99 silencers. So for this one silencer, he will ask the Honda company to raise a credit note. So what will happen? Honda company will raise a credit note on the Honda showroom dealer, and the dealer will reverse the ITC accordingly. Am I clear? So the distributor uses the spare parts and asks the manufacturer to raise the credit note. So the manufacturer will raise the credit note, that is the Honda company raises the credit note on the dealer, and this fellow will reverse the ITC, proportionate ITC. That is why the ITC comes down for the showroom fellow, the dealer. Clear? So these are the possibilities here. So manufacturer is selling the spare parts to the distributor. Distributor is using the spare parts which he has purchased. One option is, because he has already purchased, now it is like indirectly he is selling it to the manufacturer again. So he will raise a new invoice on the manufacturer, charge GST, manufacturer will take ITC. No, what is another option? Manufacturer already sold the goods to the spare parts to the distributor. Those spare parts he is using for free replacement, which is the responsibility of manufacturer again. So what he will do, he will ask the manufacturer, sir, reduce my invoice, because out of 100 silencers I have purchased, 1 silencer, 5 silencers, 10 silencers I have used for your free replacement. I will not pay money for that. Then the manufacturer will say, okay, no problem, I will raise credit note on you. So no need to worry. And as a recipient, the showroom fellow, the dealer's ITC will come down because he has taken a credit note from the manufacturer. That is the possibility. Now, sir, manufacturer is selling the spare parts to distributor. Distributor is using those spare parts. Fine. What if manufacturer is not selling any spare parts to the distributor? Manufacturer says, hey, any free replacement comes, you tell me, I will send the goods to you, you use it. So manufacturer is not selling the spare parts to distributor, but manufacturer is sending whenever the free replacement is there. Silencer you need, you just place an order like this, free replacement, one silencer came, I will send the silencer, you use it. Now please understand, manufacturer sends the goods first and distributor uses them. Where there is consideration here between manufacturer and distributor? So no GST, nothing, no GST implication. Or manufacturer already has sent some silencers and that is there with the showroom person, the distributor, and he is using them, and later on, sir, I have used already whatever you have given, so send some more, like that he may send a request. So then also the distributor first uses the goods and then manufacturer sends the goods. then also no GST implication. Both the cases, manufacturer is just sending the goods to the distributor to use them, and distributor is using them. There is no GST implication at all here, because no consideration has happened between manufacturer and distributor for giving this spare part. Okay, so that is what the whole concept here. Sir, the one more interesting, the further step of discussion here is, so as I was telling, the next interesting step here is nothing but, see, okay, replacement of spare parts, everything is done. See, first of all, we are discussing so long the spare part replaced here, the silencer. But for replacing the silencer, the distributor, that is the car showroom dealer, what he will do, he will use some services. He is providing services to me, that is the car owner. What they are doing, they are providing services of replacing the part. That means goods is involved, silencer example. Fixing the silencer is also involved. There are two things. We have spoken about the goods element. Now what is about the service element? Service, it is a free service to the customer. For customer it is free service, sir, but that means it is nothing charged to the customer. It is free for customer. But the car showroom dealer, the distributor, what he will do, he will raise invoice to the manufacturer, because manufacturer's responsibility is, when the free services are provided by these distributors or car showroom people, to make the payment to them. So this fellow car showroom dealer, what he will do, he will raise invoice on the car manufacturer, and manufacturer will make payment. So just like supply made to car manufacturer, there is supply of service and there is GST, and manufacturer will take ITC of it. Simple. So I repeat, replacement of goods, goods portion we have discussed, what is the tax treatment, and we have also discussed service portion, fixing that goods which has got damaged, all the stuff. So for that, customer will not get any tax implication, there is no GST, nothing, but the distributor will raise invoice on the manufacturer, so obviously that will be subjected to GST. That is another step. And one more next step or next thing here with respect to this clarification is, sir, hope it is clear till now. And the final thing here is, as I have explained here, this is regarding replacement service. So this is regarding servicing. Okay, the last point is regarding, in this particular clarification, in this particular thing, sir, whether GST would be payable on extended warranty to the customers. What do you mean by this extended warranty to the customers? You will be seeing, no, whenever you are purchasing a mobile, for example, there is a warranty for the display 1 year. They will say you pay something extra, 500 rupees extra, 2000 rupees extra, will give you 2 years extra warranty. So like that, the warranty period will get extended. You are buying a TV, sir, they will say for TV display so many years warranty, you pay 5000 extra, we will extend the warranty. So we are talking about the tax treatment about this extended warranty. So what is the tax treatment for this extended warranty? There are two possibilities. First of all, whether this extended warranty is given at the time of buying the product itself or later on. If that is given at the time of buying the product itself, then please understand, if the extended warranty is provided by the supplier himself, I am buying the mobile phone, let us assume in Sangeeta Mobiles, sir, Sangeeta Mobiles itself is giving me extended warranty, then it is nothing but, see, part and parcel of the main supply, so treated as composite supply and will be taxed accordingly. That means it will be treated as supply of mobile phone only and will be charged accordingly. It is not taxed separately, it is added to the entire supply and it is treated as composite supply. The principal supply is supply of mobile phone in the example. Entire transaction, even that extended warranty, will be treated as what? Supply of mobile phone, right? Next one, sir, if at all when I am buying this mobile phone in Sangeeta Mobiles, in the mobile store there is a person from Bajaj Finance, he is saying, sir, you pay 1000 rupees extra to us, we will cover extra warranty, extended warranty for this mobile phone. Whenever you are angry, throw the mobile phone onto the wall and let the display get broken, we will replace it, sir, don't worry. Like that, they are giving the extended warranty. So now extended warranty is provided by a different person altogether, then it is treated as a separate supply, taxed as a supply service. But please understand, this will be like when this is provided at the time of buying the goods. What if later on, after 6 months, I have understood my BP levels have gone up so much, so whenever I am just getting frustrated, I am throwing the mobile. So in such case, I want to go and take extended warranty for safety, because nowadays if you see, mobile will be like 1 lakh rupees, and if there is any display is broken, the display itself is costing 60-70,000. So that should not be the case. So we are going for the extended warranty. So when I'm going for extended warranty, now no matter extended warranty is given by the mobile shopkeeper or any other separate person, Both the cases. That means when you go for extended warranty after the supply is over, it will be treated as a separate supply and will be taxed accordingly as a supply of service. No matter, no matter whether it is provided by the supplier or by the third person, it does not matter. Okay, so that is what the point. So the next one, I don't know which intelligent fellow got this doubt actually. So the doubt is regarding, we'll be seeing there will be so many ventures which will be like selling the lands, etc., etc. People will be doing purchasing acres of land outskirts, and they will be leveling the land, and they will be selling the plots. Somebody got a doubt, sir. After leveling the land, we are selling that land in plots. Whether it is supply, whether it will attract GST. After leveling the land, land remains still land. It doesn't become a cricket bat, right? So it is still immovable and it is not a supply. But the process of leveling the land, the process of constructing the compound wall, the process of putting up the drainage lines or putting up the electricity infrastructures, all that stuff, these things will become supply. But sale of land after leveling the land, still it is a land only, it is immovable property, so it is not a supply. Next, a very small amendment regarding GST on preferential location charges. Please understand, what is this preferential location charges? See, they are talking about, sir, when you are paying a consideration for what? For getting any residential, commercial or industrial complex. See, for example, this is a residential complex. Sir, they said these side plots are east facing with good sunlight, good ventilation, all that stuff. These side flats are west facing, so you don't get like sunrise feeling, all that stuff. You can see only sunset, you cannot see sunrise. But if you want to see sunrise, you have to purchase these flats. Sir, here if you want these flats, you have to pay some 10 lakhs extra, let us assume. So preferential location charges. Sir, that way, for example, there is an industrial corridor, a particular place where it is close to highway. If you want to take that on lease, or if you want to buy that, whatever it is, sir, this concept is applicable equally for selling, leasing, all this stuff. So please understand, simple, when you are taking a property on rent, when you are buying a property, sir, all these cases, I repeat, I am extending this clarification and discussing overall what is the applicability of preferential location charges. Preferential location charges is nothing but whether you are buying a property or you are taking a property on rent, etc. They are charging something extra because it is a preferential location. In that case, please understand, even though they are charging something extra, it is part and parcel of a composite supply, either the sale of the property or the renting of the property. So it is part and parcel of that. So the department has clarified it is a part of composite supply. So whatever the tax treatment is there for principal supply, the same tax treatment will be applicable for the whole. Suppose if at all you are buying an apartment, a flat in this complex, sir, under construction building, you know, when you are buying it is supply of service, and they are charging preferential location charges from you, that also forms part of forms part of the composite supply. So main supply is construction services, so automatically what, this preferential location charges also will be taxed as construction services. So the same tax treatment as the main supply, that is construction services, will come into picture. So that is what this second amendment all about. And if you remember, the similar type of thing we have seen even in exemptions, preferential location charges for long term lease. So long term lease 30 years or more, the preferential location charges there, it is exempt, if you remember, because long term lease is exempt. Preferential location charges are also treated as part and parcel of long term lease only and treated as principal supply. Principal supply is exempt, so that was also exempt. So the same logic here they are applying for this also. If you see the next amendment, actually, the next amendment is regarding, there is an amendment in charging section 9 subsection 1. So what they are doing in section 9 subsection 1, you know, charging section, sir, in charging section they have given all goods or services except alcoholic liquor for human consumption is subjected to GST. That means alcoholic liquor for human consumption is not subjected to GST. There is no power to charge GST on alcoholic liquor for human consumption. Now what we are doing now, sir, you gave relaxation for alcoholic liquor from GST. That means, of course, states will charge different taxes on alcoholic liquor. But there is some raw material to manufacture alcoholic liquor, sir. That is undenatured extra neutral alcohol, or you call it as rectified spirit, whatever it is. It is just like a raw material to manufacture the alcohol. Sir, on alcohol there is no GST, but on the raw material there was GST. So what they did, so they have brought this raw material also inside this. So they said On raw material also there is no GST. On final output also there is no GST. So you can now happily consume liquor without GST is what full and full they are trying to tell there. So undenatured extra neutral alcohol or rectified spirit, these are now removed from the charging section, so you cannot levy GST on that also. So alcoholic liquor final product also no GST, the raw material used also no GST. Not every raw material, only this undenatured extra neutral alcohol. Look at the technical name, okay. This is also now removed from the charging section. So you all know that section 9 subsection 3 deals with reverse charge mechanism. Generally under GST, the liability to pay tax will be with the supplier. So the responsibility to pay tax to the government is generally is in the hands of the supplier. That is what we call as forward charge mechanism. But in certain cases, as we have discussed in our regular batches, you know, when it is easy to collect GST from the recipient, the burden has been shifted to the recipient, and those scenarios are called reverse charge mechanism. And not whenever you buy any goods or any service, reverse charge mechanism will come into picture. Only when you are purchasing the notified goods or notified services, then only reverse charge mechanism will come into picture. And earlier in your syllabus only notified services were there, but now they have added notified goods also. So let us see what are the notified goods and what are the notified services. Quickly we'll revise which are under reverse charge mechanism. First let us go with services. So the first service covered under reverse charge mechanism is goods transport agency services. Please understand, when you are going with reverse charge mechanism, we should keep in mind 3 points always. Number 1, who is the supplier, who is the recipient, what is the nature of supply. If you are clear with these 3 things, and automatically the answer will be correct, because any changes here and there in supplier, recipient and nature of supply, if the law is getting violated here, then automatically it will fall under forward charge. So whatever are given here in this notification, if all the conditions are satisfied, then it is reverse charge mechanism. Otherwise, if even one condition is not satisfied, it will go with forward charge. Coming to GTA, what are the conditions? Who should be the supplier? Supplier should be a goods transport agency, and they should be transporting the goods by road. And here the triggering point or the interesting point is the recipient. If it is provided, see, in this particular entry, I am dividing the customers of GTA fully into 3 categories. One is those customers, those recipients who are given in section 9 subsection 3, and next other recipients, and next finally those people who got registered under GST under section 51. Just to comply section 51 purpose, they have registered under GST. For those people, GT is providing their services. So now, as I told you already, if the recipients are specified under this particular notification, who are specified under this notification, if GT is providing the services to these people, the factory registered under Factories Act, society registered under Societies Act, cooperative under Cooperative Societies Act, any person registered under GST or a body corporate, partnership firm plus AOP, whether registered or not, association of persons, okay, and finally casual taxable person registered. These people, see, understand, everybody here are registered under some or the other law except this partnership firm and association of persons, whether registered or not. These people are the recipients, and GTA is providing services of transporting goods by road to them. Then who is having the liability to pay GST? The recipients are having the liability to pay GST. So these people are supposed to pay tax under RCM at 5%. Okay, here the interesting things are, see, now for example, Vishnu's GTA is providing services of transporting gold, the goods, to KGF factory. KGF factory is liable to pay GST on that under reverse charge mechanism, and being recipient there, KGF factory can take ITC of it. That means, understand, even though you buy something which is covered under RCM, yes, you have the responsibility to pay tax to the government, but you can still avail that amount as ITC, no need to worry. So you have a purchase, whether it is FCM or RCM, you can take ITC happily. The problem is not for you, the problem is for GTA. That is, sir, any person who is making RCM supplies, for him, sir, whatever the purchases he is making, he cannot take ITC because his sales are covered under reverse charge mechanism. So on his purchases, he cannot take ITC. That is very important point you should remember. So here, this logic is applicable for all the RCM transactions. If I am selling something under RCM, for selling that, if I buy something, I cannot take ITC. Okay, but my customer who is buying that goods or services from me under RCM, my customer can happily take ITC. That's not a problem here. So in this example also, as I was telling, sir, KGF gold mine factory buying the GTA services covered under RCM, that amount whatever they pay under GST they can take as ITC. But the problem is, to provide these services, if GTA purchases a lorry, GTA takes some premises on rent and pays GST on all those purchases, GTA cannot take ITC. Why? Because GTA is supplying something which is covered under RCM. Not only GTA, anybody for that matter supplying something covered under RCM, they cannot take ITC on their purchases. Am I clear? So this is the interesting point here. Now, sir, what do you mean by casual taxable person? As you know, casual taxable person is a person who doesn't have fixed place of business in the state from which he is making the supplies. Okay, so yes, coming to this GTA services, as I told, specified recipients. Yes, if specified recipients are receiving the supply, then it is taxable under RCM at 5% rate. But here one option is given to GTA, that is GTA wants to decide it under FCM, they can go with FCM. And if they are going with FCM, they should charge GST 12% from the customer and collect it from the recipient and pay it to the government. Here the interesting point is GTA now is providing FCM supplies, that means their sales are covered under FCM. So automatically whatever they are purchasing, they can take ITC on that. Are you clear? So GTA has two options. General option is not FCM for GTA, general option is RCM. If GTA wants to convert it into FCM, GTA has to take registration and has to raise invoice to the customer with 12% rate and has to charge 12% GST from the customer and pay it to the government. And now GTA is buying a lorry, GTA is taking any premises on rent, etc. Whatever the purchases are there, GTA can take ITC. That is the first set of customers about. To anybody else, if GTA is providing services, for example, individuals who are not registered under GST. For example, you are traveling, like you are in a hostel, vacating the hostel after your exams and going to your native, booking your luggage in the GTA, paying consideration. Is it coming under RCM? Leave about RCM, sir. It is exempt under GST, so there is no question of RCM or FCM. Not only that, sir, if GTA is providing services to the government departments, local authorities, government boards, authorities, which are covered under section 51, they are taking registration under GST not because they are doing some business, because they have to comply with section 51, they are taking registration under section 51. For those people, if GTA is providing services, then that is also exempt under GST. No RCM, no FCM. That means, see, I am dividing the entire set of customers of GTA into three categories. One is specified recipients, taxable under RCM first, then if GTA wants, they can convert into FCM. But option 1's exercise, that cannot be reversed in the entire financial year. So only financial year wise they have to exercise this option. This is number 1. Number 2, other than specified recipients, and number 3, section 51 entities. For our understanding, for our discussion, let us call them as section 51 entities who got registered just for the purpose of complying section 51. With those people, if GTA is providing services, then these two categories is exempt under GST. They are not coming under RCM or FCM because it is exempt under GST. So that is what GTA transaction all about. Here there is an example. You can just go with this example as well. The next entry is legal services. Legal services, individual advocate or firm of advocates or a senior advocate providing legal services to any business entity. That is very important. Business entity means, generally we understand, when we listen about the word business entity, we feel like, sir, only companies, corporates, big factories. Not only that, even the individual, the sole proprietors doing business are also called as business entities. So please be clear with that. So individual advocate, senior advocate or firm of advocates providing legal services to business entity located in India, no matter whether they are like partnership, from body, corporate, all that stuff, it should be a business entity. Business entity means even individuals doing business, sole proprietors are also business entity. Another important thing is legal services means just not only going and representing in the court, but also the legal advisory services in any branch of law is called legal services. So that is what the point. And here parallelly I will be teaching you exemption also with respect to legal services. If you remember, legal services are provided to these business entities, then it is taxable. But if they are provided to any person other than business entity, like let us assume, for example, Jolly LLB senior advocate is providing a divorce case related services to Mr. Imran Hashmi, an individual. He is not a business entity because marrying and giving divorce is not his business. So this is not taxable under GST at all. It is exempt. So no RCM, no FCM. If you recollect the exemptions, legal services provided to person other than business entity exempt under GST, to a business entity whose aggregate turnover not exceeding the threshold limit for registration. So we will be calling them as small business entities. What do you mean by small business entity? There is no such word called small business entity in the law. This is just for our understanding. Small business entity means the business entity whose aggregate turnover is not exceeding the threshold limits for registration under section 22. It means 10 lakh, 20 lakh, 40 lakhs, that much also they are not doing. For such business entities, if you provide legal services also exempt under GST, any other business entity, that means all other big business entities who are liable for registration as per section 22, crossing the threshold limits, all that stuff. So for them, if you provide, it is taxable under GST and taxable under reverse charge. That means those business entities only liable to pay GST. This is with respect to legal services. And the same point regarding arbitral tribunal also same logic. If you remember, exemptions with respect to arbitral tribunal and advocate services are same to same. Arbitral tribunal also equally, whatever we have discussed for legal services, equally applicable for arbitral tribunal services as well. So they are providing services to business entity, small business entity exempt, other than business entity exempt. For other business entities like whose aggregate turnover exceeding threshold limit, taxable under reverse charge mechanism. Next amendment, if you see, regarding sponsorship services in RCM. RCM, you know, sponsorship services, any person providing sponsorship services to any person who is a body corporate or a partnership firm, it is coming under RCM. That means supplier can be any person, recipient should be body corporate or a partnership. Now they have amended the condition in such a way, supplier should be any person other than a body corporate. That means if the supplier is body corporate, automatically FCM. Okay, I'll just show you a small example here, small notes. Look at this. You know, supplier is a body corporate, recipient is a body corporate or a partnership firm. Then what is it, RCM or FCM? You tell me. You just comment the answers in the chat box here before me discussing the answers. Just pause the video and do it. Pause the video and do it. Right. So you know, sir, supplier is body corporate. Now in this both cases, automatically FCM, sir. No matter what, who is the recipient. Straight away, because other than body corporate. So straight away what? FCM. Next, if you see, supplier is non-body corporate, recipient is body corporate or partnership firm. So all the conditions are satisfied. You know the conditions are what? Supplier should be non-body corporate, recipient should be body corporate or a partnership firm. So then only RCM. Next case, if you see, supplier is non-body corporate, condition is satisfied, but recipient is others, not a body corporate, not a partnership firm, then automatically that is FCM. That means to bring RCM into picture for sponsorship services, understand supplier should be definitely a body corporate, recipient should be supplier should be any person other than a body corporate. Supplier should be any person other than a body corporate, recipient should be body corporate or a partnership firm. So only in this case RCM will come into picture. Remaining all cases it is FCM. And one more small point is, you know, sponsorship services means the sponsor is the recipient, not the supplier. The person who is giving sponsor is the recipient. We are going to advertise his name, advertise his brand. That is what sponsorship service is all about. So please be careful with that. Okay, that is the another entry. So RCM amendment. The next one with respect to government services. See, government services, I can teach this RCM only when I'm linking these provisions with exemptions. So please be careful, a very important discussion here. First of all, understand with respect to government services, I'm treating the government services like this. See, we have a comprehensive discussion here. So in this comprehensive discussion, first let us understand what is taxable, what is exempt, and then if it is exempt, no need to worry about RCM or FCM. But if it is taxable, then we should check whether RCM or FCM. So government services, some services are exempt, some services taxable under forward charge, some services taxable under reverse charge. So let us understand first the taxability of government services. Coming to taxability of government services, see, government services, now let us divide the customers of government services into two categories. So the customers of government are divided into two categories. Number one is general public, the other is business entities. See, first of all, coming to government services, government means here we are talking about central government, state government, union territory, local authority. These people providing services to general public. See, for general public, whatever the services they provide, they are exempt under GST, except three things. Always remember these three things: A, B, C. That is based on exemptions entry 6 A, B, C. I am not talking about RCM entry. I am talking about exemption entry 6 A, B, C. 6A is postal department and railway services. 6B is services in relation to aircraft or vessel. 6C is transportation of goods or passengers. Sir, these three services. This is 6A. This is 6B. 6B of I am talking about exemption entries. Again, I am not talking about RCM entry. In exemption entry number 6A, B, C. Always you should remember what is 6A, B, C, because in further other entries or notifications you will be seeing this word. So now coming to the point. except these services, these three, whatever are provided by government to general public are exempt under GST. Simple, remember this. Now on these three services, these three are taxable. These three are taxable under forward charge. Always remember these three services always taxable, always forward charge. Postal Department, Indian Railways. Next, transport services in relation to aircraft or vessel. Next, transportation of goods and passengers. These three services taxable under forward charge even if it is provided to general public. Any other services to general public, exempt. No RCM, no FCM. But sir, if you come to business entity, when you come for business entities, any service provided to business entity, 6 ABC is for taxable for general public itself, then will we give any exemption to business entity? For them also it is taxable only. 6 ABC it is taxable. Apart from 6 ABC, any other services also taxable. But the only relaxation here is, sir, if the business entity, what we are doing now, if the business entity is a small business entity, that means whose aggregate turnover is not exceeding the threshold limit 10, 20, 40 lakhs. In such cases, for such business entities, if government is providing services other than ABC, other services will be exempt under GST. No RCM, no FCM. Are you understanding the point? But 6 ABC, the Postal Department, Indian Railways, this transportation of goods and passengers, this services in relation to aircraft or vessel, all these are taxable even if it is a small business entity. Apart from that, any other service provided to small business entity, exempt under GST, no need to worry about RCM or FCM. But for other big business entity like Jio or Reliance, Wipro, Infosys or anybody, sir, we are doing a turnover greater than the threshold limits. For us, if any service provided by government, that is taxable under RCM. But for business entities like other than small business entities or big business entities, for them, if the government is providing services for which they are charging consideration less than or equal to 5,000 other than ABC, that is exempt under GST. Always remember, whatever we discuss here, for ABC, no relaxation whatsoever. Right away, taxable under forward charge. General public, ABC, taxable. Business entity, small business entity, ABC, taxable. Big business entity, ABC, taxable. Greater than 5,000, taxable. Less than 5,000, taxable. Equal to 5,000, taxable. ABC doesn't enjoy any relaxation here. Okay. So, for general public, ABC, taxable. Forward charge. Other services, exempt. For small business entities, ABC, taxable. Forward charge. Other services, fully exempt. No need of RCM, FCM. For other business entities, that means like whose aggregate turnover is exceeding 10, 20, 40 lakhs, ABC, taxable, forward charge, no matter what is the consideration. But other services, if the consideration is less than or equal to 5,000, enjoy the exemption. If it is greater than 5,000, taxable under reverse charge. That is what the whole concept. Clear? Here, in this entire discussion, there is one more special guest for us. That special guest is nothing but renting of immovable property. Combined reading of exemption entry number 5 and 5A. Entry number 5 and 5A. So combined reading of entry number 5 and 5A. See here, renting of immovable property. Sir, renting of immovable property if we are provided by the government, then understand, if the recipient is registered fellow, then RCM. If the recipient is unregistered, then FCM. That means when I am renting the immovable property, central government, state government, union territory, all these people, sir, here for reverse charge mechanism purpose, we are also adding this reverse charge mechanism notification here. It is also extended or applicable to even the parliament, assembly, courts and tribunals. So these people renting the immovable properties, sir, to a recipient who is registered under GST, then recipient will pay GST under reverse charge mechanism. But if the recipient is unregistered, under forward charge mechanism, government only has to pay GST to the department. Are you clear? Recipient is registered now, RCM. Not registered now, FCM. But this whatever renting of immovable property related provision is not applicable for Indian Railways. That means what is the bottom line of the story? Indian Railways renting the immovable property. It is always forward charge. The reverse charge will not come into picture. So many points we have discussed. Please understand, for everything we have a notes properly and there is an example also properly here, all that stuff. So please make sure you are just going through the notes, writing it properly and taking the examples. Clear? Let me finally summarize again. Government services to general public, ABC, taxable, forward charge. Other services, exempt. Okay. For business entities, if it is a small business entity, that means, as we have discussed, aggregate turnover not exceeding even the threshold limits. ABC, taxable, forward charge. Other services, exempt. For any other business entities, ABC, taxable, forward charge. Other services, if consideration is less than or equal to 5,000, exempt. Greater than 5,000, fully taxable. Clear? And one special guest is there, renting of immovable property. What is that renting of immovable property? If the recipient is registered, RCM. Recipient is unregistered, FCM. But if it is provided by Indian Railways, recipient is registered or unregistered, both the cases it is forward charge. That is what the summary of entry 5 and 5A in RCM. And for this purpose, we have discussed exemptions entry number 6 to the extent required. Mostly everything we have discussed. Okay. The next amendment is nothing but a clarification, my dear friends. The clarification is regarding whether Delhi Development Authority is treated as a local authority. So, why this doubt has come into picture? Now, please understand, in RCM we have seen, sir, any local authority providing services to a business entity are taxable under RCM. Okay, if at all it is a taxable one, it is taxable under reverse charge basis. Now, sir, Delhi Development Authority, is it a local authority? So that the services provided by Delhi Development Authority to business entities, whether it comes under RCM, was the doubt. Then the department has clarified, sir, local authority definition as per section 269, it is not meeting the requirement. So Delhi Development Authority, DDA, cannot be called as a local authority, sir. Hence, the services provided by DDA are not covered under RCM. That's all. Only lengthy points, that's all. But apart from that, concept is very simple. Delhi Development Authority is not a local authority. Services provided by them to business entities are not subjected to RCM. That means, hence what it is, FCM only. So that is what the point. Okay, this is the clarification. The next entry is with respect to entry 5AA. So entry 5AA is with respect to renting the residential property. See, renting the residential property for residential purpose, it is exempt under GST. But people are taking residential property on rent and using it for commercial purpose. So in such cases, that is taxable. So in such cases, if the recipient is registered, then the renting of that residential property for commercial purpose will become taxable under RCM. If the recipient is unregistered, then it is taxable under FCM. So simple, residential property for residential purpose exempt under GST, but residential property for commercial purpose, business purpose, taxable. Recipient is registered now, the tenant, then it is RCM. If not registered, then it is FCM. That is what the point. Okay, so this is entry 5AA. Next, coming to entry 5AB. 5AB, I am here connecting it with 5A also. 5AB is all about 5AA. We have seen renting of residential property, but here 5AB is all about renting the commercial property. Renting the commercial property is taxable, but here through entry 5AB, which they have implemented with an intention to make sure when the commercial properties are being rented out, if the recipient is registered, let the recipient pay GST under RCM. When supplier is unregistered, here the important criteria is supplier should be unregistered, recipient should be registered, and renting the commercial property comes under RCM. So I repeat, if supplier is unregistered and recipient is registered, then only RCM. In any other case, it will go with FCM. That means supplier is also registered, na FCM. Supplier is registered, recipient is unregistered, na FCM. Any other case. The main thing to trigger RCM here is the supplier should be unregistered, recipient should be registered. That is the important factor. Okay. Now, when you compare this with entry 5A, same thing we have seen with renting of immovable property by government also. Renting of immovable property by government, if the recipient is registered, RCM always, recipient is unregistered, na FCM. But in this, anybody other than government, for example, renting any commercial buildings, all that stuff, recipient is registered and the supplier who is giving the premises on rent, the owner is unregistered. Owner is unregistered, recipient is registered, commercial property, then only RCM. Any other case, it is FCM. So that is the new entry number 5AB. If you see the next one, again another amendment in RCM entry only with respect to renting of commercial properties. Okay, sir, with respect to renting of commercial property, renting of commercial property is taxable only. But if the supplier is unregistered person, recipient is registered person, other than who has opted for composition scheme. Earlier, this other than who has opted for composition scheme was not there. Now, through amendment, they have added this. So what is the impact of this if you ask me? I will show you again here. See, renting of commercial property. Supplier should be unregistered person. Recipient should be registered person not opting composition scheme. Then only RCM. Remaining all cases FCM. So you just pause the video and see what is this and comment the answers in the video. Like give me in the comment box. Pause the video and you try. Okay, so here first case is satisfying the condition. Supplier is unregistered person, recipient is registered person. So this is RCM. But remaining cases, if you see, supplier is unregistered person, but recipient has opted for CS, means composition scheme. That means FCM only will come. Remaining all cases, FCM, FCM. Correct. Registered person straight away FCM. So if you see, in these two cases, second case and third case, you will get a doubt. Sir, if supplier is unregistered person, you are saying FCM, who will pay GST? Nobody will pay GST. Okay. That means it is taxable, but there is no person who is there to collect that and give to the government. Okay, it is just like drinking tea is taxable, but if you are drinking tea in a hi-fi restaurant, but if you are drinking tea in a roadside restaurant, roadside tea stall, sir, it is taxable, but there is no person to collect GST and give to the department. So the second case and third case is like drinking tea in a roadside tea stall. Okay, first case, of course, roadside tea stall only, but a registered person is going and drinking, so RCM. So fourth case is like drinking tea in a Taj hotel. Okay, so that is what the point. Hope it is clear for you. Very simple amendment. Please be very careful. Good chances of being tested as an amendment or a, like adjustment in the problem or a separate case study based question also. The next one, services provided by director of a company coming under reverse charge mechanism. So the recipient, that is the body corporate, is liable to pay GST under RCM. Here the important point is that director should not be employee of the company. If the director is employee of the company, already it is covered under schedule 3, so there is no GST at all. So if the director is not an employee, then automatically his services are covered under reverse charge mechanism. It is a supply taxable and they are covered under reverse charge mechanism. Sir, how do I identify whether the director is an employee or not? Based upon the TDS what the company is deducting from his remuneration. TDS under section 192, then he is an employee, no GST at all, no RCM, no FCM. If the TDS is under section 194J, then it is supply and it is subjected to RCM. But here the interesting thing is, please understand that only when the services provided by him in the capacity of director, for that he is getting remuneration, then only this RCM comes into picture. Any other services he is providing in his personal capacity to the company, then we should see that independently. We should not bring that here. So I am a director of a company. Whatever the services I give to the company in the capacity of a director, then only RCM will come into picture. Sir, whatever I am doing in my independent capacity, individual capacity separately, not as the director of the company, providing some goods or some services to the company, then we should assess that case independently. We should not bring that here. So this is another important point. And one more interesting thing here is, when we talk about director, we understand what are the possibilities with respect to director services. The director services, director may be treated as an employee. How do we understand that? TDS under section 192, so neither SOG nor SOS, no GST implication at all. But if director is not treated as an employee, section 194J, in such cases, if he is a director of a body established by central government, state government or local authority, as we have seen in schedule 3, that again neither supply of good nor supply of service, no GST, no RCM, no FCM. In any other case, then only RCM comes into picture. Hope it is clear for you. For example, you are an independent director of BSNL company, no GST, no RCM, no FCM. But if you are an independent director of a TCS company, then it is RCM. Clear? So that is what with respect to director services, which you should be careful about. Okay. Next, services provided by insurance agent to insurance company. The insurance company is liable to pay GST. The services provided by recovery agent to a banking company, financial institutions and NBFCs. The banking company, financial institutions and NBFCs are liable to pay GST. The same way, a music composer or a photographer or artist providing their services. What is the service they are providing? Now, please understand, they are allowing somebody to use their copyright, which they got registered under section 13(1)(a) of Original Copyright Act 1957. So the point is, somebody is allowing, this music composer, photographer or artist is allowing somebody to use their copyright for which they are getting the royalty. On that, who is liable to pay GST? That particular music company or producer is liable to pay GST. Okay, so I repeat, the important point here is allowing somebody to use the copyright. That is what the point. And the same logic applies to author also in entry 9A. So author is allowing somebody to use his copyright on the book. For example, I wrote a book, for example, how to pass CA in 30 days, and I am transferring this right to publish to the boys publishers, a publishing company. Who is liable to pay GST on the royalty? The boys publishers. The publishing house is liable to pay GST on that under RCM. The only difference here we are going to see is, just like in GTA, here also for author we are giving an option. What is the option? Na? If the author wants to make this under FCM, he can make it under FCM. Generally, the author allowing somebody to use his copyright, that is the publishing house. Obviously publishing house is liable to pay GST, but if the author wants to make it under FCM, he can make it under FCM. So he can take GST registration and collect GST and pay GST to the department under forward charge mechanism. But once the option is exercised, it will be valid for the entire financial year. So that is what the concept. For music composer, photographer or artist, that FCM option is not there. Only for author that FCM option is available. Next, the services provided by the members of overseeing committee appointed by RBI. The RBI is liable to pay GST. Next, individual direct selling agents. What do you mean by individual direct selling agents? Who are selling the products of the banks, like loans, deposits, etc., for which they are providing their services to banking companies and NBFCs, and they are paying commission to that individual direct selling agents. Here please understand, direct selling agent license you can get as an individual or a partnership firm or a body corporate, whatever it is. But here only when in the supplier the direct selling agent is an individual, then only RCM provisions will come into picture. Otherwise RCM provisions will not come into picture for partnership firm or a body corporate kind of direct selling agents. Hope it is clear for you. Next, the business facilitator and business correspondent. See, business facilitator and business correspondent related to banking sector. Just remember the technical words. Let us not worry about their in-depth meaning. Business facilitator providing services to a banking company. Banking company is liable to pay GST. But business correspondent providing services to banking company, it is not covered under reverse charge mechanism. It is under forward charge. So then what is covered under reverse charge? What is covered under reverse charge? Now, agent of business correspondent to business correspondent is covered under reverse charge. Now see, for example, here what happens is, the business facilitator providing services to bank, that is covered under RCM. And one more thing, agent of business correspondent to business correspondent is covered under RCM. But sir, if agent of business facilitator is providing services to business facilitator or business correspondent is providing services to bank, both these things are covered under FCM only. So in RCM only these entries are covered. Okay, for your clarity I have discussed these things also here in this particular diagram. Hope it is clear for you. So I repeat, services provided by business facilitator to bank RCM, agent of business facilitator to business facilitator FCM. Same way, business correspondent to bank FCM, agent of business correspondent to business correspondent RCM. So that is what entry number 12 and 13. So the next one is security services. Security services provided by any person other than a body corporate. That is important. That means non-body corporate is providing security services. Security services means supplying the security personnel to whom any person registered under GST, individual, HUF, partnership from body corporate or not, all that stuff irrelevant. For us, it is person registered under GST who is not opting composition scheme. That's all. Then it is RCM. So now, if the recipient is unregistered fellow, FCM. Sir, if the recipient is registered, RCM. If the recipient is registered but under composition scheme, FCM. Sir, if the recipient is registered but registered for the purpose of section 51, that is also FCM. So please understand, RCM is not applicable when if you are providing services to a registered person, if he is a composition dealer, or if you are providing services, the security services, supplying the manpower, sir, to a recipient who is registered under composition scheme, or to a recipient who is registered just for the purpose of complying section 51 provisions. You know this, government department, local authorities, all that. In that case also it is FCM. For this purpose I gave an example number 41 or whatever the number may be changing here and there, but just don't worry about the numbering. So this is what the example, you can just go through this. So that is what the concept of supply of security services. The next one, the interesting entry, renting of motor vehicle to a body corporate by any person other than a body corporate along with the cost of fuel included in that. So renting of motor vehicle with the cost of fuel by any person other than body corporate to a body corporate coming under RCM. Here the interesting part is, see, generally when we are providing RCM supplies, we cannot take ITC. But in this case, these people can take ITC even though they are providing supply covered under RCM at 5%. but that ITC is limited. What is that limited ITC? Na? They can take ITC only of the same line of business. That means I am renting a motor vehicle to a body corporate. I am non-body corporate. I am renting a motor vehicle to a non-body to a body corporate, and that is covered under RCM. So now recipient is liable to pay GST. The body corporate is liable to pay GST at 5%. For me, generally ITC will not come, but in this case, I will get ITC on only one purchase. That is same line of business. What do you mean by same line of business? Sir, when I receive another motor vehicle on rent, then I can take ITC on that, whatever the GST I pay to the supplier. Now see, for example, see, Mr. Vin Diesel is renting a motor vehicle to me. So I am Optimus Prime, Mr. Optimus Prime. So not a body corporate. Now Vin Diesel is renting the motor vehicle to me and he will charge GST. The same thing what I am doing now, I am renting that motor vehicle to Transformers Private Limited, a body corporate, with cost of the fuel included. So this is coming under RCM. So this is coming under RCM at 5%, and sir, I can take ITC. Optimus Prime can take ITC on this particular same line of business. That means generally when I am supplying RCM supplies, I cannot take ITC. I cannot take ITC, but I can take ITC on same line of business. If I take a motor vehicle on rent, I can take ITC. Any other purchase, I cannot take ITC. This is number one. Number two, sir, if I don't want to go with RCM, I can go with FCM by charging 12% in the invoice. So I can make it as FCM if I want at 12%. So I repeat, any non-body corporate to a body corporate renting of motor vehicle with cost of the fuel included, sir, that will be subjected to RCM. Okay, but if they want to shift it to FCM, they can shift it to FCM. RCM means 5% with limited ITC. What is that limited ITC? Only on the same line of business you can take ITC, or you can go with FCM, complete 12% with full ITC. Enjoy. Sir, if for example I am non-body corporate and renting the motor vehicle to a non-body corporate, then you are straight away violating the condition. No RCM, it is straight away FCM. So that is what the entry of renting the motor vehicle with cost of the fuel included. Now there is a clarification here. People got a doubt that, sir, whether RCM is applicable on services of renting the motor vehicle or services of transporting the passenger. First, understand the basic difference between renting the motor vehicle and transporting the passenger. Renting the motor vehicle means the motor vehicle will be completely at the disposal of the recipient. For example, I am taking a car on rent to travel from Chennai to Bangalore. I took the car on rent and I decided, let me go from Chennai to Pondicherry, not Bangalore. Or I decided, let me just take a holiday in the weekend, so let me not drive anywhere. So it is completely my wish. So the vehicle is under my disposal. That is renting of vehicle. Transporting the passenger means, now for example, I am booking a ticket in a train or booking a ticket in a bus. Sir, they are saying Chennai to Bangalore, 1000 rupees. I am paying that and I am boarding. Whether the vehicle is under my control, or I am just booking a Ola cab or a Uber cab, they will drop me from one location to another location. Correct. Sir, will I ask the driver, you get down, I will drive the car? No, the car will not be, the vehicle will not be under our disposal. So renting of the vehicle means vehicle will be at your disposal. Transportation of passenger means, sir, it will be based on predetermined route and predetermined schedule. The vehicle will not be at your disposal. Here we are talking about reverse charge mechanism in a case where it is all about renting the vehicle with the cost of the fuel is included, and the supplier should be non-body corporate, recipient should be body corporate. Clear? So that is what the clarification here. The last entry under CGST Act with respect to services, the lending of security services. When the securities are lended under security lending scheme, the borrower who is taking the securities, borrowing the securities, that person is liable to pay GST on that under reverse charge mechanism. So with this, we are done with all the RCM services covered under CGST Act. So students, in this video, we are going to see section 9 subsection 5 of CGST Act 2017, where e-commerce operator is liable to pay GST. When e-commerce operator is liable to pay GST, please understand, through the e-commerce operator, that is through the e-commerce operator, if notified services, not goods, notified services are supplied, then e-commerce operator is liable to pay GST, not the supplier. Okay, so now we have seen, sir, generally supplier is liable to pay GST. Then we have shifted to reverse charge mechanism where recipient is liable to pay GST. Now we are seeing not the supplier, not the recipient, the intermediary, the e-commerce operator is liable to pay GST. When? In only 4 cases, only 4 notified services. So just to remember the notified services, you just remember this code THAR, THAR. Sir, transportation of passengers, housekeeping, accommodation and restaurant services. 4 points has 4 exceptions. So if I am transporting passengers, sir, using radio taxi, If I'm transporting passengers using radio taxi, motor cab, maxi cab, motorcycle, omnibus. Omnibus alone we have the exception, that is why I marked it there, or other motor vehicle. Sir, if it is supplied through e-commerce operator is liable to pay GST, not the supplier, not the recipient. Example, Ola, Uber, Rapid, all that stuff. But what is the exception? Exception is if it is by omnibus. Omnibus is the vehicle being used and supplier is a company through e-commerce operator, but still company is liable to pay GST, not the e-commerce operator. I repeat, if the transportation of passengers through e-commerce operator, yes, you are using, but it is omnibus you are using, whatever it is. And next one is, sir, it is the supplier is company. In that case, sir, who is liable to pay GST? The company is liable to pay GST, not the e-commerce operator. You know, for example, Vivarth Travels Private Limited. Person by name Mr. Sanchar is booking the ticket through GoIbibo Private Limited. On that, who is liable to pay GST? In omnibus, the supplier is company is liable to pay GST. But same Mr. Sanchar is booking ticket from a travels company called Transformers Travels, which is a sole proprietor, and booking the ticket through GoIbibo. Who is liable to pay GST here? GoIbibo is liable to pay GST. Okay. Next, H for housekeeping. For housekeeping services and accommodation services, if you see, housekeeping services and accommodation services, they enjoy the same exception. That means generally if you are providing housekeeping services or accommodation services, that the e-commerce operator, housekeeping for example urban company, accommodation services like Make My Trip, Agoda, Oyo, whatever it is, sir, these e-commerce operators are liable to pay GST. But in both the cases, what is the common point? What is the common exception is if the supplier, if the supplier who is supplying this housekeeping or accommodation services is a person who is liable to get registration under section 22 subsection 1, that means whose aggregate turnover is exceeding the threshold limit. Simple. So if the supplier's aggregate turnover is exceeding the threshold limit, then supplier is only liable to pay GST. For example, in GoIbibo, I am booking a room in a small roadside small hotel, okay, who is not even liable for registration. That much turnover they are not doing, then GoIbibo is liable to pay. No, I am booking the room in Taj Hotels using GoIbibo app. Taj Hotel is like doing such a great turnover, right? So Taj hotels are liable for registration under section 22 subsection 1. So Taj hotel is liable to pay GST. Hope you are able to understand. Housekeeping and accommodation services. Sir, the common point is what? The exception is if the supplier is a small fellow not even liable for registration, then e-commerce operator is liable to pay GST. No sir, supplier is liable for registration under section 22. That means they are doing that great turnover. Then in such case, that supplier, that is for example Taj hotels, you are booking room in GoIbibo, Taj hotels is liable to pay GST. Or you are booking an electrician through urban company for some electrical work in your house. In such case, sir, if the electrician is already doing a great turnover yearly, some 30 lakhs, 40 lakhs kind of thing, he is already liable for registration under section 22 subsection 1, then he is liable to pay GST, not the urban company. Okay, so that way, please remember these exceptions. So these are the 3 points. Next, last one, restaurant services. If you go to restaurant services, the restaurant services generally what e-commerce operator is liable to pay GST. Best example, Swiggy, Zomato. Sir, let us assume there is a standalone restaurant, 7 floors, you imagine. From that you are placing an order through Swiggy. Swiggy is liable to pay GST. Sir, it is a 7-floor standalone building restaurant. Still it doesn't matter. But if the restaurant is located inside a hotel, please understand, restaurant is different, hotel is different. Hotel you sleep, restaurant you eat. Okay, so restaurant is located inside a hotel. Which hotel? The hotel which is like costly hotel where your declared tariff for the room per day itself is greater than or equal to 7,500. In such type of rooms, if you are in such type of hotels, sorry, you are having the restaurant. From that restaurant I am ordering through Swiggy, 1 plate idli, 1 plate dosa. Restaurant is liable to pay GST, not the e-commerce operator, not the Swiggy, Zomato. Clear? So that is what the concept. I repeat, if you are, for example, sir, ordering a masala dosa from Sarvana Bhavan restaurant, so Swiggy is liable to pay GST. Sir, you are going to restaurant and eating in Sarvana Bhavan, sir, Sarvana Bhavan is liable to pay GST. Sir, you are ordering masala dosa from Sarvana Bhavan own website or own mobile app, then also Sarvana Bhavan is liable to pay GST. But if you are ordering through Swiggy from a restaurant which is located inside ITC Grand Chola Hotel, where the declared tariff is greater than or equal to 7,500, then the restaurant itself is liable to pay GST, not Swiggy, Zomato. Hope it is clear for you. So with this we are like, what are the services covered under 9 subsection 5? We are clear. But here the problem is, sir, if the e-commerce operator is not having any physical presence in India, then who is liable to pay GST? If the e-commerce operator doesn't have physical presence in India, then any person representing such e-commerce operator for any purpose in India is liable to pay GST. because to do this business as an e-commerce operator, you need not have any physical presence in India. So if you don't have any physical presence in India, there might be some representatives for you in India for any purpose. Those people will be liable to pay GST. Sir, I don't have even any representative also in India, sir, representing me. Then appoint a person in India just for the purpose of paying tax. So that is what the concept. So with this, we are done with section 9, subsection 5. Hello students, this is your Mr. GST, CA Vishnuvardhan, and in this video quickly we are going to revise composition scheme concept. As you all know, composition scheme benefit is available in section 10 in two different subsections. Subsection 1 read along with subsection 2 and next subsection 2a. Subsection 10 section 10 subsection 1 and 2 combined reading, we can understand this option is available for people dealing with goods and restaurant service providers. That means you may be a manufacturer, you may be a trader, or you may be a restaurant service provider. You can enjoy section 10 subsection 1 and subsection 2. So in composition scheme, when you opt for composition scheme, you're opting for composition scheme whether you're eligible or not is purely depending on your aggregate turnover in the preceding financial year. Under section 10 subsection 1, if your aggregate turnover in the preceding financial year does not exceed 150 lakhs, and if it is special category states, it is 75 lakhs. For us to remember special category states, we have a memory code here, stunning ma'am. So stunning ma'am is the code for remembering 75 lakh limit states. So Sikkim, Tripura, Uttarakhand, Nagaland, Manipur, Arunachal Pradesh, Mizoram, Meghalaya. Just remember stunning ma'am here. In stunning ma'am, A for Arunachal Pradesh, not Assam. Remember stunning ma'am because she is watching the sunrise in Arunachal Pradesh. Okay, so stunning ma'am, remember that way. In that cases 75 lakhs, all other cases 150 lakhs. Coming back to the concept, sir, section 10 subsection 1 is available for people dealing with goods. That means you may be a manufacturer or you may be a trader, and also if you are a restaurant service provider, for you also this option is available. But this option is available only based upon your aggregate turnover in the preceding financial year. If your aggregate turnover in the preceding financial year is exceeding 150 lakhs, then you are not eligible. If it is not exceeding, that means less than or equal to 150 lakhs, then you are eligible for composition scheme current financial year. I repeat, whether you are eligible for composition scheme or not in this current financial year, we will check with the aggregate turnover limit of the preceding financial year. So 150 lakhs in normal states and 75 lakhs in special category states, then you are eligible for composition scheme. So if you are eligible for composition scheme, sir, what is the advantage? The advantage is you can pay tax at composition rates, not normal rates. That means if you are selling furniture 12% GST rate, you can pay tax at composition rate 1% instead of paying 12%. So that is the benefit. So if you are a composition dealer, you can pay tax at composition rates. What is that rate now? Manufacturer means he will pay 1% of the turnover. Trader, he will pay 1% of the taxable turnover. Restaurant service provider will pay 5% on the turnover. So here if you see properly, the trader alone is having one relaxation, that is he will pay 1% tax on the taxable turnover. Remaining people will pay tax on total turnover, no matter whether it is taxable or exempt. Okay, so here when I say 1%, it is half percent CGST, half percent SGST. When I say 5%, 2.5% plus 2.5%. Okay, so if you are a special category state, if you are in special category state, then the threshold limit is 75 lakhs, not 150 lakhs. Okay, so that is the concept. Right now, sir, for other service providers or who are not eligible for section 10 subsection 1 benefit, they can go with section 10 subsection 2a. Section 10 subsection 2a, ditto same, only thing threshold limit changes, it is 50 lakhs no matter in which state you are, and tax rate is 6%, not 1% or 5%, it is 6%, 3% plus 3%. I repeat, who are not eligible for section 10 subsection 1 can go for section 10 subsection 2a, but technically speaking subsection 2a will be mainly for the people who are going through services. People dealing with goods can go with this. Okay, but here in section 10 subsection 1, another point what we have to understand is, if you are in section 10 subsection 1, you should not provide any services other than restaurant services, but the law is giving you permission to provide marginal services. That means even though you are under section 10 subsection 1, other than restaurant services, you can provide 10% of the turnover in the state in the preceding financial year, or 5 lakhs, whichever is high, that much amount of turnover. That means, see, for example, in the preceding financial year 22-23, you have 3 states, 3 branches, 3 registrations: Andhra Pradesh, Tamil Nadu, Karnataka. Each state you are doing 70 lakhs, 60 lakh, 10 lakhs. That means 140 lakhs aggregate turnover. Aggregate turnover, pan India basis we have to take the aggregate turnover, and aggregate turnover meaning is what? Nothing but, sir, it includes everything: taxable supplies, exempt supplies, even interstate supplies between people having the same PAN, that is distinct persons. Okay, from Andhra to Tamil Nadu, if you do any sale here, that means supply as per schedule 1, that is also added in aggregate turnover, but only when it is interstate. Okay, so fine, coming to the point, sir, aggregate turnover, when you see, sir, 140 lakhs in preceding financial year 22-23, I am eligible for composition scheme in 23-24. So in 23-24, in Andhra Pradesh I can do, one second, in Andhra Pradesh I can do 10% of the turnover, 10% of the turnover in that state in the preceding financial year. That means 10% of 70 lakhs, 10% of 60 lakhs, or 10% of 10 lakhs, or 5 lakhs, whichever is higher. So here 7 lakhs or 6 lakhs or 5 lakhs. So this way, sir, in 23-24 I can make this much of services, this much of services, this much of services, even though I am going with section 10 subsection 1 benefit. But understand, when you are providing these services, when you are going with this limit is extra than restaurant services, and in this limit we will not calculate your income by providing services of extending loans, advances or deposits. Remember, always see, when you are allowing somebody to use your money and charging interest or some other consideration, that means you are doing service. For that you are receiving consideration, and that is exempt under GST, you know it. But that service we will ignore for anything in section 10. I repeat, maintain a thumb rule. Remember a thumb rule, that is, sir, for the purpose of section 10, you are calculating aggregate turnover, you are calculating the tax amount, or whatever it is, the threshold limits, whatever it is, sir, ignore one fellow. That fellow is nothing but the interest income earned by way of extending loans, advances or deposits. Clear? So that is what the point, right? So we will ignore that, and apart from that you can provide. So I repeat here, you have the benefit, for state wise, you have the benefit to provide some small amount of service that we are calling as marginal supply of services. Okay, that you can provide. But other than that, you cannot provide anything if you are in section 10 subsection 1 option. Okay, so that is what the concept. Now, sir, okay, fine, we have understood that. Two subsections are talking about composition scheme. One subsection is all about manufacturer, trader and restaurant service provider. The next one is service providers other than restaurant service providers, or who are not eligible for section 10 subsection 1. Threshold limits 150 lakhs, 75 lakhs, and this side 50 lakhs. Here tax rates are 1%, 1%, 5%, here 6%. But trader, you have seen one different point, sir. For trader, what is there? Trader only enjoys one benefit, that is what? He will pay tax only on the taxable turnover, not on the total turnover. Okay, so if the trader who is buying and selling is selling taxable goods as well as exempt goods, he will pay 1% tax only on the sale of taxable goods, not on the exempt goods. But for manufacturer, he is selling taxable goods as well as exempt goods. He is manufacturing and selling, so he will pay on the total turnover 1%. Okay, now, so that is what the point. So I repeat, sir, when you are going for composition scheme, what is the benefit? Number one, you need not pay tax at normal rates. Number two, one thing we should remember, we cannot take ITC, and we cannot collect GST from the customer. So then this is not beneficial. If you feel like this is not beneficial for you, don't go with the composition scheme, because this is optional, that is not mandatory, nobody is forcing you. So those are the points. Okay, and I also taught you one thumb rule. Okay, fine, sir, that interest income you please ignore. Next, aggregate turnover meaning. I told you, sir, aggregate turnover, taxable supplies, exempt supplies, exports, interstate supplies of persons having same PAN, all these things you please add it, sir. So all these things, like as I was telling, taxable, exempt, exports and interstate supplies of persons having same PAN, you please add all those things. That means here there can be intrastate, interstate, non-taxable, everything. The exempt supply means here the definition says wholly exempt, nil rated, non-taxable, everything. In simple terms, I'm telling you, whatever the sales you are making, you take it as aggregate turnover. Simple. Only sales, not purchases. So intrastate supplies between distinct persons not considered in aggregate turnover. Number one, clarity. Next, what and all I should not include in turnover? Taxes don't add. That means CGST, SGST, UTGST, IGST, GST compensation says any other tax other than GST, you should add it to the turnover. Okay. Then, and all inward supplies covered under RCM. That means inward supplies covered under RCM, sir. Yes, you are paying GST on them. You need not add them in your turnover because it is not your sale. I told you, aggregate turnover, simple logic is it is your sale, it is not your purchase. Sir, can I add my inward supplies covered under forward charge in my aggregate turnover? Inward supplies your purchase, it will never be your turnover. Clear? So aggregate turnover means only sales, not purchases. Okay, so that way you calculate the aggregate turnover. Okay, sir. Now coming to the point, as I was telling, we have discussed tax rates, composition tax rates. Composition tax rates are 1%, 1% and 5%. But if it is section 10 subsection 2a, it is 6%. We have discussed that also. Next, the important thing, sir, who cannot go for composition scheme? Who cannot opt for composition scheme? Sir, who cannot opt for composition scheme under section 10 subsection 1 means, sir, who is providing service other than restaurant service, and marginal supply of service option is available for you. So other than marginal supply of service, you should be doing only restaurant service, any other service within the limit of marginal supply. If you are doing it more than, for example, I'm selling ACs and some small amount of servicing also I'm doing, no problem if it is within the limit. If it is beyond the limit, I cannot go with 10 subsection 1. Then what should I do? You can go with section 10 subsection 2a. Are you understanding the point? So I'm selling ACs also in equal proportion, sir. I'm servicing them also in equal proportion. For you, section 10.1 is not applicable. Go with 10.2a. Okay. So that is what we are trying to tell. Okay. Next one. What is next one? You should not provide services not liable to GST. Okay. You can supply even non-taxable goods, but you cannot provide services not leviable to GST. That is very important point for you. Please mark it important. Next, you should not be making any interstate. You should not be making any interstate outward supply of goods or service. That means interstate sales is not allowed. Interstate purchase is allowed, but you should not make interstate sales. That is another condition. You should not be supplying services through e-commerce operator attracting TCS. Okay, you can supply goods through e-commerce operator, that is possible. Okay, but if you are under composition scheme, you cannot supply services through e-commerce operator who has to collect tax at source under section 52. Okay, very another important point for you. And also, sir, you should not be a manufacturer. You should not be a manufacturer of certain notified products. What are those? The ice cream, pan masala, tobacco, manufactured tobacco, aerated waters, fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil meats or similar siliceous earths or building bricks, earthing or roofing tiles. You should not be manufacturing and selling them, sir. Trader, yes, fine, he is eligible, but manufacturer is not eligible. So please understand, here we are not targeting this Amul ice creams or any like quality walls ice cream. They are not even eligible because their aggregate turnover itself is exceeding 150 lakhs. Here we are targeting only people like we will be seeing, no, near our house there will be some during summer season, etc. The local ice cream vendors will be coming. They'll manufacture and they'll bring. Or we are not talking about Coca-Cola, Pepsi here, aerated waters. We are talking about local Goli soda manufacturers and sellers. So for such people who are already completely unorganized sector, for those people we don't want to give any relaxation. So manufacturing and selling them, you are not eligible for composition scheme. If you are buying and selling any these items, then you are happily eligible for composition scheme. You can enjoy the benefit. Okay. Next, if you are a casual taxable person or a non-resident taxable person, you cannot go for composition scheme. And sir, I have multiple registrations. I was showing in the example Andhra, Tamil Nadu, Karnataka, all that. Sir, when you are calculating aggregate turnover, you will calculate the aggregate turnover on pan-India basis, correct? So here when you have multiple registrations, whether they are eligible or not for composition scheme. See here, guys, in the soft copy I have given various examples. Please go through the examples clearly. No issues at all. Now, see, for example, when we are going with this particular example, sir, I have a company where Telangana I am doing 58 lakhs, Karnataka I am doing 76 lakhs, Andhra Pradesh I am doing 10 lakhs turnover. In that case, whether I am eligible for composition scheme or not, we will see aggregate turnover. That means all the states, whatever the turnover is there, that together we will take and see whether it is exceeding 150 lakhs or not. Here, if it is not exceeding 150 lakhs, then all the branches having all the multiple registrations, they are eligible for composition scheme. They are eligible for composition scheme. So what they should do, every branch should go for composition scheme if they want, or every branch should follow normal scheme. It is not like here in Telangana I will go for composition scheme, in Andhra I will go for normal scheme, or in Karnataka I will go for composition scheme. Like that you cannot do. Either all branches go for composition scheme or all the branches go for normal scheme. That is very important for you. And one more interesting catch here is, please understand that if at all you have any one branch in a special category state and one outside special category state, then the threshold limit will fall down from 150 lakhs to 75 lakhs. For example, here if I have branch not in Andhra Pradesh but in Manipur, then the aggregate turnover, the threshold limit is not 150 lakhs. For everybody it is 75 lakhs. So please remember that. So those questions, answers, everything has been given here. You can just go through. Okay, I have given very good number of examples. Please go through all the examples. Let us focus in this video only on the conceptual clarity. Okay, so as I told you, sir, all registered persons with the same PAN number must opt for composition scheme, or all should follow normal scheme. It is not like one fellow is going composition, one fellow is going for normal scheme. And one more important thing is, if one branch doesn't want to opt for composition scheme or wants to go for normal scheme, or one branch contravenes the provisions under composition scheme, then all the remaining branches will become ineligible for composition scheme. That is what I have told you. Marginal supply of services, I told you, sir, under section 10 subsection 1, if you are opting for composition scheme, you can still provide some services other than restaurant services, other than interest income. You can still provide some services, extra services. 10% of the turnover in the state, not aggregate turnover. Always remember, aggregate turnover is different, turnover is different. So aggregate turnover we are not talking here, sir. For marginal supply of services, 10% of the turnover in that state, okay, or 5 lakhs, whichever is higher, you can provide. So that marginal supply, along with example also I have given here, you can just go through that. And next, there are some procedural things which you can just take care of it. And here one another point I just wanted to share with you is, as I was telling, sir, if you are going for composition scheme, once your entire turnover, aggregate turnover, exceeds the threshold limit of 150 lakh or 75 lakhs, as the case may be, or 50 lakhs, once that aggregate turnover in the current financial year, that means composition scheme benefit is not lifelong. Sir, when your aggregate turnover in the preceding financial year does not exceed the specified limit, current financial year you can go for composition scheme. When you are going with composition scheme in the current financial year, please understand, you can enjoy that, till the aggregate turnover touching, the threshold limit. That means till my aggregate turnover in the current financial year touches 150 lakhs, I can enjoy composition scheme. Preceding financial year not exceeding 150 lakhs, current financial year up to 150 lakhs, I can enjoy composition scheme. Once the aggregate turnover touches the 150 lakhs threshold limit, now I should come out of composition scheme. I should start paying tax at normal rates. Now I can collect tax from the customer and I can avail ITC on the inward supplies also. Just like a normal taxpayer, sir, everything will be there. Sir, I will be coming out of composition scheme and I should pay tax at normal scheme. Clear? When my aggregate turnover in the current financial year exceeds the threshold limit. Here one more interesting thing is, sir, see, let me show in this example, okay. Or you just go through the examples, I will just teach you the concept here. See now, sir, what is happening now? Normally when we talk about aggregate turnover, sir, generally understand, whenever we talk about aggregate turnover, we will take on pan India basis whatever the sales we have made from 1st April, let us assume 2025, till 31st March 2026. Whatever you do, sir, whatever the sales you have done on pan India basis, that will be treated as your aggregate turnover. Sir, in pan India basis, let us assume certain period, for example, for 2 months, you are not registered, and balance 10 months you are registered. Then, sir, no matter whether you are unregistered for some period or not, all these things, that means from 1st April whether you are registered or not, that we will see. We will not see. Sir, we will just see what and all sales you made from 1st April till 31st March. That's all. That fully will be taken as aggregate turnover. During that period, how long you have been taxable person, how long you have been non-taxable person, whether you are registered or not, we will see aggregate turnover. Means we will see from 1st April to 31st March whatever you have done. Sir, whatever the turnover you have done as a not registered person will be added to what? Will be added to aggregate turnover. Whether you will pay tax on that, whether you should pay tax on that, but no tax payable. Am I clear? So I repeat, aggregate turnover means from 1st April to 31st March, whatever you do, that will be the aggregate turnover. And during that period, during that financial year, you may be unregistered also initially for 2-3 months. During that period, whatever turnover you have done also, that will be added to the aggregate turnover, but no tax is needed to be paid. Okay, on that we have some questions also, examples also. Please make sure you are going through that. I have given good number of questions and examples here for you to solve, so please go through that. So with this, we have completed composition scheme, the provisions point, and obviously there are certain procedural things, sir. Composition scheme, every year you have to keep on selecting whether you want it or you don't want it. If you want to opt for composition scheme, if you are eligible, if you want to opt it, electronically intimate to the proper officer. Simple. While first time when you are applying for registration, sir, every time when you are applying for registration first time, see, you are applying for registration now this year means what does it mean? Preceding financial year your aggregate turnover is not exceeding the threshold limits, or you don't have business, etc., etc. So preceding financial year your aggregate turnover will be definitely less than or equal to 150 lakhs. That is why you are applying for composition scheme. So every time when you are applying for registration, in the registration application itself there will be one point: do you want to opt for composition scheme? If you are eligible and if you want to opt, and you can opt there itself. So first year like that you can decide. From next to subsequent year, what you have to do, before the commencement of the financial year, you check whether you are eligible for composition scheme or not, and intimate it to the proper officer electronically only. Nothing to worry. You need not call him or go and meet him and say, sir, I want composition scheme. All these things not required. So intimate him electronically so that you will get composition scheme in the subsequent years. So that is what the concept. So with this we are done with composition scheme. So this video is helpful for both CA Inter Final and CS CMA, all the levels, whoever is reading composition scheme under GST. The relevant material is uploaded in the Telegram channels. The Telegram channel link is given in the description below. So please do share this video with your friends. See you all in another video. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST CA Vishnuvardhan. In this video we are going to see place of supply chapter. Quickly we are going to revise, and place of supply, this is the only chapter where we will be reading IGST sections in your syllabus in your CA intermediate. So section 7, 8, 9, 10 and 12 we are going to see in this particular chapter. Okay, actually place of supply provisions are dealt in 10, 11, 12, 13. For you in syllabus, section 10 and 12 related to place of supply are given. 11 and 13 you will be reading in your CA final. So let us move into the chapter. So section 7 and 8 are talking about interstate supply and interstate supply. Simple thing, sir, what is interstate supply? Interstate supply means, sir, first of all, for place of supply, two things are important. One is location of supplier of service and place of supply. Sir, if these two, location of supplier of service and place of supply, are falling in two different states or two different union territories, or one different state and one different union territory, then we call it as interstate supply. Simple. So when we call it as interstate supply, location of supplier and place of supply are falling in two different states, Karnataka, Tamil Nadu, or two different union territories, or one different state and one different union territory, then we will call it as interstate supply. And imports, sir, of course imports are called as interstate supplies. Other cases, where other cases we can call it as interstate supply, where supplier is located in India and place of supply is outside India. That means nothing but exports. Supplies made to or by SEZ unit or developer. This is important one. Remember always, any supply made by an SEZ unit or to an SEZ unit, made by an SEZ developer or to SEZ developer, is interstate supply. That means, sir, even though there are two units located in same SEZ next to next door, they are making some supplies between them. That is also called as interstate supply. Sir, one unit is in DTA, sir, the other unit is in special. Both are in Chennai. Let us assume, for example, there is a company in Tamil Nadu. Sir, a company in Tamil Nadu in Chennai outside DTA, providing services to another company in Tamil Nadu in Chennai, same city, but which is in SEZ. Sir, then the supply happening between them is interstate supply. Leave about that. What I am trying to tell is, in the same SEZ there are two different companies located next to door. One fellow is providing supply to another fellow. Still we call it as interstate supply. Clear? So supply made to SEZ unit or developer, or made by SEZ unit or developer, we call it as interstate supply. Okay, that is another point. Next, suppose nowhere in the law if you are able to classify it as intrastate supply, then classify it as interstate supply. So these are what the meanings of interstate supply. In this, the important thing is that supply to SEZ, all that we have seen. Okay, so hope you are clear with section 7, interstate supply. Next, section 8 is all about intrastate supply. What section 8 is talking about? Na intrastate supply. First of all, please understand, you ignore about the page numbers, etc., etc. here, because concepts whatever common for inter, the inter material will be different, final material will be different. So concepts are common. So I am recording it in a common way. So ignore about the page numbers. Concept and content will be same in your materials. Okay, don't worry. Now, so coming to the point, what is the meaning of intrastate supply? Intrastate supply is nothing but whatever is not interstate supply. That means location of supplier and place of supply is falling in the same state or same union territory. Then we call it as Intrastate supply. What and all cannot be called as intrastate supply, sir? As I already told you, what and all cannot be called as intrastate supply. Supply is made to SEZ or SEZ units or developers? No. Import of goods? No. And supply of goods made to a foreign tourist referred in section 15. In these cases, please understand, even the location of supplier and place of supply falling in the same state, still we call it as interstate supply. One second. So in these cases, even though these people are located in the same state, the location of supplier and place of supplier falling in the same state, still we call it as interstate supply. Sorry, there was some technical issue. Okay, so hope it is clear. So generally, intrastate supply means location of supplier and place of supply falling in the same state or same union territory. But even though the location of supplier and place of supplier is falling in the same state, if it is made to a SEZ unit or developer, it is interstate supply. If it is import of goods till they cross the customs frontiers, it is interstate supply. Then supply of goods made to a tourist referred to in section 15, interstate supply. So these cannot be called, it can never be called as interstate supply. Simple. Next, as I told you already, mere establishments of the same person. As I told you in the meaning of export and import, sir, mere establishments of same person, if they are interacting, we cannot call them as export. Okay, so that point we have already discussed. The explanation related to only CA final, so already discussed. Explanation relevant only for CA final. Okay, already discussed. Next, supply in territorial waters. See, first of all, we have understood what is section 7 and 8. Section 7 and 8 is what is intrastate supply, what is interstate supply. So we have understood location of supplier and place of supply falling in the same state or union territory, then we call it as intrastate supply, otherwise we call it as interstate supply. In certain cases, there are specific transactions which we call as interstate supply, that also we have seen. Okay, fine. Now coming to section 9. What section 9 says? Section 9 says simple one, sir. When the location of supplier or place of supply is, suppose if it is falling in territorial waters. For example, you go to Goa to just for this casinos will be there in the ships will be placed in the territorial waters. Location of supplier and place of supply is falling in territorial waters. Then which state or union territory we should take? So the state or union territory which is located to the nearest point of that appropriate baseline we will consider. So suppose here the location of supplier is falling or place of supply is falling, so we will take the state or union territory which is closest to this appropriate baselines or closest to point. Okay, so that way section 9, simple one, let us not worry about that. Now let us move on to section 10. Sir, what is section 10? Section 10, see, first of all, we have seen section 7, 8, 9, correct? Section 7, 8, 9 talking about what is interstate supply, all that. Here, to call it as interstate supply or interstate supply, first of all, we should be clear with what is the location of supplier and what is place of supply. Location of supplier, okay sir, fine, I will understand. But what is the meaning of place of supply? Here, please understand, place of supply chapter itself is like, it is a mathematics formula. Already they have derived the formula. You should just remember the formula now. Let us not worry about the derivation. Okay. Now, so in section 10, 11, 12, 13. I repeat, section 10, 11, 12, 13. In section 10, 11, 12, 13, the IGST Act clearly mentioned what is place of supply in different occasions. 10 and 11 talks about goods. 12 and 13 talks about services. Section 10 is purely for goods other than export and imports. 11 and 12 exclusively for imports and exports. 12 services where both supplier and recipient are located in India, and 13 where any one fellow supplier or recipient are located outside India, then 13 is applicable. Section 10, 11, 12, 13, all the 4 sections are there in CA final. So in CA Inter you have only section 10 and section 12 in the syllabus. 11 and 13 is there in CA final. So I repeat, in CA Inter there are only 2 sections, section 10 and 12. Section in CA final, all the 4 sections 10, 11, 12, 13 are there. Sir, place of supply, 4 sections are dealing with this. Section 10, place of supply for goods other than exports and imports, a small section. Section 11 also, place of supply for goods, imports and exports, small section again. 12 and 13 are little bit lengthy sections, that's all. Okay, so section 12 is place of supply for services where both the supplier and recipient are located in India. 13 is where recipient or supplier, any one fellow, not both. If both are located outside India, why will we study about them in GST? Let us not worry about them. So section 13 talks about any one person, either the supplier or recipient is located outside India. Okay, so let us move on to section 10 first. So section 10 Section 10 talks about place of supply with respect to goods. I'll explain this to you in a very simple way. First of all, see, understand. You have the notes properly and examples all that properly. Sir, section 10, if you see, place of supply for goods. Place of supply for goods. The place of supply for goods here, first of all, what it will say now, sir, there is clause A, clause C, and clause CA. Now, clause A says when you are selling the goods, whether movement in goods involved or not. Yes, sir, involved. If movement is there, then what is the destination of the goods? That will be treated as place of supply. No, sir, movement is not involved. For example, you are going to a mobile showroom and buying the mobile. Is the movement of goods involved? Moving the mobile from one place to another place? No. So then what is the place of supply? Location of goods at the time of delivery. Okay, that will be the place of supply. Movement is involved, I repeat, movement is involved. Then whatever is the destination, that will be the place of supply. Movement is not involved now, where the goods are handed over to the customer, where the goods are located at the time of supply, that will be the place of supply. Okay, so for example, sir, I am selling raw material to you. I am in Tirupati, you are in Chennai. I am sending 10,000 kg raw material to you from Tirupati to Chennai. Movement of goods is involved from Tirupati to Chennai. So what is the place of supply? Chennai will be the place of supply because that is the destination. Or imagine you are going to a mobile showroom buying a mobile, and in that case, whether they are moving mobile from one place to another place, no, movement is not involved. Don't say, sir, they are moving it from the almara or the shelf. No, that is not that way. So movement is not involved. In that case, sir, where these goods are handed over to you, that will be the place of supply. Chennai, you are going to a mobile showroom buying the mobile. Chennai will be the place of supply. Okay, so that is the case. Movement involved, not involved. Now, here the interesting thing is, I'll tell you. Let us see. Clause B is the next one. Clause B is all about bill to ship to model. Sir, bill to ship to model cases. In bill to ship to model cases, what happens is, billing will be done to one person, shipping will be done to another person. Billing will be done to one person, shipping will be done to another person. In such cases, sir, what will be the place of supply? The place of supply is who gave you the direction. For example, sir, Vishnu is in Chennai. Vamsi is in Hyderabad. Vishwanath is in Bengaluru. Okay. Vishnu is making a sale to Vamsi. So I am making bill to Vamsi. Hey, Vamsi, this is the bill, like that. What Vamsi is doing? Vamsi is making a sale to Vishwanath. So what Vamsi is asking to me now, Vishnu sir, you made a sale to me, no? Don't do shipping to me. Do shipping to Vishwanath. So what I will do now? Billing to Vamsi, shipping to Vishwanath. This is what I will do. Bill to ship to model. In such cases, what is the place of supply? See, Vishnu has to determine place of supply now. Okay. So when Vishnu is determining the place of supply, sir, he will see because of whose direction I am moving the goods to Bengaluru, on the directions of Vamsi. Okay. What is the place of business of the person who has given the direction? That will be the place of supply. That means, please understand, in case of bill to ship to model, simple, to whom you are billing, that fellow's place of business will be the place of supply. Simple. Okay, that is what the concept. Now, sir, there is one more new clause they have added, clause CA. In clause CA, what they are saying now, listen carefully. In clause CA, what they are saying now, if the recipient is unregistered, that means the buyer is an unregistered fellow. If the buyer is an unregistered fellow, then in such case, sir, what is the place of supply? Whatever the address of the recipient you have recorded in the invoice. But sir, if recipient has not given his address, if he has given his address, then that will be the place of supply. If he has not given the address, then location of supplier of that goods itself will be the place of supply. That means, sir, I am selling something to an unregistered person. So what is the place of supply in that case? I will not check now clause A or clause C, because clause CA has not a non-obstante clause. You need not verify clause A and C, movement is involved or not involved. You should see only, sir, what is the address of that recipient, what is that he is giving, what is that you are recording in the invoice. That address will be the place of supply. Okay, if address is not given, if he is not giving the address, then location of the supplier itself will be the place of supply. And one interesting point here is, sir, when we are asking the address of the recipient, detailed address like his door number, landmark, street name, all these things not required. Just the state name, if he is giving, the recipient is giving, that is also more than sufficient. That you record in the invoice, that is more than sufficient. That will be taken as place of supply. Now, for example, you are going to Goa. You are an unregistered person going to Goa and buying a mobile there. And in the mobile shop, they are asking your address. You are saying, sir, I am from Tamil Nadu. They are recording in the invoice Tamil Nadu. That is more than sufficient. That will be the place of supply. If you say, sir, my address and all I will not give you, you please sell the mobile to me, I will give money and get lost, then in that case, location of supplier, he is in Goa, he will take place of supply as also Goa itself. Am I clear? That is what the concept. And one more interesting clarification here, the new one which has been given is, I am not just going through the material, I am just trying to put it in a simple way. I am presenting it so that you can just have a quick revision. Okay, now ignore my handwriting, please. Sir, there is a new clarification here. What is that clarification? Now, when unregistered person is buying the goods through e-commerce operator, they are giving billing address separately, shipping address separately. In that case, what is the place of supply? Then they said place of supply will be the shipping address. Am I clear? That will be the shipping address. I repeat, when unregistered person is buying something through e-commerce operator, they'll give billing address separately, shipping address separately. Mostly like during Valentine's week, all that stuff. So you might be buying, so billing address is given yours, shipping address maybe somebody else, you only know. So in that case, what will be the place of supply? Place of supply will be the shipping address. Clear? So that is what the point. So that is the clarification. Now, so I repeat, 10(1) CA, when unregistered person is buying something, register like whatever the address is recorded in the invoice, that will be the place of supply. If the recipient is giving state name, that is also sufficient. If the recipient doesn't give anything, then the supplier location itself will be the place of supply. And if at all unregistered person is buying through e-commerce operator, billing address and shipping address are given separately, then shipping address itself will be taken as place of supply. So this is clause CA. Now finally, clause D and E. D. What is clause D? Sir, I am buying some goods, sir, and those goods needs some installation, sir, some assembly, sir. Then such type of goods if I am buying, what is the place of supply? Place of supply, for example, you are buying an AC. Sir, what is the place of supply? Where the AC is installed. Okay, so place of supply is where the goods are installed or assembled. Okay, that will be the place of supply. Simple provision. Next, the last case in section 10 subsection 1 is clause E. What is this clause E? Suppose you are traveling from Chennai to Bangalore in Vande Bharat train. Somewhere you are purchasing some Haldiram chips or something, moong dal, etc. in the train. Or you are traveling from SpiceJet Airlines from Hyderabad to Delhi. Sir, you are buying something like fried cashews or kajus, whatever it is they are selling, salted or roasted peanuts, all that they are selling. Then in such case, what is the place of supply for that? Sir, when the goods are supplied on board of a conveyance, then what is the place of supply for that? Sir, the place of supply for that is what? The place of supply is where these goods are taken on board, not where you are boarded, where the goods are taken on board. You are traveling from Hyderabad to Delhi, but these goods, whatever you are buying during the flight journey, they are taken on board in Bengaluru. Imagine, then the place of supply will be Bengaluru for all these things. Okay, so that is what section 10 all about. So what is section 10 all about here? Sir, there are 6 cases: clause A, B, C, CA, D and E. Movement involved, movement not involved, sale to unregistered person, bill to ship to model, goods where needs installation and assembly, and finally goods which are supplied on board of a conveyance. Clear? So those are the things. So we have discussed place of supply for all the occasions. For you, the proper notes and the examples for all these things have been given here. You can happily go through this. So just to show all the differences, etc., for quick revision purpose, I have used the flowchart. Okay, section 10 is applicable for supply of all goods other than exports and imports. Hope it is clear. Now let us move on to section 12. Section 12 is nothing but place of supply for services where location of supplier and location of recipient both are in India. Okay, section 12. In section 12, if you see, the interesting part is in section 12 there are 14 subsections, but subsection 1 says go and refer the following subsections to identify place of supply. Subsection 2 says from 3 to 14, if it is not applicable for you, come to me, I will tell you what is your place of supply. That means subsection 2 is general rule. From subsection 3, sir, it is specific rules. So that means what is the situation, what is the place of supply, what is the situation, what is the place of supply. So you have to remember the situation, and for that situation what is the place of supply. Here your memory has to be like little bit more careful. Here you are with respect to memorizing the things, there is no other option. So coming to first subsection, section 12 subsection 2. So as I told, it is a general rule. It is applicable when 3 to 14 is not applicable. Okay, subsection 2 says, sir, what is the place of supply? Subsection 2 says place of supply is if it is a B2B supply, then the location of that recipient where he is registered, that will be the place of supply. If it is a B2C supply, then if the address of the recipient is available, then the address of the recipient. If address of the available is not available, then supplier address. So I repeat, section 12 subsection 2 general rule is all about that if the recipient is registered, his address will be the place of supply where he is registered. If he is unregistered, then if you have his address, then take his address as place of supply. If you don't have his address, then your address will be the place of supply. Clear? I repeat, subsection 2 comes into picture when all other subsections are not applicable. Next, there are examples which you can go through. Now, as I told, subsection 3 to 14, we know this is the scenario, this is the place of supply. So, what is the scenario? Sir, subsection 3. Subsection 3 deals with anything you do, anything which is directly related to immovable property. Anything which is related to immovable property. So, sir, services relating to immovable property, lodging, accommodation in a hotel or a boat or a vessel, or accommodation in any immovable property for social, business, or religious or cultural functions, and any incidental or auxiliary things related to above. So first of all, sir, anything which is related to immovable property, lodging and boarding. Here one interesting thing is lodging and boarding not only in the hotels, guest house, etc., but also houseboat and vessel. Even though it is movable, it is covered here. Next, for conducting the functions, we are renting out the property. Okay, and finally anything incidental for all these above activities. For these cases, the place of supply will be the location of immovable property. The location of immovable property. For example, you are an architect, you are designing the hotel plan. Then the place of supply will be where the hotel is going to be constructed. So, let us assume you are a real estate agent giving advisory services for selling or buying the land. So, what is the place of supply where the immovable property is located? Or you are going to a hotel, booking the accommodation. What is the place of supply where the hotel is located? So, like this, with respect to these things, the location of the immovable property itself will be the place of supply. And if that immovable property is located outside India, if the immovable property is located outside India, then the place of supply will be the location of the recipient. The location of the recipient. Hope it is clear for you. I repeat, section 12 subsection 3 comes into picture with respect to immovable properties, all that stuff. But in such cases where the immovable property is located or intended to be located will be the place of supply. And if the immovable property is located outside India, then the place of supply will be the location of the recipient. Okay, now the interesting part is, as I told you, the examples can be the architects, interior decorators, surveyors, engineers, or other related experts like real estate agents, etc. So for these things, sir, place of supply will be the location of immovable property. Now the interesting thing is, sir, what if this immovable property is going to be located in more than one state? That means, for example, I'm an architect. Taj hotels are coming and asking and entering into a contract with me. Vishnu sir, will pay you 10 crores. You design a hotel plan for us. For the hotel we want to construct in Lakshadweep also, the hotel we want to construct in Delhi also. In the single contract, I am going to provide service with respect to two immovable properties which are going to be located in two different states. Then place of supply will be that if the immovable property is located in more than one state, each state will be treated as place of supply. Each state will be treated as place of supply. So for me, Lakshadweep is also place of supply, Delhi is also place of supply in the example I gave. Sir, how do you proportionately allocate the amount here? See, that is there in the contract. For Lakshadweep property, I'll give you 3 crores. For Delhi property, I'll give you 7 crores. Like that, it is given in the contract. Then you allocate the funds in the same way. 3 crores place of supply will be Lakshadweep, and for 7 crores, place of supply will be Delhi. But sir, if there is nothing mentioned in the agreement like that, then what should I do? For unprofessional people like you only, I made the rules. That means the law says if the agreement is there, based on agreement, you do the allocation. But if the agreement is not there, please proceed as per the rules. Please proceed as per the rules. Rule 4 says, if it is, that means immovable property located in more than one state. Please understand, immovable property located in more than one state, each state will become place of supply. The only problem here is how do you allocate the fund, and for how much value place of supply will be Tamil Nadu, for how much value place of supply will be Karnataka, for how much value place of supply will be Andhra Pradesh, like that. On how much value place of supply should be applied, because on that value, if you identify this is place of supply Tamil Nadu, place of supply Karnataka, place of supply Delhi, like that, you will understand whether it is intrastate supply or interstate supply. Then you will charge CGST, SGST or IGST. Okay, yes, coming back to the point. So nature of service, sir, if that service is provided with respect to accommodation in more than one states. For example, I am going to Delhi and also Agra, staying in hotels in Delhi and Agra belonging to same company. Then what is the place of supply? Delhi is also place of supply. For Agra, Uttar Pradesh is also place of supply. How do I apportion that? Based on agreement, sir. Agreement is not there. Based upon the number of nights you are staying in that property. Sir, if it is related to accommodation in houseboat or a vessel, in such cases, what is the time spent? What is the time spent in each state by that houseboat or vessel based on that ratio? Sir, any other cases? Any other cases? For example, I am a contractor. Government has given me to construct a highway crossing Tamil Nadu and Andhra Pradesh border, 100 kilometers. Road, constructing the road is related to immovable property. So immovable property is a road which is located in Tamil Nadu also, Andhra also. So in such case, what is the place of supply? Tamil Nadu is also place of supply, Andhra is also place of supply. How do you apportion that? Is it each state is a place of supply, but how do you apportion that? Sir, if it is related to accommodation, number of nights, if it is related to houseboat, time spent in the day, this is any other case. How do I do this? You have to, based on the area of the immovable property. So let us assume 100 kilometers the highway is, 75 kilometers in Tamil Nadu and 25 kilometers in Andhra Pradesh. So based on that proportion, you just allocate that. So the examples also properly given. I repeat, if it is place of supply related to immovable property, location of immovable property will be treated as place of supply. If the immovable property is located in more than one state, each state will be taken as place of supply. Okay, and how do you apportion the value? Sir, based on the agreement, sir. Agreement is not there now. Rule 4 says if it is accommodation, number of nights, if it is houseboat, time spent in the day based on the hours, and if it is any other case, area of the immovable property in each state. Based on that, you have to ascertain the place of supply. Okay, apportion the place of supply. That is 12 subsection 3 for you. So the next amendment is regarding some clarification with respect to place of supply for online services supplied to unregistered recipients. Here the problem arising is, please understand, mainly for any services which are supplied through online, through e-commerce operators, etc., or OIDR services or online money gaming. That means, see, for example, any services like AstroTalk or online consultancy or OIDR services, means you can take Netflix example, or online money gaming, you can take Dream11, Rummy Circle, etc. So for these type of people, you can understand the nature of services they are providing, because they are providing the services using technology to people living across various states, all that stuff. When they are doing their billing, what is happening is, in their bills, in their invoices, they are not recording the name of the state from which the customer is coming from. Because of this, what is happening now, sir, we are not able to determine the place of supply properly, and we are not able to share the revenue to those respective states properly. So now what has happened now? The department has clarified, as per section 12 subsection 2, if you see, any services supplied to an unregistered person, the place of supply shall be, if at all you have his address, the recipient address in your records, that address itself will be the place of supply. If you don't have his address in the records, then your address, that is the supplier address, will be the place of supply. Now what the department has clarified now, if you are providing any services through e-commerce operator, this online or digital services, or any OIDR services like online information data access and retrieval services, okay, and online money gaming services, these people, what you have to do now, it is mandatory for you. What is it mandatory for you now? To take the address of the recipient. Address of the recipient is not door number, all these things required. At least make sure you are taking the name of his state. Okay, so the state name is mandatory. So for you, take the state name of the recipient. That is what mandatory, that is mandatory for you. Okay, so this itself will become what, the place of supply, and that you have to file when you are filing your GSTR 1 or 1A, as the case may be. Give the details of place of supply of your recipients and pay the taxes accordingly. So I repeat, place of supply will be the name of the state recorded in the invoice. For the customers who are unregistered under GST, for them, if you are providing online digital services either through e-commerce operator, etc., or you are providing OIDR services where it is purely technology driven, online information data access and retrieval services, or even online money gaming like Dream 11, all these things, if these people are providing services to, and you can understand these people are providing services across India to various people unregistered under GST. Okay, so now for these services, they are supposed to record the name of the state of the customer in their invoice, so that place of supply we will determine accordingly and will give share to the respective states. So simple, these people record the address of the recipient in the invoice, mandatory, no matter what is the value of supply. That is very very important, sir. Irrespective of the value, irrespective of the value, it is like more than 50,000 only I am supposed to record all these things. No, not for you, sir. For you, no matter what is the value, even Netflix 149 rupees subscription per month we are paying, no, on that also the invoice, the name of the state should be recorded. Okay, and that should be filed in GSTR 1 and 1A, as the case may be. Okay, that is what the clarification given by the department here. So 12 subsection 4 is all about, some performance based services. Please understand 12 subsection 4, they have specifically mentioned certain services here. Restaurant services, catering services, beauty treatment services, personal grooming services, fitness services, and cosmetic and plastic surgery services. These services, if are performed, then the place of supply will be where they are actually performed. So to remember these services, actually see, only these services are covered. It is not something general, it is specific. So to remember these services, I'll give you a code here. Remember that RCB girlfriend needs plastic and cosmetic surgery. RCB girlfriend needs cosmetic and plastic surgery. R means restaurant service, C means catering service, B means beauty treatment, G for personal grooming, F for fitness services, cosmetic and plastic surgery. If you feel it cringe, no problem. If you can remember, otherwise leave it. Okay, so 12 subsection 4, sir, where the services are actually performed, that will be the place of supply. Okay, next 12 subsection 5. 12 subsection is based on a training and performance appraisal services. Sir, training and performance appraisal services, if at all provided. For example, sir, in your auditor office, sir, which is registered under GST, they asked me to come and give training to the staff with respect to the GST audit or GSTR 9C, etc., anything. I am coming and providing my services of training you or appraising your performance, all that. In such cases, if the recipient is B2B, then the location of such registered person. If the recipient is B2C, then where the services are actually performed, Hope it is clear for you, right? So examples are given, you can go through. Next, 12 subsection 6. 12 subsection 6 and 7, if you see the difference, 12 subsection 6 is entry to an event. That means the ticket, whatever you buy, any event, it can be sporting event, musical event, or any drama, etc., the ticket, whatever you purchase. So admission to an event. Sir, what is the place of supply? Where the event is actually held. But subsection 7 is all about organizing such event. For organizing the event, if I am taking consideration. Now, sir, subsection 7 I have given in a flowchart here. If you see, subsection 7, sir, what is the place of supply for organizing the event? Here the interesting point what we have to see is whether the event is organized in one state or it is being happening in more than one state. Sir, if it is happening in one state, if the recipient is registered, that is B2B case, the place of supply will be location of the recipient where he got registered, no matter whether the event is happening inside India or outside India. Very important thing. So I repeat, if the recipient is registered, I am the event organizer providing services for conducting some event for your company, all that stuff. Then if you are registered, sir, B2B transaction, then that will be, sir, where the event where the recipient is registered, that will be the place of supply. Even though event is held inside India or outside India, it does not matter. But if the recipient is unregistered, then please understand the place of supply will be where the event is actually held. If the event is held outside India, then the location of recipient will be taken as place of supply. So that is very important here. So please be careful. There might be chance like you are doing mistake. Or if it is like happening, the event is happening in more than one state, sir. If the event is happening in more than one state, Sir, if the event is happening in more than one state, if the recipient is registered, same story again, where the location of recipient, that will be the place of supply. If the recipient is unregistered, sir, each state will be what? Treated as one place of supply. How do you apportion the value? You know the same story based upon the agreement. Sir, we are unprofessional fellows, we did not make any agreement. Then the law says follow rule 5. What rule 5 says? Rule 5 says follow gap. That means generally accepted accounting principles. You do somehow or the other. Please make sure you are following some gap. Okay, so that is what the point. So I will summarize again. 12 subsection 7, that this is regarding place of supply for organizing the event. If the event is organized in only one state, if the recipient is registered, then location of such recipient will be the place of supply. If the recipient is unregistered, then the location of event held. If the location is happening outside India, if the recipient is unregistered, in such cases the location of recipient itself will be taken as place of supply. But if the event organizing is happening, for the event to be happened like in more than one states, each like if the recipient is registered, then again same story, location of recipient. If the recipient is unregistered, then each state where the event is being happening, that will be taken as place of supply, and we will apportion the value as per the agreement. If the agreement is not there, then we will apportion it as per the rule 5. Rule 5 says do whatever you want but follow gap. Okay, so that is what 12 subsection 7. Coming to 12 subsection 8. 12 subsection 8, place of supply for transportation of goods including through mail and courier. Okay, so in that case, if the recipient is registered, where the location of the recipient is there, that will be the place of supply. If the recipient is unregistered, where the goods are handed over for transportation, that will be taken as place of supply. In this case, when the recipient is unregistered, no matter whether the goods are transported within India or outside India, the place of supply will be the location where the goods are handed over to the supplier for transportation. So that is what 12 subsection 8. Clear? Now, 12 subsection 9. So, 12 subsection 9 is with respect to transportation of passengers. Transportation of passengers, what is the place of supply? Transportation of passengers, see, understand, if it is just a transportation of passengers, for example, you are buying a ticket, a flight ticket you are booking, your recipient registered, then the place of supply will be where you are registered, that will be the place of supply. If you are unregistered, where is the embarking point in that journey? Okay, so for example, you are an unregistered person from Chennai traveling from Delhi to Mumbai. So what is the place of supply? Delhi will be the place of supply because your embarking point is Delhi. So the point is, sir, recipient is registered. Now where he is registered, that will be the place of supply. If the recipient is unregistered, then the place of supply will be where the embarking point, that will be the place of supply. Hope it is clear. Next, sir, this is not transportation of passengers straight away, sir. It is regarding issue of the right to passage, where we'll be giving some passes or coupons kind of thing, where you can redeem them or use them to travel, sir. And in that cases where the boarding point is not known, in that case, if the boarding point is not known, the law says follow section 12 subsection 2. So what 12 subsection 2 says? If the recipient is registered, where he is registered, that will be the place of supply. If the recipient is unregistered, look, recipient address, if you have his address in your books, if you don't have your recipient address in books, then supplier address, simple. So in case of issue of right to passages, all that, the passes, etc., where the boarding point is not known, I repeat, we should follow section 12 subsection 2, where the recipient is registered, where he is registered, that will be the place of supply. If the recipient is unregistered, then address of the recipient, if you have the address. If you don't have the address of the recipient, then your address, that is the supplier address, will be taken as place of supply. That is 12 subsection 9. Now coming to the next one, 12 subsection 10. If you see 12 subsection 10, sir, if you are going through 12 subsection 10, it says what about the services provided in board of a conveyance? Board a conveyance. Suppose you are entering into an aircraft and you are taking a movie on rent. Okay, so they are providing the services on board a conveyance. Just like we have seen goods supplied on board a conveyance, now we are seeing services supplied on board a conveyance. Same logic. Their goods are like where it has loaded into the conveyance. Now here or taken on to board. Okay, here the same way, the first scheduled point of departure of that conveyance will be the place of supply. Any service provided on board a conveyance, I repeat, the place of supply will be the first scheduled point of departure of that conveyance, not your journey. Where your journey is starting, that is not relevant. See, now for example, you are traveling from Delhi to Chennai via Hyderabad. Sorry, the flight is being operated from Delhi to Chennai via Hyderabad. You are boarding in Hyderabad and you are taking some music on demand, or you are taking a movie on demand, taking some services in the aircraft. Further, place of supply will be Delhi, not Hyderabad. That means where you are boarding, that is irrelevant. What is the first scheduled point of departure of that particular conveyance? That will be the place of supply. So that is 12 subsection 10. Okay. Now moving on to 12 subsection 11. So telecom services. If you see telecom services, here we are talking about this fixed lines or antennas, postpaid, prepaid, internet bills, telephone bills, all that stuff. Here if you see, sir, if it is involving fixed lines, if it is involving fixed lines. Please understand, if it is involving fixed lines, then where that fixed lines or equipments are installed, that will be the place of supply. Okay. No sir, it is related to postpaid mobile or internet services. In such cases, what is the place of supply? Sir, if it is a postpaid thing, you know the billing address of the recipient, that will be the place of supply. No sir, it is a prepaid mobile internet DTH services. Then in such case, we will see, are you selling this through some selling agents or distributors, etc.? Yes sir, then place of supply will be the address of such a selling agent or distributor. No sir, I am selling it to directly final subscriber sir. Then sir, where that payment is received, that will be the place of supply. Okay. Or sir, I am making the sale through any electronic mode or any other cases also. If the recipient address is available in the records, that will be the place of supply. Otherwise, the supplier address will be taken. Okay. So location of recipient in the records of supplier, that will be taken. Otherwise, otherwise if it is not available, location of the supplier. Okay. So simple sir, through electronic mode or any other payments if you are taking. Sir, in such case, if the address of the recipient is available, then location of the recipient. If the address of the recipient is not available, then location of the supplier will be taken as place of supply. Simple. So I repeat, 12 subsection 11, sir, telecom services, all that stuff, through fixed lines, location where it is installed. Postpaid connections, the billing address. Prepaid connections, if it is through the selling agent or distributor, then the address of the selling agent or distributor. Or if it is directly to final subscriber, sir, where the payment is actually received, that place will be the place of supply. Sir, through electronic mode or any other cases, if you have the address of the recipient, take it as place of supply. If you don't have the address of the recipient, your address, that is supplier address, will be taken as place of supply. That is what 12 subsection 11. Next, I have given the examples also below, you can just go through. Please understand, this is quickly to revise the concept for you. Only when you read some questions, examples, all that on your own, then you only will be able to remember them for a longer period. This is purely a revision video. Please remember that. Sir, now if these telecom services are provided in more than one state, where they are installing this leased circuits in more than one state, each state will be like place of supply, where there is a point installed in each state. There will be some starting point, ending point, or some intermediary point from which they will be extracting the benefits of this leased circuit. So in such case, wherever the state there is like starting point, ending point, and intermediate points, all those points you count, are based on how many points are located in each state. In that proportion you distribute. Every state is a place of supply for sure. How do you apportion that value? As per the agreement, sir. Agreement is not there, then you go with rule 6. What rule 6 is? See how many points are located in each state, and in those proportion, in that proportion or in that ratio, please split the amount and calculate place of supply. Each state will fall as place of supply. Next, 12 subsection 12. What 12 subsection 12 says? 12 subsection 12 says, sir, for banking or financial services including stock broking. In such cases, what is the place of supply? Please understand, the interesting part here is, if the recipient address is available, okay, then that recipient address will be taken. If the recipient address is not available, then the supplier address will be taken. Simple. I repeat, for financial services, banking services, including stock broking, address of the recipient is available, take that as place of supply. Address of the recipient not available, supplier address only will be taken as place of supply. Okay. Next, 12 subsection 13, insurance services. Subsection 12 and 13, please be careful, not same. That is banking, this is insurance, purely insurance. In case of insurance service, see, banking services, we don't segregate whether the recipient is registered or not. We just see whether we have his address or not. But in subsection 13, we will see whether he is registered or not. If he is registered, recipient is registered, then location of such registered person. No sir, he is unregistered, then location of the recipient, whatever is available in the records. If the address is not available in the records, without address being available in the records, how will you give insurance? So that will be available. So nothing to worry. That situation will not arise. So I repeat, insurance services, if the recipient is registered, the location of such recipient. If the recipient is not registered, then whatever the address is recorded in the books of the supplier, that is insurance company, that will be the place of supply. Okay. So with this, we are done with 12 subsection 13. And 12 subsection 14. 12 subsection 14 is nothing but advertising services provided to central government, state government, or statutory bodies or local authorities. Mostly they will not ask you, nothing to worry, but just remember, sir, here what is happening is you go to cinema halls or you see any hoardings, etc., etc., you see everywhere this government advertisements. No, for that, what is the place of supply? Sir, they are doing it in multiple states, so each state is a place of supply. Wherever they are doing, that is a place of supply. Sir, in such case, sir, how do we apportion the value? Apportion the value as per the agreement, but agreement is not there, sir. You know, we are unprofessional fellows. So for that we have rule 3. Don't worry. Rule 3 says what? Sir, if at all you are advertising through newspapers or publications, you're advertising through newspapers or publications, based upon the amount payable for all the editions in each state. So state wise, for all the editions, how much amount is payable? Based upon the amount payable for all the editions in each state, in that ratio you split. Sir, if it is advertisement through printed material like pamphlets, leaflets, diaries or calendars, t-shirts, etc., again amount payable for each state in the distribution, in that ratio. Sir, what about advertising in hoardings? You see, like everywhere central government is advertising their Swachh Bharat mission hoardings, etc., etc., then how much amount is payable? How much amount is payable for the hoardings in each state, in that ratio? You are advertising on trains, sorry, you're advertising on trains, then based upon the length of the railway track in each state, you should apportion the value. That you are advertising on the back of utility bills, some electricity bills, etc., etc., then number of consumers in each state with respect to that utility bills. Sir, you are advertising on railway tickets, number of railway stations in the state. Okay, you are advertising in radio stations, amount payable to such radio stations in each state, for how much radio stations, how much you will pay, in that ratio you should split. Sir, you are advertising in televisions, internet or SMS. Now, if it is television, go through viewership. If it is internet, through internet subscribers. If it is SMS, telecom subscribers. In that proportion, how many of them are there in that particular state? Sir, in that ratio you should apportion them. Here one interesting thing for all these three things, the common point is, sir, understand, if you are going through TV viewership, sir, TV viewership is published by Bark. Internet, try internet subscribers. SMS, telecom subscribers, try again. Sir, how they will do this? Now, see, all the three cases, the information is published on weekly basis. On weekly basis, you are calculating place of supply for any particular transaction falling in this particular period. You should see preceding quarter. For example, something is happening in Jan to March. Sir, between Jan to March, some transaction has happened. You are calculating place of supply for that, and you should see preceding quarter, that is October to December. In December last quarter, whatever the information has been published, that you should take and you should use. Okay, I repeat, viewership data published by Bark in the preceding quarter last week, in that ratio for all the states. For example, I am advertising in Andhra, Telangana, Tamil Nadu, Karnataka, Kerala. Sir, in those cases, for a particular news channel, for these 5 states, in that news channel, in the preceding quarter last week, what is the viewership for all these 5 states? In that ratio, you apportion that. Now see, for example, sir, in internet, let me take internet subscribers. Who will publish? Try will publish. Try is saying in Tamil Nadu 1 lakh, Karnataka 1,50,000, Telangana, Andhra put together. Sometimes 2 or more states they will publish a single figure. They will not give separate figure. For Telangana, Andhra, let us assume they have given same number 3 lakhs. Kerala 50,000. This is the figure. Okay, the internet subscribers. Now what we should do, sir? First of all, where the numbers are published together, first we should split them. So we should split them in what ratio? Sir, we should split them in the ratio of the population. Just for our calculation to be easy, I am splitting them in the ratio of 2:1, assuming the population is that way. Okay, so state wise you segregate them. So 120 lakhs we are spending in the internet to advertise in all these 5 states. So for this 120 lakhs, 5 states will be place of supply. 5 states will be place of supply. Sir, this 5 states, how do I apportion? Apportion that based on the internet subscribers in the state. So internet subscribers data, how I will get? You will get it from Troy. Which week data I should take? Preceding quarter last week data you should take. So preceding quarter last week data we have taken for all the 5 states. But Telangana, Andhra Pradesh, they give consolidated figure. So what we will do, first Telangana and Andhra, we will split them based on what ratio? Population ratio. Based on what ratio? Population ratio. And then we will proceed. So here, for our calculation to be more easy, I have just taken the round figures, all that. So I have taken them. So now we will calculate the ratio like this. So 1 lakh In Tamil Nadu, the internet subscribers 1 lakh 50 in Karnataka, 2 lakh in Telangana, 1 lakh in AP, and 50,000 in Kerala. So we will get the ratio 1 is to 1.5 is to 2 is to 1 is to 0.5. In this ratio, we will split this 120 lakhs, and for 20 lakhs, place of supply will be Tamil Nadu, 30 lakhs place of supply will be Karnataka, 40 lakhs Telangana, 20 lakhs AP, and 10 lakhs Kerala. For those amounts, the place of supply will be those states. That is how you do even for telecom subscribers or even TV viewership. Only difference is that TV viewership is published by BARC, Broadcast Audience Research Council. Internet subscribers published by TROI. Telecom subscribers published by TROI. Publishing authority is different. Remaining everything, the procedure, everything is same to same, nothing to worry. Okay, so highly very less chances of being tested in your exam, nothing to worry. Okay, so that is what with respect to 12 subsection 14 also. So with this we are done with section 12. So with respect to a clarification here regarding advertising sector where the hoardings are being used for advertisement, please understand, generally the companies wants to advertise their products in the hoardings, etc., they will approach the advertising agencies. So advertising agencies will provide services of advertising to the companies. So there is no doubt with respect to here. So this is advertising service, place of supply shall be determined as per section 12 subsection 2 only. Now the point is that these advertising agencies will approach the hoarding owners, and now the hoarding owners are providing services to advertising agencies. In such cases, how the place of supply will be determined? See, there can be two possibilities. I am the hoarding owner, your advertising agency coming to me and asking, Vishnu sir, we want this hoarding, we want to advertise various products. I told, you don't touch the hoarding, you tell me what should be advertised, what banner should be changed, all that stuff, I will take care. I will provide you complete service, you pay me 1 lakh. Okay, like that I am asking. So here hoarding will be completely under my control. You want me to advertise MRF tire, I will advertise MRF tire. You want me to advertise Santur soap, you tell me, I will advertise Santur soap. Like that, I will take care of that. That means the hoarding owner, we are calling as vendor here, that is providing what? Advertising services to advertising agency. So how do you determine place of supply? As per section 12 subsection 2. Okay, general rule. But if I am the hoarding owner, I am telling you, you pay me 1 lakh, you do whatever you want with that hoarding for the entire month. So complete hoarding will be in your control. Complete hoarding will be under the control of advertising agency. So what the vendor, the hoarding owner is doing here, the hoarding owner is renting the hoarding, which is nothing but an immovable property. So the place of supply will be determined as per section 12 subsection 3. So that is what the concept, that is what the clarification here with respect to the place of supply in case of advertising sector. Okay, especially with respect to hoardings. The next one, the next amendment is with respect to place of supply. Please understand that there is a clarification with respect to place of supply in section 10 subsection 1 clause CA. You know, any supply made to unregistered person, any supply made to unregistered person, the place of supply will be the address recorded in the invoice, the address recorded in the invoice. Even for recording the address, you know that, sir, even if the state name is recorded, that is more than sufficient. Now the doubt was, when anybody is buying, any unregistered person is buying through e-commerce operator, sir, he will be giving his address when he is making an online purchase, all the stuff. So that address will be recorded. Yes, place of supply will be that address. But the problem is, the billing address is different, the shipping address is different. When let us assume you are making a purchase in online, you are ordering something in Amazon during Feb 14th. Billing address is yours, shipping address is others. Okay, in such case, sir, there are two addresses recorded in the invoice. One is billing, the other is shipping. Which address we should take as place of supply? Then the department has clarified, sir, place of supply shall be the shipping address, not the billing address. That means the delivery address will be taken as place of supply, not the billing address. Billing address will not become the place of supply. That is a small amendment here with respect to sale of goods through e-commerce operator to unregistered person, So in this video we are going to see the time of supply chapter, and you know, time of supply chapter in CA Inter Syllabus, it is dealing with two sections, section 12 and 13. Actually time of supply covers three sections, 12, 13, 14, but section 14 is dealt in CA final level. So in this syllabus we are going to see section 12 and 13, but to understand section 12 and 13 we need to know what is section 31, the time limit to raise tax invoice. So we will be covering section 12, time of supply for goods, section 13, time of supply for services, and section 31, time limit to raise tax invoice. Coming to section 31, time limit to raise tax invoice. See, we are dividing that into two parts, goods and services. First, we'll discuss time limit to raise tax invoice for goods as per section 31, and then we'll go with section 12, time of supply for goods, right? So, as per section 31, time limit to raise tax invoice for goods. See, there are three situations here. First thing is, we should check, actually speaking, four situations. Sir, first, what we have to see, whether movement of goods is involved or not. Sir, if the movement of goods is involved, first of all, don't worry about this material. You can download this from the Telegram channel, the soft copy of the classroom. So, of the class note, sorry. So, that is available in the description in the video. Right. Coming to the discussion. Supply. Supply is involving movement of goods, that we have to check. If the movement of goods is involved in the supply, then what we have to do, we should raise the invoice on or before removal of such goods. No sir, movement is not involved. Movement is not involved. In any other case, on or before making the goods available to the customer or the delivery to the customer, you should raise the tax invoice. That means, if for example, I am selling 10,000 kg raw material to you, and that 10,000 kg raw material I am sending it from Tirupati to Chennai, then the movement of goods is involved. Sir, in such cases, what I have to do? Simple, on or before removal from my godown, I should raise the tax invoice to you. And if there is movement not involved, for example, you are going to a mobile shop purchasing a mobile, sir, at the time of making the goods available to you, that shopkeeper has to raise the invoice for you. So, on or before making the goods available to the customer or delivery. Okay, so that is the time limit to raise invoice. Now, the different case is, sir, what if it is a continuous supply of goods? Sir, continuous supply of goods is nothing but a recurring transactions where you take the periodical transactions. It is not like a one-time transaction. So, as per the contract, there are periodical transactions involved. In such case, see, for example, now I am going to supply to you particular goods for 6 months, and every month on first Monday, I will be delivering you 10,000 kg raw material at 50 rupees rate. So, that is a contract between you and me. Now, in this case, when there is continuous supply of goods, please understand, when there is continuous supply of goods, sir, what is the time limit to raise tax invoice? On or before issuance of periodical statement, or on or before receipt of periodical payments. That means, I will issue, there can be a case where I am issuing periodical statements to you, and based on that statements, you will release the payment. Or you know the details of what and all the goods are received at what time, and you keep on making the periodical payments, whatever the case may be, as per our agreed terms. If at all I am issuing the periodical statement and you are making the payment, then, sir, on or before issue of periodical statement, I should also raise the invoice. Otherwise, sir, if our situation is like you are settling the periodical payments, sir, on or before me receiving periodical payment from you, I should make the payment, I should raise the invoice for you. So, simple here, if it is continuous supply of goods, sir, if it is continuous supply of goods, on or before issuance of periodical statement by the supplier or receipt of periodical payments from the recipient, supplier has to raise the invoice. So, that is what the concept. As the case may be here, it is not whichever is earlier in the law. So, it is not whichever is earlier. But here, next case, if you see, goods sent for sale on approval basis, goods sent for sale on approval basis. If you send goods to anybody for sale on approval basis, please understand, the law says, please bring back the goods within 6 months or raise the invoice. Sir, within 1 week only has accepted the goods, sir. Then, at the time of acceptance, please raise the invoice. So, what is the time limit to raise invoice for goods sent for sale on approval basis? Na? Sir, on at the time of acceptance, at the time of supply. At the time of supply means at the time of acceptance, or within 6 months from the date of removal from the godown, whichever is earlier. Okay, so within that time I should raise the invoice. This is section 31 part 1 related to goods. Section 31 part 2 will discuss after section 12 is discussed. Now, coming to section 12. Coming to section 12. So, section 12 says the time of supply of goods. Please understand, section 12 and 13, you know already. So, section 12 and 13 both are talking about time of supply of goods, time of supply of service, and both the sections has 6 subsections. Subsection 1 in both the cases says go with the following subsections. Subsection 2 talks about general rules. Subsection 3 talk about RCM goods and RCM services. What is the time of supply? Subsection 4 talks about time of supply for vouchers. Subsection 5 residual case. Subsection 6 interest or late fee for delay in payment of consideration. So here the interesting thing is, sir, subsection 3, 4, 5, 6. All these 3 subsections are ditto same in 12 and subsection 3. Section 12 subsection 3 and 13 subsection 3, except for the words goods and services. Clear? So if you know 12 subsection 4, 5, 6, same provisions are for 13 subsection 4, 5, 6. Whatever are applicable for goods, same thing are applicable for subsection 13 services also. So now, first let us go with 12 subsection 2. 12 subsection 2 general rule, time of supply for goods. Sir, what is 12 subsection 2 says? 12 subsection 2, I will tell you a very simplified way, please understand. So 12 subsection 2 says, after taking into consideration a notification also, notification number 66 bar 2017. Sir, actually time of supply provisions as per section 12 subsection 2 is actual date of invoice or due date of invoice, that is date of invoice as per section 31, whatever you have to raise, or date of payment, whichever is earlier. Later on, government through notification number 66 bar 2017, they have exempted that. So taking all these things into consideration, you just remember 12 subsection 2, sir, it is time of supply is actually when you are raising the invoice, or at what time you should have raised the invoice under section 31. In simple terms, I call it as actual date of invoice or date of invoice. That means ADOI or DDOI, whichever is earlier. Just remember that way. 12 subsection 2 says ADOI or DDOI, whichever is earlier. Actual date of invoice or due date of invoice. Clear? Now, another interesting thing is, recently because of this specified actionable claims concept, what we have seen, sir, you know, specified actionable claims also nothing but goods. And for specified actionable claims, GST is applicable. And the time of supply for that is not ADOI or DDOI, whichever is earlier. Sir, it is date of payment. That means immediately taxable. That means, you know, specified actionable claims actually we have discussed in supply chapter also. Lottery, betting, gambling, casinos, online money gaming, and horse racing. For these cases. So, in simple words, I can say, sir, section 12 subsection 2. Task for goods. Sir, I will divide that into two cases. If it is specified actionable claims, straight away date of payment. If it is other goods, ADOI or DDOI, whichever is earlier. Okay, so that is 12 subsection 2. Here the interesting part, you should know, advances received in case of supply of goods are not taxable, unlike in 13 subsection 2. For services, advances received are immediately taxable, but for goods, it is not that case. Hope you remember that provision. Okay, again in 13 subsection 2 also we'll see that. So if you go through this example, sir, there is 10 lakh consideration for the machine to be assembled, all that stuff. So we have given all the details. You can just go through a simple one only, nothing to discuss here. So what I am just stressing here in this point is nothing but, even though advance received, it is not immediately taxable. So that point we have to keep in mind. So for advance also ADOI or DDOI, whichever is earlier. For the balance payment also you have to apply ADOI or DDOI, whichever is earlier. So ADOI, they will give in the question, sir, what is the actual date of invoice? 11th October, like that. But what is the due date of raising the invoice? That you will understand only by referring section 31. Okay, so here this is a machine which has to be assembled at site and accepted by buyer. So in that case, sir, the movement of goods is not involved. Sir, the goods are being handed over to the customer on 5th October. So that is the date of invoice on that is the date on which invoice should have been raised under section 31. So that is due date, and actual date is 11th October. So which is earlier? 5th October is earlier. So that will be the time of supply. That will be time of supply for the 55,000 advance also, as well as 9,45,000 balance payment also. Clear? So that is 12 subsection 2 for you. Next one, coming to 12 subsection 3. Simple. 12 subsection 3 is with respect to time of supply for goods covered under reverse charge mechanism. 12 subsection 3, remember 3 dates. See, the 3 dates will be time of supply for goods covered under RCM. 3 dates will be date of receipt of goods, date of payment, 31st day from actual date of invoice, not due date of invoice, actual date of invoice. Clear? So here, first of all, before going into this provision, I will tell you one thing. See, whenever you are talking about in time of supply, a concept called date of payment. Remember, date of payment we should see from two different angles. Whether date of payment, if the time of supply provision you are seeing, who is liable to pay GST? Sir, if supplier is liable to pay GST, date of payment meaning you should see from supplier point of view. Sir, if recipient is liable to pay GST, you should see date of payment meaning from recipient point of view. Hope it is clear for you. See, sir, okay, sir, I will see that from their point of view. But what is date of payment meaning? Date of payment meaning is, sir, if you see from supplier point of view or recipient point of view, I repeat, date of payment is nothing but date of entry in books, date of debit or credit in the bank account. Suppose if you are seeing it from supplier's viewpoint, date of payment meaning, date of payment means date of entry in the books of supplier's books of accounts, date of entry in the supplier's books of accounts, or date of credit in the supplier's bank account, whichever is earlier. But if you are seeing from recipient point of view, date of payment means date of entry in the recipient books of accounts or date of debit in the recipient bank account, whichever is earlier, as the case may be. So recipient's view, it will be useful for you in section 12 subsection 3 and 13 subsection 3, because in those cases recipient is liable to pay GST. So time of supply provisions will be seeing from recipient's point of view, not from the supplier's point of view. Okay, now hope it is clear for you. Coming to 12 subsection 3 again, sir, what is the provision? What is the provision? 12 subsection 3 says, time of supply for goods covered under RCM, date of receipt of goods, date of payment, and 31st day from actual date of invoice. I repeat again, it is not due date of invoice. And here, sir, when we are talking about date of payment, sometimes in the question they'll give you date of entry also, date of credit or debit, whatever it is. Sometimes they will just give date of payment. So if they give date of entry as well as date of debit or credit, compare those dates with these dates also and see whichever is earlier. Otherwise, date of payment alone might be given. So please take care of that. That's all. Okay. So that is 12 subsection 3. Okay. One point here is the relief of not paying tax on the time of receipt of advance for goods is there in only 12 subsection 2. Here in 12 subsection 3, that relaxation is not there. That means if the goods are covered under reverse charge mechanism, sir, GST will be payable by the recipient. That means when the recipient is giving advance to the supplier, at the same time he should also pay GST to the government. And of course he can take ITC, that's a different story. Okay. So now the point is, I am repeating, sir, this is important point. What it is? The relaxation to not pay GST on advances of goods is only under section 12 subsection 2, not under 12 subsection 3. Okay, so in 12 subsection 3, if the goods are covered under RCM, if advance is paid to the supplier, then recipient will pay advance to the supplier and will pay GST to the government, because date of payment will be earlier here. Okay, so please keep that in mind. And next, by any chance, if you see, this is a similar provision which you will find even under section 13 subsection 2 and subsection 3 also. Sir, by any chance, if you are not able to identify time of supply as per the provisions given in 12 subsection 3, then the time of supply will be the date of entry of receipt of goods in the books of the recipient. So when the recipient has recorded in his books about the entry of the goods, that will be the about the receipt of the goods, that will be the time of supply. In any circumstance, by any chance, to cover the exceptional cases here, sir, if time of supply cannot be identified because of the 12 subsection 3 provisions, then what will be the time of supply? Time of supply will be nothing but when the recipient has entered in his books of accounts regarding the receipt of goods, that will be the time of supply. Okay, so that is 12 subsection 3 for you. So 12 subsection 4, nothing but time of supply in case of vouchers. So whenever the vouchers are given, sir, vouchers, please understand the time of supply is nothing but if the supply is identifiable, then the time of supply will be the date of issue of the voucher. If supply is not identifiable, date of redemption of the voucher. Of course, through the recent budget, this has been removed, and of course will be removed from the upcoming attempts. Nothing to worry. Next, 12 subsection 5. 12 subsection 5 is a residual case, guys. Sir, residual case in that if 12 subsection 2, 3, 4 is not applicable, in that case, what is the time of supply? Sir, we have to see whether, first the fundamental question what we have to ask is whether the person is required to file periodical return or not. If he is required to file periodical return, then the date of filing such periodical return will be the due date for filing, the due date for filing such periodical return will be the time of supply. No, sir, he is not required to file periodical return, then the date of payment of tax itself will be the time of supply. So here, see, there is an example given. Investigation reveals clandestine removal of goods by a supplier who is not registered under GST. So without paying taxes, he has removed the goods. That means he has supplied the goods, and the evidence is in the form of noting of an undated and some corroborative material, all that. So the department has identified all the information, gathered the information and identified that this fellow has removed the goods without actually getting registered, even though he is liable for registration. The supplier voluntarily pays tax during the investigation to close the case. That's a different story. The time of supply for this will be the date on which the tax is paid as being unregistered. Supplier is not required to file periodical return. So as I was telling here, sir, a person has cleared the goods from his business premises without being registered. Actually here the problem is he is liable for registration and he did not register and clear the goods without paying tax, even though he is liable for taxes. So during the investigation process itself, he has paid the taxes to avoid the penalties, etc., etc., and all. Now in that case, sir, what is the time of supply for that amount? That amount will not come under section 12 subsection 2 or subsection 3 or subsection 4. You cannot take time of supply in those cases. So what we have to do, you should never feel like, sir, I don't have time of supply for my case, I will not pay GST. Sir, when subsection 2, 3, 4 is not helping for you, subsection 5 is designed specially for you people. So come here and it says if you are required to file periodical return, this fellow is not registered here, so he is not required to file periodical return. So if at all anybody is required to file periodical return and they are caught in this way or something other where subsection 2, 3, 4 is not applicable, then they can go with due date for filing return if they are already registered, and if the periodical return is not required to be filed, then the date of payment of GST itself will be taken as time of supply. Simple. Don't feel like you don't have time of supply for your case, and don't feel like I am not able to pay GST. 12 subsection 5 is waiting for you. Okay, that is 12 subsection 5. Next, Finally, 12 subsection 6. 12 subsection 6. 12 subsection is nothing but time of supply for late fee, penalty, or interest. Guys, please understand, whenever we talk about late fee, interest, penalty, all that stuff, especially when you hear the word interest, in GST, interest comes in two circumstances. One is, please understand, one is, so interest will be dealt in two cases. See, interest, first of all, one is we are allowing to use money to somebody and charging interest. That means you are giving loan, advance, deposit, something, and they are paying interest. This, it is exempt under GST. Sir, the next one is, sir, we are selling goods or services to somebody, and for late payment, we are charging interest. You call it interest, somebody will call late fee, somebody will call it penalty. That's a different story. But why you are charging it? Because there is delay in payment of tax. So please understand, interest is dealt in two cases. One is you extend the loans, advances, deposits. For that, if you get interest, it is exempt under GST. Here we are going to talk about, that when we allow somebody, the customers, to make late payment, the supplier allows the customers to make late payment because of supply of goods and services. For that, the consideration is being paid late. That interest will form part of value of supply and it will be subjected to GST. For that, what is the time of supply? The time of supply is the date of receipt of such payment. Here, if you see, if you observe the interesting point, here the time of supply under 12 subsection 6 for this is date of receipt of payment. That means if the recipient doesn't pay, if at all I am selling some goods to you and I am asking you to make payment within this particular time, within 30 days, etc. If you don't pay within 30 days, you should pay 5,000 penalty like that I told, or 5,000 interest you should pay like that I told. Wording can be anything. It can be interest, late fee, penalty, whatever you want you call. Sir, if you are not paying, I am asking 5,000 penalty, please pay, but you are not paying, then time of supply will not come into picture. Then there is no GST applicability. So understand, this is the only case in GST where if the customer doesn't make payment of tax, the supplier need not pay GST to the government. Isn't it interesting? So that is what all about section 12. Okay, with this we are done with time of supply for goods. So the next one with respect to part 2 of section 31. So time limit for raising invoice for services. So the time limit for raising invoice for services, if you see the general rule is nothing but, on or before completion of, on or before provision of service, you can raise the invoice, no issues. And sir, from the date of completion of service also, within 30 days you can raise the invoice. That means simple, within 30 days from the provision of service, you can raise the invoice. That is what the law. That means at the time of completion or even after the completion, within 30 days, yes, you can raise the invoice, no issues. If at all you are a banking company, financial institution, insurance company, including NBFC, then the time limit is 45 days. You have to raise the invoice within 45 days. So that is the general rule. I repeat, general rule for raising invoices within the completion of service, within 30 days you should raise the invoice. Okay. And if at all you are a insurance company, banking company, financial institution, or NBFC, you can raise the invoice within 45 days instead of 30 days. But sir, if the service ceases, the supply ceases before completion, that means even before completing the service. For example, you are doing audit for the books of accounts of my company. Sir, after 4 days of doing audit, you fell sick or there is some emergency, you are cancelling the contract, you are just leaving. For the 4 days work you have done, whatever it is, sir, you are supposed to raise the invoice. That means you should raise the invoice at the time of cessation. That is what the law says. So any service, if it gets ended before completion, then for whatever the portion of the work you have done, if you are raising the invoice for that, then you should raise the invoice at the time of cessation itself. That is next case. And the third case, the important case, sir, continuous supply of service. See, I have been discussing in this revision lecture purely the theoretical concepts, the provisions, etc. I am elaborating in the soft copies, notes, everything, the questions, examples, problems, everything has been properly given. If you use the resource properly, that is more than sufficient. So hope you are understanding this is a revision lecture. Okay, that is why I am not able to discuss every example point by point or every concept with examples. I am not able to discuss. Hope you understand that. Now, in case of continuous supply of service, sir, if it is continuous supply of service, we have seen for goods, sir, the time of supply will be on or the time limit to raise invoice will be on or before issue of periodical statement or receipt of periodical payments, as the case may be. Here, what we have to see is, sir, if it is a continuous supply of service, sir, If it is a continuous supply of service, the contract which has been entered between supplier and recipient, are you able to determine the due date of payment from that contract? If due date is ascertainable, on or before due date, due date of payment. If due date is not ascertainable from the contract, then on or before the supplier receives the payment, he should raise the invoice. For example, I am supplying some construction activities for you. So continuous supply of service, please understand. The continuous supply of service means it is defined that where the service is provided or agreed to be provided continuously on recurrent basis under a contract for a period of exceeding 3 months with periodic payment obligation, and of course includes supply of such services as the government may notify. So for this purpose, if you see construction, you are doing construction of my house and we are entering into a contract where due date is ascertainable in the contract, then contractor should raise the invoice, the supplier should raise the invoice on or before the due date. No sir, due date is not ascertainable from the contract. Then when the contractor, the supplier should raise the invoice. So the contractor will raise the invoice on or before receiving the payment. No sir, the interesting point is, sir, if the payment in the contract is linked to completion of an event, sir, completion of an event. In such case, please understand, on or before completion of that event, on or before completion of such event, the supplier, that is the contractor, has to raise the invoice. For example, we are constructing the house. I told, if you finish the foundation, I'll give you 5 lakhs. If you finish the first floor slab, I'll give you 5 lakhs. Like that, we have kept some milestones for some events. Only after completion of that, supplier can raise the invoice. So at the time of completion of that milestone, he can raise the invoice. Clear? That is what the point. So I repeat, continuous supply of services. What is the time limit to raise invoice? Number 1, sir, the time limit to raise invoice is if due date is ascertainable, on or before the due date; not ascertainable, on or before receiving the payment. If the payment is linked to completion of an event, then on or before completion of such event, invoice has to be raised. So that is what the concept. Okay. Now, finally, so regarding that, there is an example also. You can just go through a question. Sir, finally, sir, if at all you are an insurance company, banking company, financial institution, including NBFCs and telecom companies, they are making supplies among themselves, that is among their distinct persons under section 25. Sir, when they are making supplies among their distinct persons under section 25, sir, invoice may be issued before or at the time of recording such supply in the supplier's books of accounts, or even before the expiry of the quarter during which the supply was made. There is no concept of whichever is earlier here. So if at all HDFC Mumbai is making a supply to HDFC Chennai, sir, in such cases, sir, invoice can be raised when the supplier is recording this in his books of accounts in this transaction, or even it can be raised by the end of the quarter in which this supply was made. That means you have the entire quarter to enjoy. Okay, so that within the end of the quarter you raise the invoice. That is what they are trying to tell here. So this is section 31, time limit to raise tax invoice. Now guys, please understand, you should be very careful with the question when they are asking regarding time of supply, because sometimes you will calculate time limit to raise tax invoice and then you will feel like that itself is time of supply. Time limit to raise tax invoice is different, time of supply is different. So please understand that when you are calculating, be careful. Whenever you calculate and you get some date as an answer, you feel like that is time of supply. Actually, you might have calculated time limit to raise tax invoice. So please be careful with that. Okay. So let us move on to section 13. So what is the time of supply for services? So in 13 subsection 2, if you see time of supply for services general rule, what we have to see is, as per section 13 subsection 2, we should first see the fundamental question whether tax invoice is raised within section 31 time limit or not. So what is the question we have to ask? Whether invoice is raised within section 31 time limit or not. Answer can be yes, answer can be no. Sir, if the answer is yes, okay, then what is the time limit to raise invoice? Date of invoice or date of receipt of payment, whichever is earlier. You know the meaning of date of payment. Date of payment is nothing but date of entry in the books of accounts of the supplier or date of credit in the bank account of the supplier, whichever is earlier. So that will be the time of supply. No sir, invoice is not raised. Invoice is not raised within section 31 time limit. If invoice is not raised within section 31 time limit, date of provision of service, that is completion of service, or date of receipt of payment, whichever is earlier. So please understand, section 13 subsection 2 general rule is simple. Okay. Whether invoice is raised within section 31 time limit or not, that we should check. Answer can be yes or answer can be no. Sir, if the answer is yes, you will compare actual date of invoice and date of payment, whichever is earlier. No sir, answer is no. Then date of supply of service or date of provision of service, whatever it is, or date of payment, whichever is earlier, that will be the time of supply. So that is section 13 subsection 2. Here, as I told you already, the interesting part is the advance. Sir, because of this, if you see, both the cases date of payment is being compared. So hence it implies what? Whenever the advance is received, so automatically what? It will become taxable. So in 12 subsection 2 there is a relaxation, but in 13 subsection 2 there is no relaxation. So here what I am trying to tell you is, sir, with respect to section 13, sir, except, I tell you, except 12 subsection 2, sir, every case time of supply, it is better to go with calculating time of supply for each and every payment. So for every payment, apply time of supply provisions and calculate. So sometime for all the payments you will get same time of supply, sometimes for different payments you will get different time of supply. Okay, so that is what the concept. Fine. So now if you are not able to, as I already told you under 12 subsection 3, as we have discussed, if you are not able to identify time of supply as per the provisions given here, as per the provisions given in this case, so what you can do, the time of supply will be nothing but the date of receipt, the date on which the receipt of supply has been entered in the books of accounts of the recipient will be taken as time of supply. Clear? So I repeat, if at all in any circumstances, as I told you already, here there is one example, fragrance and co, that you can just go through. Yes, so here there is an example, you can just go through this. Okay, now that is 13 subsection 2 for you. Next, so I have given examples also here. So as I told you already, for each and every payment, better calculate time of supply. So here for advance received, for services, you are taking a function hall on rent. The advances received for services, it will become immediately taxable. But for the balance amount, again you have to apply the provision. So whether invoice is raised within section 31 time limit or not, you check that. And if it is raised within section 31 time limit, then date of invoice or date of payment, whichever is earlier. If not raised, date of provision of service or date of payment, whichever is earlier. Okay, so that is what 13 subsection 2 for you. You can just go with this example. You can pause the video and go with the example. So with this we are done with section 13 subsection 2, and you can just go with ICA study material book back questions of from time of supply chapter. That is more than sufficient, and this is what all about this. Next, 13 subsection 3. Let us move on to 13 subsection 3. And above this there is something related to 1000 rupees that you just ignore, not an issue right now. Next, time of supply for services covered under reverse charge mechanism, 13 subsection 3. So just like 12 subsection 3, here we are seeing 13 subsection 3, time of supply for services covered under RCM. So the provision is simple. Here what you will do is, you will compare just date of payment or 61st day from the date of invoice, actual date of invoice, whichever is earlier, that will be the time of supply. Simple provision. So 13 subsection 3, sir, actual date of payment you check, and 61st day from actual date of invoice, whichever is earlier, that will be the time of supply. So as I told you already, the meaning of date of payment, sir, will be seeing date of entry in the recipient's books of accounts or date of debit from recipient's bank account, whichever is earlier. Suppose if it is not possible to identify time of supply as per these provisions, you know, sir, date of the entry in the recipient books of accounts regarding the receipt of service, just like we have seen in 12 subsection 3, 13 subsection 2, here also we are seeing the same point. Okay, here one more interesting thing is regarding, sir, suppose if you are importing services from your associated enterprise, which is located outside India, then the time of supply will be date of payment for the service or date of entry of the service recorded in the books of the recipient, whichever is earlier. Associated enterprise has the same meaning which is given in Income Tax Act 1961 section 92A. Not that greatly relevant for you, don't worry. So simple, just remember, if from associated enterprise you are importing the service, then the time of supply provisions is nothing but, sir, date of payment for such service or date of entry in the books of the recipient, that is the person in India, whichever is earlier. So that is what 13 subsection 3. So here we have an example also for that. You can just go through 13 subsection 3 examples. Okay, so this is the example. You can just solve this. Right, you can just pause the video and go through this. With this we are done with section 13 subsection 3. So I can also tell you that, sir, we are done with section 13 because 13 subsection 4, 5, 6 are nothing but ditto, same like 12 subsection 3, 4, 5 and 6, except for the words goods. Here there is services, the provisions are same, that vouchers, residual case and interest payments. So with this we are done with section 13 as well. Now if you see the next one interesting amendment in section 13 subsection 3. So what is section 13 subsection 3, sir? Time of supply for services covered under RCM. So tasks for services, tasks for sauce covered under RCM. Okay, time of supply for services covered under RCM. You know, generally time of supply for services covered under RCM are nothing but date of payment next 61st day from the actual date of invoice, not due date, actual date of invoice. So date of payment means maybe entry in the books of the recipient or debit in the books of the bank account of the recipient, as the case may be. So this was the time of supply before. Now what the department has did now, see, understand, you are comparing 61st day from the actual date of invoice, okay, but if invoice is issued by the supplier, that is the case. But in case of reverse charge mechanism, there is a concept of self invoice also, where supplier is unregistered, recipient has to generate invoice on himself. Self invoice concept we have seen. So now what is the concept here now? Sir, supplier is issuing the invoice, na, no problem, sir. This time of supply is useful. But there was a scenario where, sir, supplier is unregistered and recipient has to raise invoice on his own. Then what will be the time of supply? So the section 13 subsection 3 was not addressing this. Please understand, I repeat, this amendment is only in section 13 subsection 3, but not in section 12 subsection 3. So 12 subsection 3, you know, time of supply for goods covered under RCM. So time of supply for goods covered under RCM is nothing but what? Date of receipt of goods, date of payment, or 31st day from actual date of invoice. But 13 subsection 3 alone got amended. 12 subsection 3, they did not touch anything regarding this. So 13 subsection 3 says, what is time of supply means? Date of payment 61st day from the actual date of invoice. That is very important. Actual date of invoice if the invoice is raised by the supplier. No, sir, supplier did not raise the invoice. Then you don't take this one, take date of payment and actual date of issue of invoice. Date of issuance of invoice means we are talking about the actual date of issuance of invoice, whichever is earlier. If the invoice is to be issued by the supplier, 61st day, you will compare from the actual date of invoice. But if the invoice is raised by the recipient, you will take actual date of invoice itself. That will be the time of supply. Okay, so date of payment, if invoice is raised by the supplier, time of supply will be 61st day from the actual date of invoice, whichever is earlier. No, sir, if the invoice is raised by the recipient, date of payment and actual date of invoice of the recipient, when the invoice has been raised by the recipient, whichever is earlier. So if it is FCM, you will compare, sorry, if it is supplier raised the invoice, you will compare point 1 and 2. If the invoice is raised by the recipient, you will compare point 1 and 3, whichever is earlier. Okay, hope it is clear. I repeat again, section 13 subsection 3 alone got amended. Section 12 subsection 3 doesn't have any such amendment. So 13 subsection 3 says, sir, invoice is raised by the recipient. Now time of supply is simple. Invoice is raised by the supplier. What is the time of supply? Time of supply will be date of payment or 61st day from actual date of invoice, ADOI, whichever is earlier. No, sir, invoice is raised by the recipient himself. So recipient himself. Then what is the time of supply? The time of supply will be date of payment or actual date of invoice by recipient, whichever is earlier. Simple. So this will be the time of supply. Okay, hope it is clear for you. Please be careful with this. Okay, so this is one interesting amendment here. And yes, anything else in this I just wanted to discuss? So no, that's all. So this is what the simplified version of that section 13 subsection 3. Hope it is clear for you. So this is what the amendment in 13 subsection 3, time of supply. So now coming to the clarification with respect to the services provided by people, that is the concessionaries we are talking about, who have entered into contract with the National Highway Authority of India. Okay, so where they are entering into contract to construct the roads and operate them and maintain them over a period of 15 to 17 years. In such cases, the payments are spread across the years. In such case, what is the time of supply we should consider? That is what the doubt. Here the department has clarified that these services are nothing but, see, should be seen as continuous supply of service, where it is a single contract to construct, operate and maintain those roads over a period of 15-17 years, and because of the payment terms are spread wide across, you cannot treat it as different contracts. So here, sir, it should be treated as a continuous supply of service, and accordingly you should determine time of supply. So if the invoice is raised within the time limit, so first you should see, you should raise the invoice as per the time limit section 31, considering it as continuous supply of service. Number 2, while identifying time of supply, you should see whether the invoice is raised within section 31 time limit. If it is raised within section 31 time limit, then the date of invoice or date of payment, whichever is earlier, will become the time of supply. If the invoice is not raised within the due date, then the date of provision of service or date of payment, whichever is earlier, will become the time of supply. So that is what the clarification all about. So the next one is regarding time of supply for services of spectrum usage and other similar services, like usage of any natural resources which government is allotting to successful bidders. Here the problem is, sir, the Department of Telecom is allowing the people to use the spectrum, that is the spectrum allocation is provided, and for that spectrum license people are paying the amount. Now first of all, the point is here, government is providing services to business entities, and you know GST will be charged on RCM basis. Okay, so this is first clarity for you. So GST is payable on RCM basis by the telecom companies which are taking the spectrum license. Here there was a small confusion. Actually here what the point is, suppose if at all Jio is getting a telecom license of 4G or 5G, whatever you say, and imagine if it is for 100 crores. There can be two possibilities: 100 crore one time upfront payment, or it may be paid in installments. When 100 crore is paid one time upfront payment, full upfront payment, that means straight away before the spectrum license, the service starts itself, they are making the payment. In such cases, the time of supply is obviously when the upfront amount is made or due, whichever is earlier. Okay, so there was no problem here. But actually, if at all it was paid in installments, for example, imagine that 100 crore was allowed to be paid in 10 installments over a period of 5 years. Just imagine, over a period of 5 years. Now, there was a problem, there was some small sort of confusion with respect to department officers with respect to this. Hence, they have issued some notices and asked the telecom companies, there is a delay in payment of tax, all that, so you pay interest also, all that, like that. That is not relevant for us. So now department is clarifying here. So to the field officers, see, if at all this spectrum license, whatever they have taken, or even any other natural resources what they have taken, if they are paying the consideration in installments, please understand the time of supply will be, these are nothing but similar to continuous supply of service, because it is exceeding 3 months. So it is continuous supply of service. So the time of supply for this is, please understand, when the payments are due or made, because in these cases, please understand that the due date to make payment will be fixed in the contracts. For example, 100 crore you should pay in 10 installment 5 years, na? The due date is fixed actually. So these people will make the payments as and when the amount is due. So the department has clarified that GST will be payable here in these cases as and when the payments are due or made, whichever is earlier, not when the contract was allocated or when the license was allocated. The same treatment, the similar treatment we are also will be treating to all other natural resources which are allocated to successful bidders. So hope it is clear. Why they gave this clarification, all that irrelevant for us. Simple. What is that they are trying to tell? If any resources, natural resources or spectrum license, etc., allocated by government to business entities, that's simple. First of all, GST liability will come under RCM. Number 2, if at all, how the payment is made? The payment is made upfront payment, no problem. As and when the upfront payment is made or due, whichever is earlier, that will be the time of supply. That will be the time of supply. No sir, if the payment is made in installments, here the installment dates are fixed, due dates are fixed. So in that case, what the department is saying, hey, whenever the amount is due or made, whichever is earlier, you take it as time of supply and tax it accordingly. That is what they are telling us. So that is what the clarification here with respect to spectrum license, and also the same clarification is applicable to all other natural resources which the government is allocating to successful bidders. So in this chapter, if you see first value of supply, you know, like it is dealt in section number 15, and section 15 has 5 subsections, 1, 2, 3, 4 and 5. So 1, 2, 3 mainly is talking about value of supply, inclusions and exclusions. Subsection 4 and subsection 5, subsection 4 and subsection 5 purely in CA final only, in CA intermediate it is not there. That is the structure of this particular section and chapter in your CA course. Now coming to the value of supply, you know sir, GST is a rate and that rate should be imposed on a value. So for that, what should be taken as value of supply? Simple, the law says value of supply nothing but transaction value you should take as value of supply. The transaction value means what? Transaction value means whatever the price is paid by the recipient to the supplier. Sir, will you believe that price whatever they are dealing with? Yes, provided they are not related and they are paying only monetary consideration, that is price is the sole consideration. So transaction value will be taken as value of supply. That means price actually paid or payable will be taken as value of supply, where supplier and recipient are not related and price is the sole consideration, that is monetary consideration only, then only transaction value will be taken. Okay, in the law, if at all these conditions are violated, then we should go with valuation rules. Okay, right. In the law itself, they have given some inclusions and exclusions. See, I have given a small notes here. Okay, here if you see, one second, if you want you can take a screenshot of this also, right? One second. For the transaction value, you can take some inclusions and exclusions which are given in the law itself, hope you have taken the screenshot, right? Let us go forward without wasting the time. First of all, sir, understand, in the law they have given 5 inclusions, 1 exclusion. Just remember, like Pandavas and Draupadi. Okay, 5 inclusions and 1 exclusion will finish the 15 subsection 1, 2 and 3. Okay, now coming to inclusions, what and all should be added to value of supply? Sir, what and all should be added to value of supply? All taxes and cess whatever you see other than GST and TCS under income tax, not GST. Okay, so all taxes like municipal tax, entertainment tax, customs duty, whatever it is, sir, everything you add it to value of supply other than GST, that is other than CGST, SGST, UTGST, AGST and GST compensation cess, and also TCS under income tax, you don't add it to the value of supply. That is what the concept. Okay, right, that is number 1 addition. Next, number 2, payment made by the recipient which is to be incurred by the supplier. That means in simple words I'll tell you, obligation of the supplier discharged by the recipient. If the obligation of the supplier is discharged by the recipient, then that should be added to the value of supply. Here, see, for example, see, you are coming to me to purchase some furniture, let us assume furniture in the example. Okay, let us assume furniture, you are coming to buy some red sandalwood furniture with me. Sir, for that I am charging 10 lakhs plus GST. What you are saying, Vishnu sir, out of the 10 lakhs we will pay you only 6 lakhs. You are buying the goods, the red sandalwood, from your friend Mr. Pushpa, unregistered fellow, no? To him we will pay that 4 lakhs directly, and to you we will pay only 6 lakhs. You charge GST only on 6 lakhs, sir. Like that you are asking. I said, okay, fine. But what the law says, that 4 lakhs is obligation of Vishnu and discharged by the students. That should also be added to the value of supply. So it will be total 10 lakhs on which I should charge GST. This is what the concept. Okay, so just go through this example. So I repeat, obligation of the supplier discharged by the recipient, obligation of the supplier discharged by the recipient, then it will be added to the value of supply. That means you don't try to cheat the government by playing these tricks. Okay, so that is what the point. Next, what is the next one? The incidental expenses. The third inclusion is incidental expenses. Whatever incidental expenses supplier is incurring and recovering from the recipient. Okay, that means let us assume packing charges, transportation charges, weighing charges, whatever it is incurred by the supplier, recovered from the recipient, then it will be added to the value of supply. That is what the concept. Okay, fine. Next, interest, late fee, penalty for delay in payment of consideration. This is something interesting here. Now please understand, in GST whenever you go through interest, understand, whenever you go through interest in GST, the interest will come in 2 circumstances. Number 1, you are taking loan from somebody, or you are taking advance or deposit for which you are paying interest. So I say that interest by way of extending loans, advances or deposits, that is exempt under GST. Okay, sir, for you, hint is, for this type of situations there will be 3 parties. You are selling, buying and lender. Sir, you are buying some goods, for that you don't have money, you are going to some third person and asking some loan, and that fellow is giving, for that you are paying interest. So here he is giving you money and for that he is charging interest. Okay, that is exempt under GST if you remember the exemptions. Second situation is, sir, I am selling some goods to you. You are saying, Vishnu sir, I don't have money, I'll pay after 30 days. I said, no problem, pay 1000 rupees interest, pay 1000 rupees interest. So you are paying me 1000 rupees interest. That will be added to the value of supply, and whatever the treatment for the principal supply, the main thing what I am selling to you, On that, whatever tax is applicable, the same will be applicable on this interest also. That means, understand, interest will come in two circumstances. One is for extending loans, advances or deposits, where I am giving you loan or allowing you to use my money and I am charging interest, exempt under GST. The second scenario is where I am only supplying some goods or services to you for which you are making payment to me but paying late interest or late fee or penalty for delay in payment of consideration. So that will be added to value of supply and will be subjected to GST. Okay, so that is what the point. So here that is regarding interest. And one mistake what you do in the problems with respect to interest, sir, interest, should I assume it as inclusive of GST or exclusive of GST? Please understand, question there can be two types. One is they will just say in the question interest paid, late fees paid. I repeat, this interest we are talking for delay in payment of consideration, that only should be added to the value of supply. So in that case, question you have two things. One is they'll give just interest paid 10,000. They will not talk about whether extra GST you have received, etc., etc., nothing. That means what? You have got 10,000 rupees interest. You assume it as inclusive of GST and proceed with the problem. Or they will clearly mention in the question somewhere in a corner, all that amounts mentioned above are excluding taxes. Interest somewhere in the table above they would have given 10,000, 20,000 like that, 15,000 like that, and somewhere bottom of the question they would have mentioned all the amounts given above are excluding taxes. Then you should take it as exclusive. Okay, so I repeat, if the question says just interest paid, then treat it as inclusive. Or if the question clearly mentions these are excluding taxes, all that stuff, then please treat it as exclusive of taxes. Clear? So I repeat, interest paid for delay in payment of consideration only will be added to the value of supply. Interest for giving loan is exempt under GST, that will not have any tax implication. Hope it is clear. That is with respect to interest. Next one, with respect to subsidy. If you are following, we are discussing 5 inclusions. Number 1, all the taxes paid other than GST and TCS under income tax. Next, obligation of supplier discharged by the recipient. Next, incidental expenses incurred by the supplier is recovered from the recipient. Interest or late fee or penalty for delay in payment of consideration. That is what we have discussed now. So hope it is clear for you. Last one, final one, subsidies. Subsidies will be added to the value of supply. Subsidies will be added to the value of supply when it is directly linked to the price. That is first key point. It should be first directly linked to the price. Then you should check who has given that. Sir, if government has given that, ignore it. If anybody else has given, please add it to the value of supply. Clear? Right. So that is what the point, guys. And one more thing here for interest late fee. First of all, let me finish that. For interest and late fee, I have given one small problem also in the notes here, so you can just check this. This is November 2022 somewhere CA Inter question actually, but a nice question, delivery agent like that. So you can just go with this question. They have just asked in the question gross GST liability and ITC available. That's all. They did not ask anything extra. Okay, so that is what the point. So hope it is clear for you. Just take a screenshot of it and just try it. Just go through the question enough. But nice question. Right. So coming back to the subsidy, as we were talking, so subsidies other than central government and state government subsidies, if it is directly linked to the price of the goods or service, whatever it is we have supplied, then it should be added to the value of supply. Okay, see now for example, I have given in the example also here for that, and example, yes, you can understand, simple small one, you can just go through. I want to talk about the treatment in problems, actually that is the main thing. So here there is an example, you can just understand, where I am selling notebooks for 50 rupees and I am entering into an MOU with government, where government is saying we will give you 20 rupees subsidy, sell the notebooks for 30 rupees only. I am selling the notebooks for 30 rupees, so I am getting from customer 30 rupees, from government I am getting subsidy 20 rupees. The value of supply is 30 rupees. But same MOU, if I am entering with Infosys Foundation or some other private NGOs, whatever it is, other than central government, state government, then the same MOU I am entering, 30 rupees I am getting from customer, 20 rupees I am getting from the NGOs, all that, then the value of supply will be 50 rupees, not 30 rupees. Hope it is clear. And I repeat, the subsidies like given for buying the plant and machinery or setting up the factory, purchasing the land, all these things will not have any direct link to the price. So those subsidies will not be considered while calculating the value of supply. Hope it is clear for you. Right, so that is the example. Now as I was talking about the tax treatment, the treatment in problems, see in problems mainly you will find these three type of wordings. Subsidy, sir, whenever you see in problem, they may use the word like Price after considering subsidy. Please understand, price after considering subsidy or after including subsidy are different. If that says if it says, please understand, price after considering subsidy, that means what? We know that we will receive the subsidy, and we are fixing this price. Let us assume price after considering subsidy is 10,000 rupees. That means I want this 10,000 rupees and I know that I will get subsidy also of 500. That means it will become 10,500. It doesn't mean that in the 10,500 subsidy is included. No, it is not like that. Only if they say subsidy is included there in the price, then only you should take it as included. Subsidy is like after considering subsidy means I know that I will get subsidy. It doesn't mean that the subsidy amount is included in the price. Please don't misunderstand that. This is one mistake you might be doing. Next, the next one is net of subsidies. When they say net of subsidies, subsidies are removed from that amount. So whatever the amount, the list price or whatever the value have been given there, it is excluding subsidies. It is not including subsidies. So please understand, net of subsidies means subsidies are removed from that value. It is not included in the price. So please remember this carefully. Okay. So this is what the concept all about. So with respect to subsidies. So with this, we are done with the inclusions part. Hope you are clear with this inclusions. So 5 inclusions we have discussed. So the next, if you see exclusions, sir, exclusions, only one exclusion, discount. But the point is, when this discount is given, simple, sir, discount may be given at the time of supply or after the supply. If it is given at the time of supply, simple treatment, just show that separately in the invoice, exclude it from the value of supply, enjoy. Am I clear? So I repeat, if the discount is given at the time of supply, exclude it from the value of supply and enjoy. Sir, if the discount is given after the supply, then don't think, sir, who will give discount after the supply? In case of B2B scenarios, there might be a situation where discount is given after the supply. You don't worry about who will give that. Just remember, sir, if the discount is given after the supply is over, then you can exclude the discount from the value of supply provided 3 conditions are satisfied. Number 1, it should be as per the terms of the agreement which we have already entered into. Next, terms of the agreement means need not be in writing, always remember that. Number 2, so number 2, that discount should be linked to a particular invoice. And number 3, sir, proportionate ITC should be reversed by the recipient. Okay, then the discount will be excluded. Suppose if you are not satisfying these conditions, it doesn't mean that law is prohibiting you from giving discount. You give discount to your customer, we are not stopping you, and show that in your books of accounts. We are not worried about that. Only thing, I will not give you benefit under GST if you don't follow these 3 conditions. If you follow all these 3 conditions, enjoy the benefit from GST also. Your GST liability will be reduced, and opposite fellows, of course, ITC will be reduced. That's a different story. But if you are giving discount and you are not following these conditions after the value of supply, after the supply is over, then that discount will remain only in your books. In GST, we don't have an impact. That means imagine 10 lakhs is the value of supply, you give 1 lakh discount, but you have not satisfied these conditions. For the purpose of GST, you should be paying GST on 10 lakhs only. But in your books, you might have shown 9 lakhs, all that nonsense, whatever it is. But for us in GST, you should pay GST on 10 lakhs. Am I clear? So hope it is clear for you. Okay, so there is an example also here with respect to that. So you can just go through this example as I already explained. Sir, for example, I'm making a supply to MSD on 25th June, credit period 90 days, and if you pay within 30 days, I will give you 10% discount, like that I told. He is paying within 30 days, so he is claiming discount. Now, whether this discount can be excluded from value of supply? Yes, it can be excluded from value of supply, because first of all, I told it at the time of supply only. If you make payment within 30 days, I will give you 10% discount as per the terms, and this is linked to invoice. And the only condition is that MSD should reverse proportionate ITC on that discount. 1,12,000 GST will be there. Proportionate ITC he has to reduce. So that way I have given a comprehensive example here. You can just check that. One second. So this is the example. So you can just go through this, take a screenshot if you want, or the notes is however available, nothing to worry. So this is the example, and with this we are done with exclusion part. The discount part also we have discussed. What if the discount is given at the time of supply or after the supply is over? And there is a clarification with respect to no claim bonus actually. So what is this no claim bonus? Nothing but, sir, when I am purchasing a car, first year I am taking insurance. Of course, every year we'll be renewing the insurance. Now, when we are going for the renewal of the insurance, if you have not taken any claim in the last year, if you have not taken any claim in the last year, then to appreciate your driving skills, what the insurance company will do, insurance company will say, sir, last year you did not claim anything from us, so we are happy, we have saved so much of money because of your great driving. So this year we'll give you something called no claim bonus. And I'm asking, like, please give me that bonus. Then the insurance company says, we will not give it in actual physical form, sir, but in the renewal insurance premium, we will give it in the form of discount. So now the doubt was, what is the tax treatment for this no claim bonus? And as I already told you, sir, this is just like a discount. They are giving it to you in the next premium payment. So it is excluded from the value of supply. So that is what the concept here. There is a small example also for that. You can just go through this, right? So this is with respect to the clarification on no claim bonus. So the next one is regarding, the next clarification is regarding the salvage or wreck value earmarked in claim assessment of damage caused to motor vehicle. See now here, what is this actually now? Please understand. Let us assume there is a car and insurance has been taken on the car by the owner. Now this car has been subjected to accident. You can understand this is accident car, that is why it is like that. Otherwise it would have been even neat. You know, you don't know my artistic skills actually. Right? So this is a car which was subjected to accident. Now imagine while taking insurance on the car, that fellow has declared the value of car as 8 lakhs rupees, on that he has taken insurance. So now this car is now subjected to accident, completely gone, all that stuff. Now there is total loss, and if you sell that now, you will get 1 lakh. That is the salvage value or wreckage value of that car. Now insurance company is paying to the customer what? Based on that, the tax treatment for this salvage value will determine. Now the doubt is whether insurance company has to discharge GST liability when this salvage or wreckage has been sold for 1 lakh. Now the point is, see, if the insurance company is paying only 7 lakhs to the insured person, the person who has taken insurance on this, that means this salvage will become the property of that fellow. That means, Ray, however you sell that, you will get 1 lakh. Balance 7 lakhs I'm giving, keep it with you. So salvage and wreckage is the property of the insured person. So GST liability will not come on the insurance company. GST, like, insurance company doesn't have any right over that salvage or wreckage, that will not sell that. So no GST liability on that 1 lakh for insurance company, in the hands of insurance company. Now if the insurance company pays full 8 lakhs to the customer, that is full amount 8 lakhs. That means they are buying that salvage amount, the entire thing also is with the insurance company only. So insurance company is the owner of this property now, the salvage or wreckage. Now when insurance company is disposing this salvage or wreckage for 1 lakh rupees, GST liability comes into picture. Insurance company has to pay GST on that. That is what the concept. Hope it is clear for you. So if the insurance company pays full amount, the salvage or wreckage will become the property of insurance company. So when it is getting disposed, insurance company will pay GST. No sir, we are deducting the salvage amount and paying only the balance amount to the customer. That means the salvage or wreckage will be the property of the customer only. So if that is disposed of, GST liability will be on him based on other conditions being fulfilled, but not on the insurance company. So that is what the concept, right? So with this, we are done with this particular clarification also, and hence we are done with value of supply amendments. So input tax credit, you know, everybody, see, first of all, just to correct your basics, see, when we are making outward supplies, sir, our outward supplies may be covered under forward charge or may be covered under reverse charge. If they are covered under forward charge, what we will do, we will collect tax from the customer and we have to pay it to the government. While paying it to the government, we will use our ITC balance, and if it is not sufficient, we will go with cash. Sir, no sir, whatever the outward supplies we are making, that is sales, if it is covered under reverse charge, we will raise the invoice, we will supply the goods or services, our customer will directly go and pay the GST to the government. We don't have to do anything. So what is the only duty we have? Eat 5-star, do nothing. So that is the scenario. But sir, here one important thing, yes, one important thing is, because we are making outward RCM supplies, we cannot take ITC on our inward supplies. Hope you remember that, right? Now coming to the next one, sir, if I am making purchases, if we are making purchases, whether it is covered under forward charge or reverse charge, sir, if it is covered under forward charge, what we will do? We will pay GST to the supplier, supplier will pay to the government, and government will give it to us as ITC. Same way, if the purchases are covered under reverse charge, what we will do? We will directly go and pay GST to the government. Government will give that amount as ITC to us. Simple. So here the only thing which we have to remember is, sir, whether the purchase is covered under forward charge or reverse charge, you can happily take ITC. So please remember that it is your purchase. Your purchases, if you are buying it for business purpose, you can happily take ITC. So whether it is covered under forward charge or reverse charge, the only condition is, sir, when we are buying something, we should use it for making taxable outward supplies. Then only we can take ITC. If we are making it like using it for making exempt outward supplies, we cannot take ITC. But we are using it for taxable supplies, we can take ITC. That we will discuss in section 17. Nothing to worry. So this is the overview of GST liability. So what is that we have to understand? See, sir, whenever there is GST payable to government, GST payable to government can come in two circumstances. One is on your sales, the other is on your purchases. If at all GST liability comes on your sales, then, sir, if you are going and paying GST, you can use your ITC balance. If it is not sufficient, use cash balance. Because to pay output tax, you can use input tax. If it is not sufficient, pay cash. Right. Sir, no, sir, I am going to pay GST under reverse charge mechanism on my purchases. Then again, simple. See, if at all you are purchasing something and paying GST under RCM, this is your input tax. So you cannot use input tax to pay this. So you should pay this only in cash. So simple. When you have GST liability in hand, that is directly to pay to the government. If you sell something, you have to pay directly something to the government. So that output tax, you can use input tax or cash. Sir, I am purchasing something covered under reverse charge. So that is your input tax. So to pay input tax, you cannot use input tax. So you should use cash only. So that is what the concept here. With this overview in mind, let us proceed into the chapter. So before proceeding into the chapter, you should remember or you should understand, sir, whenever we are buying something under GST, that may be goods or that may be services. Goods, if we are buying, if we capitalize that, then it is called capital goods. If we don't capitalize that, then it is normal inputs. Hope you are clear with this. If we buy some goods and we capitalize it, it is called capital goods. And if we buy something and we don't capitalize it, if it is goods, we call it as inputs. But sir, for services, there is no such differentiation. We call it as input service. Whether you capitalize or don't capitalize, all that nonsense. Okay. Goods, capitalized, capital goods. Not capitalized, inputs. Services, straight away input services. Hope you are thorough with that. Right. So with this, let us proceed with first point, section 16. Section 16 has 4 subsections. Earlier, now they have added subsection 5 and 6 also. 5 is not relevant for you. Subsection 6 we will be discussing. Okay, so first going to 16 subsection 1, simple. Sir, 16 subsection 1 says every person who wants ITC, he should be registered under GST, sir. Without registration, how will I give you ITC? So you should be first registered, and of course, whatever you are buying, you should be using it for business, or you should have intention to use it for business. That means not only the goods or services, whatever you procured, the goods, whatever lying in the godown are also liable for, are also eligible for ITC. Not only the goods which you have used in manufacture, but also the goods lying in stock, lying in godown are also eligible for ITC. That is what 16 subsection 1 says. Sorry. So that is 16 subsection 1, simple, eligibility for ITC. Let us move on to 16 subsection 2. So coming to 16 subsection 2, what are the conditions for availing ITC? 16 subsection 2 number also you should remember properly. So please make sure you remember 16 subsection 2. What is 16 subsection 2? Conditions for availing ITC. Sir, what are the conditions for availing ITC? Number 1, simple, sir. You should be possessing some or the other documentary evidence, sir. Then only I can give you ITC. Without that, sorry, I cannot give you ITC. So please have some documentary evidence. What is that documentary evidence, sir? That can be a tax invoice, that can be a debit note, that can be a revised tax invoice, that can be bill of entry, that can be document issued by input service distributor, or that can be a self invoice also. Sir, please give some documentary evidence so that I can give you ITC. Okay, so please have that. And one more thing is what, sir, if at all coming with this documentary details, if you see any demand that is raised, sir, any demand that is raised on account of fraud or willful misstatement or suppression of facts cannot be availed as ITC. So if this is done on account of fraud or willful misstatement, suppression of facts, all the stuff under section 74, okay, then also you cannot avail ITC on that. That is what another point. Next, no ITC will be given to a registered person in respect of invoices or debit notes which have been furnished by the supplier in GSTR1 or IFF, and the details are reflected in GSTR2B for the recipient. That means simple, what we are trying to tell here, sir, for you, if you want ITC, your supplier should have filed his GSTR1 and it should have been reflected in your GSTR2B. Then only we will give you ITC. Otherwise, we are sorry, go and fight with your supplier. We will not give you ITC because it is not reflected in your 2B. So simple, if it is reflected in your 2B, then only you can take ITC. If it is not reflected in 2B, go and fight with your supplier. Don't come and fight with department. That is what they are saying, right? Next, what is the next condition? Sir, the next condition is what? If you are buying some goods or services, if you have actually received the goods or services, then only you can take ITC. Sir, goods are in transit, or I will receive the goods tomorrow, day after tomorrow, like that. If you keep on telling stories, we will not give you ITC. Please understand that, okay? Only if you actually received the goods, then you can take ITC. Sir, on behalf of me, my job worker has received, sir, the goods. Who will be working on behalf of me, sir? Will you give me ITC? No problem, we will give you, don't worry. So goods can be received even by the job worker, even by some third person on the directions given by you. Still you can take ITC. Sir, what if the goods are coming in lots or installments? Sir, 10 lorries the goods are coming, sir. 8 lorries came, sir. 2 lorries are still in transit. Then only after the receipt of last lorry you take ITC. Okay, don't come and disturb in middle. Okay, so that is what the concept. So I repeat, actually goods or services should have been received by the recipient to claim ITC, even if his job worker or any other third person for that matter has received it on the directions of the recipient. Still recipient is eligible for ITC. Another additional point here is, sir, if at all goods are received in lots or installments, only after the receipt of last lot or installment you can take ITC, but all that lots or installments should be covered under single invoice. That means one single invoice, 10 lorries are coming to transport the goods. Then after the receipt or after the delivery of 10th lorry only you can take ITC. No, sir, 10 lorries, 10 different invoices. Then how many lorries deliver the goods? That will be the last lot, so that you can take ITC. I repeat, if it is single invoice, 10 lorries, then after the receipt of last lot only you can take ITC. You should be careful in the questions, where in the questions they will say goods, the last lot will be received in the next month or that next month. This month can you take ITC? No, sir, this month you cannot take ITC. I am extremely sorry. Clear? So that is what the concept. Okay, next. Sir, whatever is reflected in 2B, will you give me ITC? Yes, I will give you ITC, but it should not be restricted by the government. Okay, so that means government has the power to restrict the ITC, whatever has been reflected in 2B. So you cannot take ITC. Okay, so using section 38, government has used that power, and still they have framed section 38. They have not yet fully utilized that power, where they are saying that if at all you are buying something and it is reflecting in your 2B, and that purchases are from a person who is a new registrant or who has defaulted in paying taxes, whose output tax as per GSTR1 and 3B are mismatching. So in one he is showing more liability, 3B is showing less liability. Okay, and who is availing ITC more than what is there in 2B, and sir, who is defaulting his tax liability under section 49 subsection 2, that is rule 86B, or any other specified class of persons. From these people, if you buy something and if it is reflecting in your GSTR 2B, I am extremely sorry, we will not give you ITC. And please understand, this is still in a section phase. So for this, rules has to be prescribed, and as of now there are no such rules which are talking about this, except of course here this point and this point, actually not this one. Okay, certain points have come into effect, certain points not come into effect, leave it. Okay, if these are the cases, the government in this case can deny you ITC. Okay, that means what? Whenever you are buying something, you should do background verification of the person from whom you are supplying. That means you should take the GST number of the supplier, go to the commissioner, sit in front of the commissioner and say, sir, tell me the horoscope of this fellow, whether this fellow is paying taxes correctly or not, whether this fellow is taking ITC properly or not, tell me, I should buy something from him. That means do some background verification, just like when you are getting married, you will do no background verification. The same way, do background verification of the supplier, before buying the goods or services from him. Otherwise, your ITC will be at risk. That is what this point all about. Okay, fine, sir, no problem. That means what? Government can deny ITC for you even though it is reflected in 2B. Simple. Next, sir, the supplier should have discharged his tax liability. That means supplier should have paid taxes. Then only recipient will get ITC. Okay, here with respect to this, we have section 41 read along with rule 37A. If you see what the law is saying. See, GSTR1 supplier is filing, recipient will get in his 2B, recipient will take ITC. But who will give money to the government? Supplier should give money to the government. How he will give?
By filing GSTR 3B, that fellow supplier from whom you have purchased, he filed GSTR 1 properly, but 3B he did not file. That means he did not pay tax only to the government. But you enjoyed ITC recipient. So what the law is saying here, the recipient, if you have taken ITC because it reflected in 2B, why it reflected in 2B? Because your supplier filed 1. But whether your supplier has filed GSTR 3B, that you please check. If that fellow has not filed his GSTR 3B, by 30th September of the succeeding financial year, whatever ITC I gave to you, please give it back to me, because I did not get money from your supplier. Like that government is asking. So before 30th September, your supplier should have filed this GSTR 3B, okay, and paid taxes to the government, which you got as ITC already. If he has not done that, by 30th November of the succeeding financial year, that means in another 2 months time, you should reverse the ITC without any interest. Without any interest. 1 second. Here I have given one example, see. But sir, if you don't pay that within 30th November, then what should be done? You should reverse the ITC along with interest under section 50, that is the twist. Okay, sir, I will reverse the ITC along with interest or without interest, as the case may be. What if after 2-3 years my supplier becomes a good boy and file his GSTR 3B and pay tax to you? Can I re-avail ITC? Yes, you can re-avail ITC. Sir, is there any section 16 subsection 4 time limit would have been over? No sir, by that time. 16 subsection 4 is not applicable in this case. Yeah, see, understand, 16 subsection 4 is applicable only for availing ITC. Here this is re-availing ITC. So 16 subsection 4 is like, see, only when you are getting married for the first time they will see age. For second time marriage and all, they will not see any age. That means 16 subsection 4 time limit is applicable only when you are availing ITC. Here you have availed ITC, reversed ITC, and again now re-availing ITC. So in such cases, 16 subsection 4 time limit is not applicable. Hope it is clear for you, right? So here what we are trying to tell, sir, in short, what is that you are trying to tell, sir? See, supplier has filed his GSTR 1, because of that you got it in your GSTR 2B, but supplier did not file 3B. That means government did not get money, but the recipient got ITC. So government is under loss here. So what government is saying, by 30th September, if you are 30th September of the succeeding financial year, if your supplier has not filed his GSTR 3B, then you should reverse the ITC by 30th November without any interest. I'm giving you 2 months time without interest. By 30th November also, if you have not paid that, then reverse the ITC along with interest. Tomorrow, if at any point of time that buffalo files GSTR 3B, who? Your supplier. Then you re-avail ITC. Only re-avail ITC, interest you cannot re-avail. Okay, please understand that. And here for re-availing ITC, 16 subsection 4 time limit. 16 subsection 4 time limit is not applicable. Okay, so that is what the point. Okay, wonderful, super. Okay, if you want to just go with this example, see here, just go with this example. 1 second. Yes, you can take a screenshot of this if you want. Hope it is clear. You can pause the video also and you can just go through the example once. I have just given it along with the dates and numbers for your clarity. Okay, hope it is clear for you. Section 41 read with rule 37A. Okay, let us move on to the next one. The next one is the first proviso under section 16 subsection 2. So the first proviso we have already discussed. When the goods are coming in lots or installments, we can take ITC only after the receipt of last lorry or last installment, whatever it is, but they should be covered under single invoice, that we have already discussed, right? Let us move on to the important proviso, second proviso, read along with rule 37. What is this rule 37, second proviso? Do you remember, my dear friends, that 180 days time limit concept? So if the supplier makes any supply to the recipient has to make payment to the supplier, both value and GST, within 180 days from your birthday or my birthday, from invoice birthday, that is from the date of invoice. Yes, he has to make the payment, not only value but also GST. If he is not doing that, he should reverse the ITC along with interest under section 50. One interesting thing here is, if you have made part payment, proportionate amount will be considered. For that I will show you one example also. And tomorrow in future, if you make payment later on, maybe after 180 days you have reversed the ITC, after 200 days, 230 days, 360 days, 440 days, whatever it is, you have made payment to the supplier. Can you re-avail the ITC now? Yes, you can re-avail the ITC. You know, re-availing ITC, there is no time limit only. Correct? So, only for availing ITC, there is time limit. 16 subsection 4 is not applicable when we are re-availing the ITC. So, happily you can re-avail ITC, but interest will not come. Am I clear? So, I repeat, within 180 days from the date of invoice, recipient should make payment to the supplier both value and GST. Otherwise, he has to reverse the ITC along with the interest. Later on in future, if he is making any payment, he can just re-avail the ITC. 16 subsection 4 time limit is not applicable, and he can re-avail the ITC. Interest part, he cannot take anything benefit. Okay. If at all he has made any part payment, the proportionate amount he has to reverse. Now, this 180 days reversal concept is not applicable for these three cases. Number 1, supplies covered under reverse charge mechanism. Number 2, deemed supplies without consideration, that is schedule 1 transactions, and whatever the additions we have made to the value of supply. If you remember section 15 subsection 2 inclusions, obligation of the supplier discharged by the recipient, so that is added to the value of supply because it is already discharged by the recipient. Okay, so again recipient will not pay that amount to supplier. If you remember that Pushparaj example, 10 lakhs furniture, you are paying me 6 lakhs and directly 4 lakhs to Pushpa. So that case only. Okay, so that is what the point. Okay, for that 180 days time limit is not applicable. So here if you see, sir, 1 lakh plus 18,000 is the GST. So 1 lakh 18,000 you should have paid. What if you have paid only part amount 60,000? Part amount 60,000. Okay, with ignoring interest, if you calculate what is the ITC here, sir, to be reversed, you should pay 1 lakh 18,000, but you have paid 60,000. What is the balance? 58,000. Sir, this 1 lakh 18,000, when it is including GST, this 60,000 is also including GST. You cannot take it like excluding GST. Balance amount 58,000 is including GST, which you have to pay. So 58,000 into 18 divided by 118 will give you the reversal amount. 8847 you have to reverse. Okay, so that is the concept. So here if you see, I've given this example, you can just 1 second pause the video. iPad itself is not sufficient for the examples. Okay, so I think it is little bit okay for you. You can just manage it if you take the screenshot. So go with that. This much zooming and all we cannot do, that is a problem. Okay, 1 second guys. Yes, this one you can manage. So please pause the video and go through the example, or just take the screenshot of it and then revise. Otherwise, you know, material is available in our Telegram channel. You can just go with the soft copy, no issues at all. So that's all with respect to that particular point, and with this we are done with section 16 subsection 2. Yes, we are done with section 16 subsection 2 with respect to that. And of course there is a small clarification here with respect to molds and dies which are used. Okay, see here nothing but a small clarification. Let me close this. So here what is happening now, normally when there is original equipment manufacturer, sir, original equipment manufacturer, what he will do, sir, he will manufacture the equipments and give to component manufacturer. For example, laptop is there, laptop battery, the laptop company will not manufacture, they will give it to original equipment manufacturer, another fellow who will manufacture them, and he will give it to the component manufacturer. Now what happens, please understand, sir, for this we are 1 second. Yes, see here one small confusion, that's all. See, this original equipment manufacturer is, let us assume, the laptop company. Laptop company will not manufacture their batteries, own batteries, so they will outsource it. So that fellow is called component manufacturer. Okay, so to manufacture that component, what this original equipment manufacturer will do, he will purchase some molds and dies and he will avail ITC. Those molds and dies he will give to component manufacturer for manufacturing the components. Whether this ITC to be reversed by original equipment manufacturer is the point. First of all, understand here, sir, he is buying these things for business purpose and issuing it for business purpose, issuing them for business purpose. Okay, so there is no need to reverse the ITC, and of course component manufacturer also doesn't have any obligation to use his own molds and dies. So original equipment manufacturer giving the molds and dies to the component manufacturer is very much in the course of business. Very simple. I am original equipment manufacturer and I am giving, you are the component manufacturer, I am asking you to manufacture my laptop batteries. I am buying the molds and dies for that and I am giving it to you. Can I avail ITC? Yes, I can happily avail ITC because I am giving that to you in the course of furtherance of business only, for getting my products manufactured only. Now the important point here is, you don't have any obligation to buy molds and dies. I will be providing. Then happily I can avail ITC of that. Okay. So now whatever the molds and dies I am giving it to you, is it added in the value of supply which you are providing to me? No, this is not obligation of the supplier discharged by the recipient. Please don't misunderstand. I'll just put it like this. Wait. Laptop manufacturer, battery manufacturer. Okay, sir, this fellow will manufacture batteries and give to laptop fellow. Now the problem is, molds and dies this fellow is buying and giving to him. Buying and giving to him. This molds and dies, will it be added to the value of supply? The answer is no, because these molds and dies are not the obligation of the component manufacturer. So laptop manufacturer is buying them and giving it to him. It is his obligation only. It is not supplier's obligation discharged by recipient. That case is not there here. So what original equipment manufacturer will do, he will take ITC of this. Okay, and this value will not be added in the value of supply of this fellow selling battery. On that battery the value will be there. No, for that value molds and dies value will not be added. This is not obligate. This, if you understand, battery manufacturer is the supplier, original equipment manufacturer is the recipient. Okay, that is the case. Fine, hope it is clear for you. Just go through that. And next, okay, so with this we are done with section 16 subsection 2 as well. Yes, sorry, here one more point, small point we have missed out is, yes sir, whatever you said is fine. If the component manufacturer doesn't have an obligation to use his own molds and dies, you are buying and giving, then no problem. What if he has an obligation and you are buying and giving to him? Then yes, we will add it to the value of supply. And original equipment manufacturer can avail ITC? No, he cannot avail ITC. So simple, supplier has an obligation, recipient is buying it and giving. Can recipient when he purchase take ITC? No. Okay, sir, supplier doesn't have any obligation, recipient only should give them. So recipient buying and giving, so recipient can take ITC, and it will not be added between the value of supply provided by supplier to the recipient. Okay, so that is what the concept here. Yes. So I repeat, original equipment manufacturer is the recipient, component manufacturer is the supplier. Okay, original equipment manufacturer is buying and giving the molds and dies. We should see whose obligation it is. If it is the obligation of the recipient, original equipment manufacturer himself, then in such case what will happen? He will take ITC, and component manufacturer giving supply to original equipment manufacturer, in that it will not be added, the value of molds and dies will not be added. Okay, that is the case. No sir, it is the responsibility of component manufacturer to buy these molds and dies. Then original equipment manufacturer buying the molds and dies cannot take ITC, and the value of molds and dies will be added in the value of supply between component manufacturer and original equipment manufacturer. That is what the case, right? So just now take a screenshot of this or pause the video and go through this, see carefully. This is first scenario, and this is the next scenario. So the next one is 16 subsection 3, simple one sir. If you are purchasing capital goods, on that you have paid GST, that GST component take as ITC, that is one option for you, or add the GST component paid on capital goods to the cost of capital goods and claim depreciation fully, that is second option for you, but don't do both. So simple sir, you have purchased 100 lakh worth capital goods and you have paid GST 12 lakhs. Sir, this 100 lakhs of course you capitalize and you claim depreciation on this, no doubt about that. But sir, on this 12 lakhs, you either take ITC or you claim depreciation, but not both. But not both. Both not possible. Clear? So that is 16 subsection 3. Simple one. So the next one, very important section, 16 subsection 4. You should remember the subsection number as well. You know that, sir, what is time limit for availing ITC? The time limit for availing ITC is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier with respect to any invoice. So what we should see first, we should take an invoice. We should see for which financial year this invoice belongs to. And from that financial year, next financial year, 30th November or actual date of filing the annual return of that financial year to which this invoice belongs, whichever is earlier, that will be the deadline to take ITC. So here if you see invoice number 183, sir, belonging to 23-24 financial year, 23-24 financial year received by MSD on which GST paid is 10,000. Now, sir, this invoice belongs to 23-24 financial year. What is the deadline to take ITC on this 10,000? We should see, sir, 30th November of succeeding financial year, that is 24-25 financial year. That means 30th November 2024, or this invoice belongs to 23-24 financial year. That financial year, when you are actually filing the annual return, whichever is earlier, that will be the deadline. Okay, so that will be the deadline. Hope it is clear for you. One interesting point here, what we have to consider is, sir, if at all we have given debit note for any invoice, and that debit note is falling in different financial year, invoice is falling in different financial year. As I have given here example, sir, invoice belongs to Jan 2024, sir, and on that 4,15,000 GST has been paid, sir. Debit note has been given on April 2024, which is coming in 24-25 financial year. That means invoice is coming in 23-24 financial year, debit note is coming in 24-25 financial year. For invoice, yes, 16 subsection 4 time limit will be okay, 30th November of 2024 or actual date of filing annual return of 23-24 financial year. But for debit note, what is the relevant financial year we should consider? Should we consider the invoice financial year or debit note financial year? That is the concept. Sir, for invoice, relevant financial year will be the year in which invoice is raised. Same way, for debit note, the relevant financial year will be the financial year in which debit note was raised. Okay, don't link this to invoice financial year, please. That is what the concept. So I repeat, the relevant financial year for invoice will be the financial year in which invoice is raised. The relevant financial year for debit note is the financial year in which debit note was raised. So that you have to consider and calculate the time limit under section 16 subsection 4. With this, we are done with 16 subsection 4.
Now let us move on to this new subsection 16 subsection 6, actually a very interesting provision, and I'm going to simplify it in such a way you'll definitely love this explanation from me, right? 16 subsection 6. What is 16 subsection 6? Time limit for taking ITC in case of revocation of cancellation of registration. Please understand, sir, what is this all about now? When your registration gets cancelled and you are asking for revocation, sir, there is a period of cancellation. From the period of cancellation till the revocation, what is the time gap is there? For this time gap, you are not able to file the returns, and because you are not able to file the returns during that period, whatever the ITC is there, that ITC you will not be able to avail. And now when you have taken the revocation, now if you see, if you look back and you want to take ITC for those periods which over during that like cancellation and revocation period, if you want to take ITC, 16 subsection 4 time limit is over. In that case, how to handle? Now see, first of all, simple. What is this provision talking all about now? The date of cancellation, at the time of cancellation of that registration. For me, during this period, I repeat, the period is between cancellation to revocation. For this period, whatever the returns you did not file, so for that period you have not taken ITC also because you could not file your 3B. Now for that period, see, what we have to understand is, at the time of cancellation, whether 16 subsection 4 time limit was still available? Yes, sir. Then in such case, please understand, avail ITC as per 16 subsection 4. Sorry, one second. So at the time of cancellation of registration, sir, whether 16 subsection 4 time limit is available? Yes, sir. Now at the time of revocation, still if 16 subsection 4 time limit is available, still 16 subsection 4 time limit is available, that is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. So if that is available, accordingly you proceed. But sir, I'll give you example also for this, so please wait. But sir, at the time of revocation, at the time of cancellation, 16 subsection 4 time limit was available, but at the time of revocation, 16 subsection 4 time limit was not applicable, sir, not available, sir, 16 subsection 4. Then what should I do? Don't worry, for you 16 subsection 6 is coming to help. So 16 subsection 6 says you can take ITC for that period, the cancellation to revocation period, any returns, the time limit for availing ITC 16 subsection 4 time limit is over. Further, still if you can want, you can take ITC by filing those returns, the 3B, all that, by 30 days from the date of revocation order. 30 days, within 30 days from the date of revocation of cancellation, you can avail ITC. See, for example, I'll tell you, there is a company, Vivar Private Limited. They are not filing their returns continuously for 6 months. Because of that, the registration is cancelled. If you see from 1st Feb 2024 to 31st July 2024, 6 months continuously they did not file the return. So they got the notice, all that stuff, and registration finally cancelled on 10th September 2024. Okay, 10th September 2024. With effect from retrospective effect, 1st Feb 2024 itself, they have cancelled the registration. Now here what we have to see is, sir, what is the period of cancellation of registration? Sir, order of cancellation is given on 20th December, but it is cancelled from 1st Feb. So from 1st Feb, I am not able to file the returns. I am not able to file the returns. Now, sir, when I go for the revocation I got somewhere in 20th December. Sir, please understand, when I get the revocation on 20th December 2024, if you see, for me, I was not able to file returns from 1st Feb, correct? Because registration is cancelled from 1st Feb. So if you see, Feb and March 2024, the ITC belonging to those months, the time limit to avail ITC under section 16 subsection 4 was available. For me, ITC under 16 subsection 4 time limit is available at the time of cancelling my registration. So that 10th September they are cancelling the registration. During that time, I still had the chance to take ITC under 16 subsection 4. But at the time of revocation, if you see 20th December, by that time, for me, the time limit to avail ITC under 16 subsection 4 was not available. So simple, when the department was cancelled my registration, for me 16 subsection 4 time limit was applicable for Feb and March. I could have taken that if you have not cancelled my registration. But now you cancelled my registration, and at the time of revocation, if I see, after revocation time limit is over 16 subsection 4. So for Feb and March month, what should I do? You can take ITC by filing Feb and March month returns within 30 days from the date of revocation. The revocation is granted on 20th December. So from that 30 days, so 19th January 2025. So before that, by filing that return of Feb and March month, I can take ITC of Feb and March month 2024, even though 16 subsection 4 time limit is expired, I can go with 16 subsection 6. Okay, that is the point. Suppose, sir, coming to April 2024 to December 2024 returns also I have not filed. For that also I have not taken ITC still. At the time of cancellation of my registration, that 16 subsection 4 time limit is over. After revocation also, still 16 subsection 4 time limit is available for me. That is, this is coming in 24-25 financial year, no, 30th November 2025, and actual date of filing annual return of 24-25. Till that I have the time limit, no. So April to March, December 2024 returns, I can happily file accordingly, and I can take ITC. I need not see 16 subsection 6 itself. I will see 16 subsection 6, simple words, when at the time of cancellation 16 subsection 4 time limit is applicable, but at the time of revocation it is not applicable. In that case, I will go to 16 subsection 6. What 16 subsection 6 says? 16 subsection 6 says, take ITC by filing the returns, pending returns, within 30 days from the date of revocation of cancellation. So this is the notes for that. Hope it is crystal clear for you. This is the new section and very, very, very important section for you for your May 2025 exams. So please be careful. Now let us move on to next 17 subsection 5, blocked credits. You know, very, very, very important section. You should remember it very well. So 17 subsection 5, blocked credits. Sir, what is this blocked credit all about? Even though you are purchasing something for business purpose, you cannot avail ITC.
Yes, even though you are buying it for business, you should always understand, yes, we are buying it for business purpose only, but still we cannot take ITC because it is given in 17 subsection 5. So what are the things which are given in 17 subsection 5? Let us quickly go with them. So first of all, motor vehicles. Sir, motor vehicles with less than or equal to 13 seating capacity, if you are buying even for business purpose, you cannot take ITC. Sir, if I am buying something with greater than 13 seating capacity for my business purpose, yes, you can take ITC. That means company buying a car cannot take ITC. Company buying a bus can take ITC. Company buying a lorry, tippers, dumpers, all that, yes, they can take ITC because they are not the vehicles for transporting the persons. Okay, so goods vehicles are obviously eligible for ITC, they are not covered here. So I repeat, motor vehicles with less than or equal to 13 seating capacity, if you are buying, you cannot take ITC even though it is for business purpose. If it is greater than 13, yes, you can take ITC. If it is a goods vehicle, yes, you can take ITC. And there are certain exceptions here, sir. Even though it is less than or equal to 13 seating capacity, you can take ITC. When? Sir, you can take ITC if at all you are using it for transportation of goods. That is not an exception, but that is understood by the law. Next, if you are buying them for transportation of passengers, that means you have travels and you are buying the car, yes, you can take ITC. No, sir, for further supply of such vehicles or conveyances, that means I am dealer in Royal Enfield bike and I am buying Royal Enfield bike, I can take ITC. But a company buying Royal Enfield bike for the use of director cannot take ITC. Next, for imparting training in driving skills. So suppose if you are having a driving school and you are buying the scooties or you are buying the cars for etc for driving schools, then you can take ITC. That is another point. Now here, so what we have understood is, if you are buying the motor vehicle, you cannot take ITC, correct? Sir, what do you mean by motor vehicle? Motor vehicle is defined in Motor Vehicle Act 1988. 1988, and accordingly, sir, motor vehicle means what? Which is mechanically propelled vehicle adapted for the use upon the roads, whether the power of propulsion is transmitted thereto from an external or internal source, and includes chassis to which a body has been attached. All this is not that greatly relevant for us. For us, the main point is what are not motor vehicles. But sir, motor vehicle definition does not include vehicles which are running on fixed rails. That means if you are buying them, you can take ITC. Sir, vehicles which are specially adapted for use inside any factory or within the closed premises, or any vehicles which are with less than 4 wheels and fitted with an engine less than or equal to 25 cc capacity. Okay, so if it is less than 4 wheels and engine less than or equal to 25 cc, if that is the case, it is not a motor vehicle. For example, we are getting some battery cycles, no? So such type of things, these are not motor vehicles. These are not motor vehicles, and you can happily enjoy ITC if you buy them. So that is very interesting thing. So please understand that motor vehicles, if you buy less than or equal to 13 seating capacity, you cannot take ITC. But these three things, are not motor vehicles. So even though you buy them for business purpose, even though if it is less than or equal to 13 seating capacity, yes, you can happily avail ITC. You can happily avail ITC. That is the interesting part here. Hope it is clear for you. Okay. No, sir, I am buying less than or equal to 13 seating capacity, but for these purposes, for transporting the goods, passengers, further supply of such conveyances, and imparting training and driving skills, then you can take ITC. In other cases, you cannot take ITC if it is less than or equal to 13 seating capacity. Hope it is clear for you. Next, so the same logic is equally applicable. The same provisions, whatever we have discussed just now, are equally applicable even for the vessels and aircrafts. So vessels and aircrafts also, if you are buying for business purpose, you cannot take ITC. But if at all you are buying them for transportation of goods, passengers, or further supply of such vessels or aircrafts, that means you are a dealer in aircraft or vessel, or for imparting training in flying or navigating skills, then you can happily take ITC. Otherwise, you cannot take ITC. Hope I am clear with this. So this is second one. Now coming to the next one, sir, we have understood here you are buying some conveyances. That means it can be vessels, aircrafts, or even vehicles. We call them together conveyances. Common word is conveyances. Some conveyances are eligible for ITC, and majority cases it is not eligible for ITC. If it is eligible for ITC, suppose SpiceJet Airlines has purchased an aircraft and they are eligible for ITC. They are taking general insurance on that aircraft, or servicing on that aircraft, repairs and maintenance on that aircraft, they can take ITC. But let us assume Vivar the private limited is buying an aircraft, a chartered flight for its CEO, and please understand, whether we can take ITC on that. Vivid Private Limited is buying an aircraft, chartered flight, uh, for its company, and whether it is eligible for ITC? No, it is not eligible for ITC. The ITC is blocked. On that chartered flight, if the company is taking general insurance or servicing, repairs, all the stuff, it cannot take ITC. Suppose I am buying a car for my business purpose. Can I take ITC? No. For my car, I am taking insurance. I cannot take ITC. For my car, I am taking servicing. I cannot take ITC. Repairs and maintenance, I cannot take ITC. So now there are certain exceptions here. That is, if you are a manufacturer of that ineligible motor vehicles, suppose Honda company is there. Honda company is taking general insurance or servicing, repairs and maintenance on the stock Honda cars, they can take ITC. Or, sir, if at all I am an insurance company taking general insurance on these vehicles, repairs, servicing on those vehicles, yes, I can take ITC. Yes, so that is what the point. So what are the exceptions here? For manufacturers and general insurance companies, they can take ITC on these three things. Okay, but others, if they are taking them on ineligible conveyances, they cannot take ITC. So simple, ineligible conveyances, you take general insurance, repairs and service, you cannot take ITC. But if it is an eligible conveyance, you can take ITC, or you are a manufacturer, you can take ITC, or if you are a general insurance company, you can take ITC of this particular services. Hope it is clear for you. Now, another interesting thing is, sir, if you are leasing, renting or hiring motor vehicles, vessels or aircrafts on which ITC is not allowed, that means ineligible conveyances as per our discussion. Those ineligible conveyances, if you are giving on lease or renting them or hiring them, then opposite fellow cannot take ITC of it. Opposite fellow cannot take ITC of it. But there are two exceptions. What are the two exceptions? He is taking them on rent for providing similar category of outward supply. He is taking them on rent for providing similar category of outward supply, or he is taking them on rent to provide to his employees as a part of statutory obligation. In those cases, he can take ITC. I repeat, I am leasing the ineligible for me ineligible conveyance, my car. I purchased it and I cannot take ITC. That is ineligible conveyance for me. I am renting that out to somebody. That fellow also cannot take ITC on that. The rent plus GST I will charge. He cannot take ITC except in two cases. He is taking that on rent to give it on rent. That means to provide similar category of outward supply. Or he is taking it on rent because he is an employer to provide to his employees as a part of statutory obligation. Then he can take ITC. Except those cases, he cannot take ITC. Am I clear? So that is what the concept. Next, understand this leasing is only for that conveyances, not leasing of any other items. So if you lease out any other items, you are leasing your laptop, leasing out your any other plant and machinery, all that. In such cases, ITC is there. It is not blocked. Please be careful. So there are some set of examples here. You can just pause the video and go through them. Yes, hope it is clear for you. Now let us move on to the next one. The next one is, sir, food and beverages, outdoor catering, beauty treatment, health services, cosmetic plastic surgery services, life insurance and health insurance services. If you are buying these things, you cannot take ITC, but there are two exceptions. Again, same similar category of outward supply, and if it is taken by employer to provide to his employees as a part of statutory obligations. So I am buying food and beverages for my office purpose, for my employees, etc., etc. I cannot take ITC, but I am buying that to give to employees as a statutory obligation. Remember, company policy is different, statutory obligation is different. Your company policy is something you voluntarily created. Statutory obligation, law has mandated that on you. So both are different. Please understand that. So it is not as a part of your company's policy, but it is as a part of statutory obligation. So I repeat, I am buying outdoor catering services because of there is a party happening in the office, some new year party, etc., etc. I cannot take ITC of that. But I am buying outdoor catering services to provide outdoor catering service, or I am buying food and beverages to provide food and beverages, or I am providing outdoor catering because it is a statutory obligation. So these things, sir, generally you cannot take ITC except if it is for providing to your employees as a part of statutory obligation, or you are buying them to provide the similar category of outward supply. Okay, so that is what the concept. Here I have given examples, you can just go through that. Same way, sir, membership of a club, health and a fitness center, you cannot take ITC except if it is taken by employer to provide to his employees as a part of statutory obligation. Next, leave travel benefits provided by employer to employee cannot be taken as ITC by the employer, again except if it is a part of statutory obligation. Examples are there here, you can just pause the video and just go through the examples. So going with the next one, works contract services, if at all, works contract is nothing but, see, both material and labor. So there are two things, works contract services, pure labor contract services. So works contract services, we get from the contractor both material as well as labor, and pure labor contract you get only labor services. So here what we are trying to do, please understand this works contract services and the next one, construction on own account. One second. Yes, both 2 points. I'm just covering here both the points. Yes, in same area. Yes, right. Now, see, let us assume KGF factories wants to construct their factory building and they're appointing a contractor called Mr. Rocky. Now, what he is doing, Rocky is providing works contract services for KGF factories. Even though it is business purpose, KGF factories cannot take ITC. This is the point. Or imagine KGF factories are buying bricks on their own, cement on their own, iron and steel on their own, labor services on their own, everything, and doing construction on their own account, and they want to take ITC. Can they take ITC? No, sir, I'm sorry. Works contract services also you cannot take ITC. If you are buying the goods and services separately on your own account and you are trying to claim ITC, then also I will not give you ITC. That is what the concept. Hope it is clear for you. Now, sir, there are of course exceptions. I repeat, whether you are taking works contract service or buying everything on your own and getting the construction done, then also ITC is not available. Hope it is clear. But the exceptions are if you are taking this to provide similar category of outward supply. That means Rocky Bhai is outsourcing the part of the work to Mr. Garuda, another works contractor or another contractor, providing services to Garuda. Garuda can avail ITC. Or Garuda buying bricks, iron and steel, cement, all this stuff to provide works contract services, or construction services. Then Garuda can take ITC. Are you able to understand? So you are buying these things to provide similar category of outward supply, then you can take ITC. Or you are buying these things, that is the works contract or construction on your own account for plant and machinery, or it's even foundation, for its foundation, still you can take ITC. But understand here the important thing is that plant and machinery means any apparatus or equipment or machinery fixed to earth by foundation or structural support and that are used for making outward supply of goods or services or both, and includes such foundation and structural supports. But here the point is not inclusion, sir, the important point is exclusion, because plant and machinery you can take ITC. What are excluded from plant and machinery, on that you cannot take ITC. Are you able to understand? So what are excluded from plant and machinery definition, sir? Land and building and other civil structures, telecom towers, pipelines laid outside the factory premises, these are excluded from the definition of plant and machinery. That means you cannot avail ITC on these things. Any other thing, any machinery, equipment, etc., which is installed or used in the factory for making outward supply, for that construction, if you are taking works contract services or buying some goods and services, you can happily take ITC. Not only for plant and machinery, but also its foundation. If you are buying something, then you can take ITC, no doubt about that. And the last exception is if you are buying this sorry, if at all you are buying these things and that expenditure is not capitalized, then also you can take ITC. Sir, what do you mean by expenditure is not capitalized? Sir, the meaning is it is actually a revenue expenditure, then you cannot take, then you can take ITC. But if it is a capital expenditure, don't treat it like revenue expenditure to avail ITC. Okay, so if it is actually a revenue expenditure, there might be some rainy season, the water leakage, etc., every year it is happening. There are some cracks to the walls because of heavy temperatures and heavy rainfalls or uncertain climatic conditions. Yearly we are doing some patchwork to the office buildings or factory buildings. That is nothing but generally a revenue expenditure to us, that you can take ITC. If it is a capital expenditure, don't take ITC. That is what the concept. So works contract services and construction on own account, both the cases, sir, you cannot take ITC. But if it is for providing similar category of output supply, or if it is related to plant and machinery, or if it is revenue expenditure, you can take ITC. Plant and machinery excludes land and building, civil structures, next telecom towers, and any pipelines laid outside the factory. Then these are excluded from the definition of plant and machinery, so you can happily not take ITC. That is what the point. Fine. So suppose if the pipelines are laid inside the factory, then it is plant and machinery, you can take ITC on that. So that is what the concept. Hope it is clear for you. Here there are examples, just go with them, pause the video and just go through the examples. We have already discussed the concept in detail. Next, this one, pause the video and go through the examples. If you are confident about the topic, no need. Now coming to the next one, sir, if at all you are purchasing something from composition dealer, you cannot take ITC. When you are buying something from composition dealer, he has not at all charged any tax from you. How can you take ITC of that? So you cannot take ITC. Sir, I am a non-resident taxable person, sir. For you, all the purchases are blocked. So under 17 subsection 5, for you, no ITC at all, except the goods imported by you. So local purchases, no ITC. Any services you have imported, no ITC. Only goods imported, you can enjoy ITC. That is what the benefit for non-resident taxable person. Next, sir, I am buying some goods and services for spending them under CSR initiative, sir. Using them for CSR initiative, sir. Sorry, use them for CSR initiative, and because you are doing the social service, ITC also you just ignore, no, forgo that ITC also, so that also not available. So you are purchasing something to fulfill CSR obligations, no ITC for you, right? And not only that, sir, I am buying some goods or services for personal consumption. For example, to attend an AGM, I am purchasing a suit or a blazer, or I got an appointment to meet Ambani ji, I am purchasing a watch, which are nothing but for your personal consumption, you cannot take ITC. So simple, goods or services procured for personal consumption, you cannot take ITC. Not only that, sir, any goods lost, stolen, destroyed, or written off, or disposed by way of gifts or free samples, you are giving certain things as gifts to people, or you are writing off certain things, or some goods are destroyed in the factory because of fire accident, etc., those things you cannot take ITC. That is what the concept, right? So here there is one more small point regarding, sir, if at all you are paying taxes because of section 74, 129, 130, that is because of tax evasion or detention of your goods or conveyances, in such cases that amount you cannot take as ITC. So that is what blocked credit all about. Okay, here there is a small clarification. So the clarification is with respect to the time expired goods we are returning to the manufacturer, sir. In that case, what should I do? See, for example, I am a pharma manufacturer. I am sending some medicines or drugs to you. After the expiry of time, sir, after the expiry of the date, sir, you are returning those goods to me because they are unsold. So time expired goods. In that cases, when you are returning to them, if at all it is possible to raise a credit note, I will raise a credit note on you. That means the manufacturer of the medicines will raise a credit note to the distributor. Simple, wait. Sorry. I am a manufacturer and you are my distributor. I have sent medicines to you. They have expired, time expired. Now you are returning to me. So when you are returning, what I will do? Sir, first I gave a tax invoice to you. Now what I will do? I will raise a credit note and reduce the liability. Simple. But for raising the credit note itself, the time limit is over. Then what should be done? Then you raise a tax invoice on me. Okay, you raise a tax invoice on me and charge GST from me and give it to the government. So simple. So this option is available for equally applicable this clarification to all the goods which are returned to the manufacturer because of time expiry. So what manufacturer can do, because the goods what he has sold has been returned by the customers, he will raise a credit note to the customer. If time is over, what the option is available to him, sir? Customers should raise, that is the distributor should raise invoice on the manufacturer, fresh invoice on the manufacturer, and the manufacturer should pay GST to the distributor. Distributor will go and pay it to the government. That is what the concept. Okay, so with this we are done with section 17 subsection 5, blocked credits. And one more thing with respect to here, sir, samples and free gifts. Sir, whatever I am buying for samples and free gifts, ITC not available. Sir, buy one get one free, sir. Buy one get one free. See, I am selling one 5-star and giving one 5-star free. On my purchases, should I reverse any ITC? Not required, because it is just like 10 rupees 5-star I am selling for 5 rupees. There is output tax. So ITC shall be available. No need to reverse or nothing. The discounts given, sir, buy more save more, we have seen discounts tax treatment already in value of supply chapter, and you are eligible to avail ITC, sir. Just because you are giving discount, it doesn't mean that you are not eligible for ITC. It doesn't mean that you should reverse proportionate ITC. No, nothing like that. Secondary discounts, the secondary discounts will not have any impact on the availability of ITC as well, because tax liability itself will not be reduced. There will be tax and there will be ITC also. No need to worry about. So simple samples and free gifts if you are giving, for that if you buy something, no ITC. Buy one get one free will not have any impact on your ITC. Discounts also will not have any impact on your ITC. So no reversal, nothing is required. So that is what the concept. Now if you see 17 subsection 1, 2 and 3, see nothing but it is, sir, when you are buying something for business purpose, okay, you can take ITC. But if you are buying that and using for non-business purpose, you cannot take ITC. Sir, I am buying it for business purpose, but to provide taxable outward supplies including zero rated supplies, then I can take ITC. That means, you know, zero rated supplies are nothing but exports and supplies made to special economic zones. For this purpose, if I am buying, I can take ITC. But for providing exempt supplies, if I am buying, I cannot take ITC. Please understand. For providing exempt supplies, if I am buying something, I cannot take ITC. That is what the concept. Okay. So I repeat, if you are buying something for business purpose to make taxable supplies including zero rated supplies, you can take ITC. Now you are buying something for providing exempt supplies, then you cannot take ITC. You are buying something for providing RCM supplies, you cannot take ITC. You are providing buying something for providing nil rated or wholly exempt supplies, then also you cannot take ITC. So the next one is 17 subsection 4. You know, 17 subsection 4 is nothing but for the banking companies, financial institutions and NBFCs, we are coming up with an option where, sir, they are providing taxable supplies and exempt supplies. They can go with 17 subsection 2 along with rule 42 and 43 and reverse the ITCs, all that we have calculated just now. So in that way they can proceed, or we want to make their life simple, easy. So in 17 subsection 4, what we are doing, we are coming up with an option to them. What is that option? Simple. Whatever you purchase, you take full ITC. We will not question whether it is used for taxable purpose or exempt purpose. Sir, is it true? Yes, but there is a small twist in the story. What is the twist in the story? Now, you should reverse 50% again at the end of the month. That means what? Flat 50% available. So simple, remember 17 subsection 4 if you are going with that. Sir, banking companies, financial institutions and NBFCs, for them, three things. Whatever blocked credits you purchase, no ITC, 0%. Other purchases you can take 50% ITC, and if at all you are buying from your own distinct persons, 100% ITC. So 0, 50, 100. That way you remember. That's all. That is what section 17 subsection 4. So if you want to follow this option, banking company, financial institutions and NBFCs, you can follow this option. Or if you want to go with 17 subsection 2, you can go with 17 subsection 2 as well. But option once exercised will be valid for the entire financial year. So for entire financial year, one option only available. So that is what this 17 subsection 4 all about. There's a small question for you. You can just go through this. So with this, we are done with 17 subsection 4. Now the very important one, you know how to set off the ITC balance. Yes, the very important one, to set off the output tax with the input tax. So what are the rules for setting off that ITC balance? As you know, sir, IGST balance, ITC, CGST, ITC balance, SGST, ITC balance, we have to use them for set off of our output tax liability. Now the first agenda, you know, everybody knows that the first agenda is IGST, ITC under 0, correct? That is what our first target. So for that, what we can do, sir, we have to use it. First of all, please understand these things. IGST, CGST, SGST, these like are your three pockets. So you have money in three pockets. So you can take money out of that and spend that money. But remember, you cannot transfer the money from one pocket to another pocket. Please understand that. I repeat, there are three pockets, sir, IGST, CGST and SGST. And from those three pockets, you can take money. You can take money only for spending, but not for transferring from one pocket to another pocket. That means the ITC from this account you cannot bring to this account, from this account you cannot bring it to this account. Please understand that. Sir, you can only use them. You can only use the balances in ITC, but you cannot transfer that from one ITC head to another ITC head. Please be very careful. Okay. So IGST ITC balance, sir, IGST ITC balance, first you should be using it for IGST payable. Okay, after using it for IGST payable, then what will happen, sir? If at all any balance is there, CGST and SGST in any order, in any proportion, you can use it. But here, sir, when they say any order, any proportion, you should be very careful. They may say that any order, any proportion, but in the question, in the exam, not ask you the question where net GST payable. The question they will ask is net minimum GST payable in cash. That means this step, whatever is there, is going to be very crucial. You should use this ITC balance effectively in such a way where your utilization is so effective, the cash outflow will be as less as possible. That is very important. Okay, so I repeat, IGST ITC balance, you should first make it 0. Till then you cannot touch these accounts. Till then you cannot touch these accounts. Hope I am clear. Okay, so first IGST ITC balance. If you see IGST payable, sir, IGST payable, IGST ITC balance you can use for IGST payable. Still we have balance, anything left out, use it for CGST or SGST in any order, in any proportion. The law says any order, any proportion, but you should use it effectively. Next, finally, still any balance is there, sir, in IGST ITC, then you will carry forward. Understand, in the answer, if you are listen carefully, this is one common mistake what you do. IGST ITC balance carry forward should not come. If at all it is coming, still your answer is right, provided there are two things. One is all the liability should have become 0. IGST ITC carry forward, if you get in the answer, that means all the liabilities became 0. And you have not touched or you have not utilized CGST, SGST balances. If these two conditions are satisfied, then only your answer is correct. Because without making this 0, you cannot use these accounts, correct? So please understand, if you get IGST, ITC carry forward, that means liabilities are fully over, and CGST, ITC balance, SGST, ITC balance, you have not placed this. Okay, that should be the case. Right, now coming to the point, sir, IGST ITC balance, we made it 0, imagine that way. Then what we can do, we can start using CGST ITC balance. CGST ITC balance you can use it for what? CGST ITC balance you can use it for CGST payable first. Till any balance is there, IGST payable. Till any balance is there, then carry forward. But you cannot use it for SGST payable. Same way, SGST ITC balance for SGST payable. Till any balance is there, IGST payable. And please understand, SGST ITC can be used for IGST payable only if CGST ITC credit is not available, balance is not available. But if you follow the sequence what I am doing, that is why when you are writing the answer, in the answer the format should be particular amount, and first you should take CGST, SGST, so that you will follow all these conditions. So IGST first to make it 0, IGST ITC first make it 0, then only come to CGST ITC. Once fully completing CGST ITC rules, then come to SGST, then automatically you will be following this condition. That means simple, if there is already CGST ITC balance to help IGST payable, then why you are going to help him like that? For SGST the question will come to picture. So SGST can help IGST payable only if CGST balance is over. Hope it is clear for you. Am I clear? Right, so that is what the point. Fine, so those are the rules here. So I'll just show you one problem how to do this. See, understand the approach, how to set off actually. Imagine these are our output tax and input tax. Clear? So what is our first target? What is our first target? So our first target is to make this IGST ITC balance 0. For making it 0, you should use it for IGST payable. But here IGST payable is just 54,000, but ITC is 79,000. So IGST payable becomes 0. IGST payable becomes 0. But ITC doesn't become 0. So 79,000 minus 54. So still it will be like 25,000. Your target is to make it 0. Now understand, you have 25,000 in hand and you can use it for CGST or SGST payable in any order, any proportion. But you should not do that. You should see who actually, see you have 25,000 amount in your hand. You should see who actually needs your help. You should see actually who needs your help. Sir, who needs your help? If you see CGST payable is 72,000, ITC is 75,000. That means it has 3,000 extra money. It doesn't need anybody's help. But if you see SGST 72,000 payable but 18,000 ITC. So that means it needs the help of 54,000. Still it has a shortfall of 54,000 if you understand. That means SGST is actually waiting for somebody to help. This way, if you do, you will never go wrong. Yes, IGST, ITC balance extra you have in your hand. Sir, that amount to whom you can give, to whom you can help, to whom you can set off. See whether CGST needs help or SGST needs help. If they need help, how much they need. So that way you should proceed. Sir, here 25,000 I have, but SGST needs 54,000 help. CGST doesn't need any help. So you should not use that amount for CGST payable. If you use this 25,000 for CGST payable, that means you are helping a person who actually doesn't need any help. So automatically you are increasing your cash liability. Are you understanding that point? So use that 25,000 for paying this 72,000. Fully you help. So here 47,000 payable will be still remaining. This became 0. Your first target achieved. Till this became 0, I did not touch these people. I did not use this CGST, SGST, ITC balances. So now IGST, ITC balance became 0. Now what I am doing, sir, I am using CGST, ITC for CGST payable. Sir, CGST payable 72,000 is there, that becomes 0. Now this CGST, ITC still 3,000 I have. Sir, that CGST 3,000 ITC, what you can do, you can use it for IGST payable, but IGST payable is already 0. So what you can do now, sir, you cannot use it for SGST payable, you know. So it is only it can be only carried forward. That is what the concept. Okay, it can only be carried forward, right? That is the concept. Fine. Now coming to SGST, sir, SGST ITC 18,000 is there, but liability 47,000. So if you reduce that, still 29,000 payable will be there. This became 0. So this will be the final answer if you see. Correct. So CGST carry forward 3,000, SGST payable 29,000. This will be the case. Hope it is clear for you, right? So that is what the point. Next, fine. One more small way, like I'll help you to understand the procedure actually, how to just develop the thought process. See, again, same story. IGST you have 1,300, ITC but payable 1,000. Payable becomes 0, but ITC still 300 is there. Your target is to make this 300 0, IGST, ITC 0, correct? Your target is to make that 0. Now, understand you have 300 rupees in your hand and you have two parties to help in front of you. Sir, one is CGST, the other is SGST. CGST needs how much help from you? CGST needs, see, output tax is 300, input tax is 200. It needs 100 rupees help. Same way, SGST also 300, payable is there, 200 ITC is there. It needs 100 rupees help. Are you understanding the point? So in such case, sir, what will happen? Both of them needs 100 rupees help and you have 300 rupees in your hand, correct? So when you have 300 rupees in hand and both of them needs 200 rupees help, what you should do? We should not go on fully help. CGST 300 you take it, SGST 300 you take it, any order, any proportion like that you should not do. Please understand, you have 300 in your hand and two of them standing in front of you, both of them asking 100 enough. Then first you should help both of them 100 minimum. That means you are effectively utilizing your money. Then extra 100 rupees is there, no, you give to anybody, it will not change the answer. So please understand, here the concept is not about giving them equally. 300 you have and giving them equally is not the concept. Please don't misunderstand that way. Sir, 300 I have, I'll give both of them 150. No, that is not the concept. See how much help both of them need. That much minimum, if you are able to help, that is more than sufficient. No sir, I only have less money, then there is no problem. However, the answer will be perfect. So please understand, develop this thought process, who needs how much help. So I felt like this fellow needs 100, this fellow needs 100. So for both of them we are helping 100. So still I will be having 100 rupees. Now this full 100 rupees you help to CGST or you help to SGST, it doesn't change the answer. So I made first in queue CGST standing, I paid to him. So IGST, ITC became 0. Now I can go with CGST with CGST. CGST 100 rupees carry forward, SGST both became 0. Clear? Guys, I repeat, when you have IGST, ITC in your hand, you should see which fellow needs actually your help. Accordingly, you help both of them and then settle the liabilities. Okay, that is how you should develop the thought process. Hope it is clear for you. Right? But first your agenda is making IGST ITC balance 0. Till then you cannot touch CGST and SGST accounts. Clear? So that is what the concept. You can try this example. So the next section is nothing but section 18, actually all about we are going to see with. So section 18, if you see section 18, mainly first what I'll do, I'll discuss section 18 subsection 1, 4 and 6 first, then we'll go with subsection 3. Subsection 2 incidentally along with subsection 1 I'll discuss. So these are first one set of sections, then we'll go with subsection 3 separately. Now coming to the point, sir, what is section 18? Section 18 is all about, section 18 is dealing with ITC in special circumstances. I'm talking that dealing with ITC. It is not availing ITC or reversal ITC. So both are there in section 18. You can avail ITC as well as you can reverse ITC. So first of all, section 18 subsection 1 we are going through. So section 18 subsection 1 is talking about availing ITC in special cases. What are the special cases where you can avail ITC as per section 18 subsection 1? So there are 4 cases. Clause A, B, C, D. A is all about you are becoming liable for registration and you are applying for registration within 30 days. Or you are taking voluntary registration, or you are coming from composition scheme to normal scheme, or your exempt supply becomes taxable supply. See, so long in past you did not take ITC because of various reasons. Either you are not registered, or you are under composition scheme, or making exempt supply. Now, sir, you are coming out of that and you are going to pay output tax. Because of that, what we are doing, whatever the stock you are having, inputs or capital goods, whatever you are bringing now into taxation net, we are going to give ITC. Here I repeat, clause A and B are one category, C and D are another category. What is that category, sir, if you ask me? Sir, in clause A and B, you are becoming liable for registration and immediately preceding date, closing stock. The date of becoming liable for registration is that immediately preceding day. Immediately preceding day. Yes, this is the immediately preceding date of the date of becoming liable for registration. On that date, whatever is the closing stock you're having, inputs in stock or inputs in work in progress, inputs in finished goods, on all these things they will give you ITC, but no ITC on capital goods. Please understand that the important thing is here, no ITC on capital goods. Clause A and B, where you are becoming liable for registering and where you are going for a voluntary registration, both the cases, here you will take ITC. You are eligible for ITC only on inputs, not on capital goods. So the only difference is, sir, here the effective date is like the date of becoming liable for registration, immediately preceding day, the closing stock. Voluntary registration, the date of grant of registration certificate, immediately preceding day of date of grant of registration certificate. So on that date, whatever the inputs are there with you, maybe in stock or work in progress or finished goods, on that we will give you ITC, that is clause A and A and B. So A and B one set over. Coming to clause C and D. Clause C and D, sir, so long you are under composition scheme, now you are coming under normal scheme. You are coming out of composition scheme. The date when you become ineligible for composition scheme, immediately preceding day, whatever the inputs lying in stock, work in progress, finished goods, on that you can take ITC, and also you can take ITC on capital goods. That is why I told you clause C and D are different. What is the difference in clause C and D with respect to A and B? In A and B, you are not registered, now going for registration. C and D, you are already registered, but composition scheme to normal scheme you are coming, or exempt supply is becoming taxable supply. Hope it is clear. And one more thing, and one more difference is, sir, in clause A and B you can take ITC only on inputs, A and B. In C and D you can take ITC on both inputs as well as capital goods. So that is what the difference, another difference. Now here the point is, sir, if at all it is inputs in clause A and B, you can take ITC easily, proportionately. For example, when you have purchased 10,000 kgs, you did not take ITC. But now when you are coming out of that, like you became liable for registration, took registration, or voluntarily you took registration, now you have 2,400 kg raw material pending with you, lying with you, maybe in stock or inputs or work in progress or finished goods, all that stuff. Now that 2,400 kgs proportionately you will take. But sir, what about capital goods? In clause C and D, you are also eligible for capital goods, correct? You can take ITC on capital goods. Sir, how much ITC you can take? Now, please understand, if you purchase today, when you are under normal scheme, registered under GST, using it for taxable supply, everything, you buy a capital goods, I will give 100% ITC. But why am I giving you that 100% ITC? Because I am believing that you will use that asset for 5 years at least. That is the standard assumption in GST. The useful life of the asset is 5 years. So I will give you 100% ITC, assuming that you are going to use it for 5 years. But the problem is, you have already used it in composition scheme, or you have already used it under exempt supply. In such cases, sir, how much ITC I should give you? I cannot give you 100% ITC. So what I will do is, sir, 100% GST paid, whatever you have paid, total GST paid minus, sir, I will reduce 5% of every quarter you have used in composition scheme, you have used in exam supply. Sir, that I will reduce and balance amount I will give you. That means what? Simple. Total GST paid minus 5% per quarter or part thereof. So every quarter or part thereof also will be treated as one full quarter. So that much we will reduce, and on balance amount we will give you as ITC. Now see, for example, here you have purchased the capital goods on December 28th and paid GST 1,80,000. But you are under composition scheme and you have opted composition scheme for financial year 18-19 and 19-20, and on 6th October you are coming out of, because your aggregate turnover has exceeded the threshold limit, you are coming out of composition scheme and coming into normal scheme. How much ITC you can take on capital goods means we should see how many quarters you have used. See, if you see, this is coming in quarter 3, financial year or calendar year, whatever you take, answer will not change. So don't worry about that. So quarter 3, so October to December quarter, this is happening in 18-19. So in 18-19 Q4 also you have used, and this event is happening in October to December quarter of 19-20 financial year. That means Q1 there, Q2 there, and Q3 there. So total 5 quarters you have used. 5 quarters you have used. Are you able to understand? Are you able to understand? You have used Q3 and Q4 in 18-19 and Q1, Q2, Q3 in 19-20 financial year. So I repeat, whether you take it as calendar year or financial year, answer will not change because the quarters are always same. Okay. So now 5 quarters you have used. So total GST paid 1,80,000 minus 5 quarters into 5%, that is 25%. If you remove, then that much amount you can take as ITC. That is what the answer. If you see 1,80,000 minus 25%, 1,35,000 will be the ITC. Are you able to understand? Okay, so that's all. That is how you calculate. Hope it is clear for you. So for this, there is a procedure in Rule 40, whatever has been prescribed. Sir, what you are doing when you are taking ITC on capital goods, that we have already discussed how we will calculate that. And sir, form GST ITC 01 within 30 days should be filed from the date of becoming eligible for ITC under 18 subsection 1, maybe under subsection 1 clause A, B, C, D, whatever it is. You should, for taking this ITC, you should file a form here, GST ITC 01, that's all, within 30 days of becoming eligible for ITC under this particular section. And in that you should give the details of inputs, capital goods, what and are you eligible. And suppose if at all that amount totally CGST, SGST, IUT, GST, IGST all put together, whatever you are claiming ITC, if it is exceeding 2 lakh rupees, then you should get it certified by the chartered accountant or cost accountant who are in practice. Okay, I repeat, entire ITC, eligible ITC. Okay, if at all it is exceeding 2 lakhs in form GST ITC 01, then you should go for the certification from practicing chartered accountant or cost accountant. That is what the concept. Okay, so now that is what Rule 40 says. So Rule 40 is this procedure for calculating all that stuff. So we have calculated. So I repeat, 18 subsection 1 is all about availing ITC in special cases, A and B one set, C and D another set. Liable for registration, voluntary registration, composition scheme to normal scheme, exempt supply becomes taxable supply. Here only inputs, here both inputs and capital goods. Here not registered, now registering. Here already registered, now paying tax. Okay, so that is the case. So here inputs, both all the 4 cases, inputs, you know, proportionately you can take ITC. Capital goods in the last 2 cases, clause C and D, how you will proceed? Rule 40. Rule 40 says total GST paid minus 5% per quarter or part thereof used. On that you can take ITC. So that is what we have seen. Now, sir, the interesting part is if you want to take ITC under 18 subsection 1, just now as we have discussed all the 4 cases, clause A, B, C, D, all this stuff. If you want to take ITC under those 4 clauses, any of those 4 clauses, the time limit to avail ITC is 1 year from the date of invoice. That means the 16 subsection 4 will give you actual time limit for availing ITC, that is for normal cases. But 18 subsection 2 will give you the time limit to avail ITC. If at all you are claiming ITC under 18 subsection 1, then you should definitely follow 18 subsection 2 time limit. That means in short, 18 subsection 1, if you want ITC on inputs and capital goods, you should have that purchase within 1 year. Only for within 1 year purchases of inputs or capital goods, you can take ITC. More than that, you cannot take ITC. Am I clear with that? If you see here in this example properly, I have made sure that the purchase date and this exit date from composition scheme are falling within 1 year if you check. Okay, because of this particular logic of 18 subsection 2. Okay, fine, that is there, and there is an example also, you can just go through that. And next, as I was talking, let us finish 18 subsection 4 and 6. 18 subsection 4 is nothing but simple, understand. 18 subsection 4 is nothing but, see, sir, when you are coming from composition to normal scheme, I am giving you ITC. When your exempt supply becomes taxable supply, I am giving you ITC. Then, suppose if reverse situation happens, you are coming from normal scheme to composition scheme, or you are going from taxable supply to exempt supply, then you should also reverse the ITC, correct? So this is exactly opposite scenario for 18 subsection 1. Exactly opposite scenario for 18 subsection 1. So here what you can do, sir, when you are going from normal scheme to composition scheme, or your exempt supply, taxable supply becomes exempt supply, sir, whatever the inputs and capital goods you are having, please reverse the ITC. Inputs proportionately will reverse the ITC. If it is capital goods, nothing but there you have taken ITC, availed ITC on quarterly basis. Here you have to reverse ITC on monthly basis. So simple, what we will do, sir, we will see how many months the capital goods is used. For example, Mr. Anil has purchased the capital goods and availed ITC 60,000. Now, the 60,000 I gave you ITC, assuming or believing that you will use this capital good for 60 months. Now, what happened after 3 years, 7 months, and 22 days? Sir, what has happened? Not told. Okay, let us assume he is coming out of composition scheme. He came out of composition scheme. So, Mr. Anil came out of composition scheme. Came out of composition scheme. So, we will take 3 years, 8 months as used. So 5 years, 3 years, 8 months are over, means that means still 1 year and 4 months. That means 16 months is still pending. So 60,000 into 16 divided by 60. That means 16,000 should be reversed. Proportionate ITC for the life of the asset. Life of the asset is 60 months. You see how many months still is left. For that you should reverse the ITC. Okay, for that you should file a form GST ITC 03. So that is what the concept. Hope you are clear with that. Okay, so with this we are done with 18 subsection 4 also. Simple, 18 subsection 4 is nothing but exactly opposite scenario for section 18 subsection 1 clauses and D. Hope it is clear. Okay, now 18 subsection 6, let us go with 18 subsection 6. What is 18 subsection 6? So 18 subsection 6 is nothing but if you have availed ITC on any capital goods, that capital goods is being sold, that capital goods is being supplied. In such cases, what will be the reversal of ITC? Simple, sir. The law says, you see, exactly ditto what we did in 18 subsection 1. Their total GST paid minus 5% per quarter or part thereof. There you are availing ITC for the first time. So total GST paid minus 5%. Here you have already availed ITC, you have to reverse the ITC. So total ITC availed earlier minus 5% per quarter or part thereof of the usage. That will be the calculation. You should be technically very much clear about the wordings what you are using. Please understand that. There total GST paid minus 5% per quarter. Here total ITC availed minus 5% per quarter or part thereof. Okay, and you should compare it with sale price into GST rate. Whichever is higher, that much you have to reverse. Please understand that. Okay, so now see, for example, Mr. Sanbir Kapoor has purchased a capital goods on 2nd June 2023. This is happening in Q1 23-24 financial year. Purchase price 100 lakhs, GST 18 lakhs. That means what? GST rate is 18%. Okay. Now, sir, he is selling this capital goods on auspicious day 14th Feb 2024. This is also falling in 23-24 financial year for 70 lakhs. Compute the reversal of ITC. So you tell me here, how many quarters we have used this? 4 quarters we have used. That means for that 4 quarters taking ITC is correct. Balance quarters you have to reverse, correct? So total ITC availed 18 lakhs minus 4 quarters into 5%, that is 20%. If you eliminate balance amount, that one you should compare with sale price 70 lakhs into GST rate 18%. Whichever is higher, that much you have to reverse. So 14 lakh 40,000 or 12 lakh 60,000, whichever is higher. Sir, which is higher? 14 lakh 40,000 is higher, so that much we have to reverse. Clear? Hope it is clear for you. So 18 subsection 6. So with this we are done with 18 subsection 6 as well. So 18 subsection 1, 4 and 6, if you see, we have discussed in them. In them, capital goods, we are, see, if 18 subsection 1 we are availing ITC, subsection 4 we are reversing ITC, subsection 6 also we are reversing ITC. So that is what the concept all about. Hope it is clear for you. Fine. So with this we are done with 18 subsection 6. Let us move on to 18 subsection 3. So if you see 18 subsection 3, 18 subsection 3 is nothing but when you are selling your business, the business may be transferred because of like merger, amalgamation, demerger, etc., whatever it is. But because there is transfer of business, what the transferor can do is the transferor can transfer his unutilized e-credit ledger balance to the transferee who is buying his business. Okay, so just like how do you transfer money from your bank account to another's bank account, here when I am selling my business to you, from my e-credit ledger, whatever unutilized balance is there, that I can transfer to you, provided there is a sale of business with a provision of transferring all the liabilities. Okay, so transferor from his e-credit ledger, he can transfer to his e-credit ledger balance the unutilized amount. And as I repeat, the condition is the sale of business should be the condition that transfer of all the liabilities. That is the condition which is very important. So now we are seeing the last step of this chapter, Rule 86A and 86B. Rule 86A, first of all, sir, commissioner or any authorized officer can restrict your ITC utilization, to be utilization actually. Why he can restrict your ITC utilization? Because if your ITC balance is being reflected of the because of the supplier filing the invoices. Your supplier has filed the invoices and that invoices are reflected in your 2B, and that supplier is a person who is not even existing. That means you took those suppliers have to fake registration and sold something to you, or they are not doing business from the declared place of business, or without receiving goods or services you have received that invoices in your 2B. In such cases, or the tax has not been paid by the supplier to the government, or the registered person who is availing ITC, that means the recipient itself is found non-existing or not conducting the business from the registered place. So either supplier is not existing or not doing business from his registered place of business, or he has just issued invoice without supplying goods to you, or supplier has not paid tax to the government, or you, the recipient, has not been found existing or not doing business from the registered place of business. In such cases, the proper officer can restrict your ITC utilization, or even if you are not in possession of tax invoice or valid documents regarding that purchases, then also he can restrict your ITC utilization. That is Rule 86A. Okay. So who has the authority? All the stuff that has been given, you can just take care of it. Now coming to Rule 86B. Rule 86B is nothing but, actually in simple words, Rule 86B says at least 1% of the liability, at least 1% of your gross GST liability to be paid in cash. That is what it says. Be paid in cash. That is what it says. Am I clear? 1% of the liability to be paid at least in cash is what Rule 86B all about. When this Rule 86B is applicable, this Rule 86B is applicable when your supplies in the month, please be very careful, supplies in the month exceeds 50 lakhs, but other than exempt supplies, other than zero rated supplies, sir, other than exempt supplies and zero rated supplies, sir, if it is exceeding greater than 50 lakhs, the taxable supplies in that month, then Rule 86B is applicable. So when this Rule 86B is applicable, what is your primary duty? Your primary duty is, sir, you should discharge at least your gross GST liability, at least 1% you should be discharging in cash only. That is what the point. Even though you have sufficient ITC balance, you cannot use full ITC balance. At least 1% you should pay in cash. Okay. So look at this example, sir. The total value of interstate supply of Kasi and Sons for the month of Feb is 100 lakhs, exceeding 50 lakhs. GST is 18% full IGST. So now IGST payable is 18 lakhs, but amount available in credit ledger is 20 lakhs. And sir, amount may be available in e-credit ledger 20 lakhs, but at least 1% of this liability you should discharge in cash. So 18 lakhs, what they should do, sir, 18,000 at least in cash, and 17 lakh 82,000 they can use ITC. Okay, so that is what the concept. But there are certain crazy things here, exception to that Rule 86B. What are the exceptions, ma? Like Rule 86B you need not follow. When Rule 86B you need not follow? Sir, you need not follow Rule 86B when, suppose if you are an individual, the sole proprietor, partnership from the partners, HUF the Karta, company the director, AOP BOI the members, trust, board of trustees, these people have paid their personal income tax liability more than 1 lakh, in each of the 2 last financial years for which due date is over. That means based on these people, sir, based on these people, members of board or trustees, all that stuff. Based on these people, personal income tax liability. In the last 2 financial years, these people has paid more than 1 lakh as their income tax liability. Then for this particular company or partnership firm or even individual, for them Rule 86B is not applicable. So this is one case where Rule 86B is not applicable. Another case, sir, you have a track record, you are a registered person, you have a track record of claiming GST refund from the department, and in the last preceding financial year, if you have claimed a GST refund more than 1 lakh, maybe because you are having unutilized decredit ledger balance because of zero rated supplies or inverted duty structure, whatever it is, then also for you Rule 86B is not applicable. Okay, so this is another case. Next, sir, if you see the cumulative liability till date, sir, I have already paid discharged more than 1% in cash, sir, then you need not follow Rule 86B. And finally, sir, if it is like government department or public sector undertaking, local authority or statutory body, for them also Rule 86B is not applicable. So you have understood, don't trouble the trouble here. Okay, if you trouble the trouble troubles you. I am not the trouble, I am the government. Okay, so that is what the point all about. So their Rule 86B is not applicable. Okay, so that is what the concept. With this we are done with Rule 86A and 86B also.
So we are going through the next clarification here regarding ITC on availability in respect of demo vehicles. See, generally, I am a car dealer. I am purchasing cars and selling cars. So when I am purchasing cars and selling cars, I have certain demo vehicles. So certain cars are kept as demo vehicle for like test drive, etc., etc., all that. Whether I can take ITC on that or not is the first question. See now, if I am an authorized dealer where I am selling cars, that the dealer is selling the cars. Dealer sells the cars. So he will provide trial runs, demonstrate the features of the vehicles, all that stuff. For that, he will purchase the vehicles and he will use certain vehicles as demo vehicles. So there, ITC is not blocked. That means here ITC available. ITC available. Now, no sir, I am not using the cars what I have purchased for giving demo or trial, etc., etc., all the stuff to the customers, but I am using it for transportation of my staff, employees, management, etc., sir. Then ITC is not available, so ITC is blocked. Here ITC is blocked. Okay, this is second situation. The final situation, the interesting part here is, sir, what you are doing, you are not an authorized dealer who will sell the cars directly to the customer. You are just acting as an intermediary or an agent where the manufacturer of the cars directly will sell the cars to the customers, but you are acting as an agent to sell the cars and you will take some commission for that. What you are doing for providing your services as an agent, sir, for providing your services as a agent to provide marketing services, vehicle test drive services, all that stuff, where you are not directly involved in vehicle purchase and sale. In such cases, you are, as I told you, manufacturer will directly issue invoice directly to the customers. Okay, now the point is, as an agent here I am purchasing some demo vehicles, correct, for test drives, and after certain time period is over I will sell them. Now I am buying the car for providing my services as an agent to promote the car, all the stuff. I am not engaged in further supply of said vehicles. Okay, who is selling the vehicles? Manufacturer is directly selling the vehicles to the customers. As I have already told you, invoice is directly raised by the manufacturer to the customer. In such cases, ITC is not available. Sorry. That means here, dealer is not actual seller of cars. Dealer is not actually the seller of cars. But he is an agent of manufacturer. Okay, so now, sir, whether this dealer is capitalizing the car, not capitalizing the car, all the stuff doesn't matter. He cannot take ITC because he is just providing service as an agent. He is not buying and selling the cars. Okay, so dealer is not buying the, better write down, dealer is not buying and selling the cars. So whether he's taking capitalizing the point or not, all that stuff doesn't matter here. So ITC on demo vehicles does not depend on the capitalization. As you know, the exception in 17 subsection 5 is if you are engaged in further supply of such conveyances only, you can take ITC. Here you are not engaged in further supply of such conveyances, you cannot take ITC. No sir, as we have discussed in the first case, sir, I am the dealer, I am the authorized dealer where I will sell the cars also to the customers directly. For that purpose, I am buying the cars and selling the cars, and for that purpose, I made certain vehicles as demo vehicles or test drive vehicles. All that I can take ITC happily because I am buying the cars and selling the cars. So there is the clarification with respect to that. Next one, if you see, that is related to the clarification with respect to time limit for availing ITC in case of RCM supplies, where RCM supplies are there and the recipient is required to raise tax invoice. The doubt is, what is the time limit to take ITC? Time limit to take ITC is section 16 subsection 4. But sir, in 16 subsection 4, they talk about the relevant financial year in which the invoice is raised. From that, you should see 30th November of the succeeding financial year or actual date of filing, annual date of the relevant financial year, correct? Now, in this case, which financial year I should take? Then the law says, see, when the recipient is required to raise tax invoice, the relevant financial year will be the financial year in which that invoice has been issued by the recipient under section 31 subsection 3 clause F. Simple. Just like supplier has to raise invoice, recipient has to raise invoice. And when recipient has to raise tax invoice, so what financial year he is raising, from that only you have to, the recipient has to calculate the time limit for availing ITC. So he has an obligation to raise tax invoice under section 31 time limit that he has to follow, and accordingly ITC should be taken. But sir, if there is any delay in issuance of such invoice because of there is late payment of tax also, then automatically the interest and penalty will come into picture under section 122. Okay, so simple. Recipient has to raise tax invoice and he has to pay GST under RCM. Then he should raise the tax invoice within section 31 time limit, and the time limit to take ITC on that is nothing but in which financial year he has raised invoice, succeeding financial year, 30th November or actual date of filing, annual date of the relevant financial year, whichever is earlier. So that is the point. That means what we are saying, you should raise invoice within section 31 time limit and take ITC accordingly. If you are not raising the tax invoice according to the time limits in section 31, then because of that late payment of tax happens, and because of that you should pay interest on the tax as well as you are subjected to penalty, right? So that is what the concept, right? That is what this clarification all about. The next clarification is with respect to ITC on ducts and manholes used while constructing this optical fiber network. So in that case, in the construction of optical fiber cables or networks, so they are using ducts and manholes. On that, whether we can take ITC or not, in that department has clarified. Generally, plant and machinery, 17 subsection 5, you know, the plant and machinery is an exception, you can take ITC on that. So ducts and manholes will be considered as plant and machinery. They are not being specifically excluded from the definition of plant and machinery. That means ducts and manholes are plant and machinery. Ducts and manholes. Ducts and manholes are plant and machinery. So you can happily take ITC. You can happily take ITC. That is the concept. Okay.
Now, one interesting clarification in ITC chapter actually. So, your friends or anybody would have struggled it to understand, or people would have explained it in a very like what complicated way. All that very simple one, just looks like little bit lengthy one. Apart from that, very easy one. Please understand that. What is this concept? Now, see, I'll explain this with my artistic skills here. Okay. The original equipment manufacturer. This is mainly with respect to cars. There was a doubt. See, for example, there is a factory which is manufacturing cars, and there are dealers, who are selling the cars or any goods you take. I repeat, this clarification is equally applicable for all the goods. Okay, what is this concept now? See, there is original equipment manufacturer factory. Near the factory, they are manufacturing all these things, and at the factory gate itself, what the dealer will do, dealer will go to the factory gate and take the delivery of the goods, whatever he is buying from the original equipment manufacturer. So the delivery is happening, the delivery of these goods is happening at the factory gate of the original equipment manufacturer. So dealer will go there and take the delivery. So what happens, sometimes dealer itself, he will go take his vehicles and take the goods, Or dealer will ask, sir, original equipment manufacturer, you only arrange some vehicle and send, we will take care of the cost, we will take care of the insurance, whatever it is, or if you are paying also, no problem, we will reimburse to you. Like that they will discuss. So here the point is, as per the contract, if you see, we call this as X works contracts. X works contract. Okay, so that means your X will not work here. So X works contracts now, sir, where the dealer will own the goods at the original equipment manufacturer's factory gate itself. So the goods are handed over to the transporter, and the OEM, the original equipment manufacturer, completes the delivery at the factory gate. At the factory gate itself, original equipment manufacturer is like, what? Okay, fine, my responsibility is over. Like that, he is leaving. Okay, so in that case, please understand that the original equipment manufacturer responsibility is ending at the factory gate. In that situation, dealer is getting these goods, right? Now the doubt is, sir, dealer is getting the entire risk at the factory gate only. Still, this goods has to travel from original equipment manufacturer factory gate to dealer's showroom or dealer's business premises, all these things. That means dealer has not yet taken physical delivery of the goods, sir. But you know, in section 16 subsection 2, conditions for availing ITC, there is a condition that you can avail ITC only if you actually physically received the goods. Then only you can take ITC, correct? So do you remember that only after the actual receipt of goods or services you can take ITC? Here, sir, I got the ownership, actual ownership at the factory gate, sir. But goods are still in transit, goods are still coming to my place, the vehicles are still coming to my place, or goods are coming to my place. They are still in transit, sir. I have not physically received them. Can I take ITC? Is the point of the dealer. Now the department has observed this situation closely and told, hey, here at the factory gate itself, you are getting the ownership, you are getting total risk. So we will give you ITC then and there itself. Don't worry. That means even though the goods are not physically received by the dealer, we are seeing he's getting the risk and ownership, everything at factory gate. So we will give ITC, no problem. If you ask me, then the condition in section 16 subsection 2 itself will lose the relevance, actually speaking. So in all the cases, then people start will making X works contract agreement, all these things. Okay, so the moment the goods are sold, the invoice is raised, payment is made, whatever it is, the ownership risk, everything is passed at factory gate. So even though the goods are not physically received by me at my premises, I can take ITC. Okay, so now dealers are enjoying. Yes, super sir, nice clarification, like that. And this clarification is equally applicable. This clarification, this same principle is equally applicable to other goods also. But point is, you should bring the goods for business purpose. If you are diverting it for non-business purpose, or in middle the goods are lost or stolen or destroyed, written off, disposed of, you know, section 17 subsection 5, block the credit is there, you cannot take ITC. That is basic thing, sir. Please understand, that is basic clarification. The important thing is, at the factory gate, if you are taking the ownership, straight away they are giving you the ITC. So in 16 subsection 2, sir, the registered person can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate. So it is considered as recipient has received the goods. Even though he has not actually received, it is considered that he has received the goods. Okay, that means received the goods in the sense, technically it need not come to your business premises physically. You are receiving it at a factory gate, it is as good as you have received. That is what they are clarifying. Okay, and this is equally applicable for other goods also. Such a wonderful clarification. Okay, for people like dealing with these type of goods, where they are buying the goods on X factory basis, or you can say X works contract. Okay, in that way, right? So a nice clarification.